$5 isn't a big bar to clear.
The problem with that is that you have to find fire in a bottle every couple of months if you're going to continue to do that.
And for, fire in a bottle for a mass audience is one thing. Finding the thing that really appeals to different niches. They're trying to do that with some kids programming, some young adult programming, some doc programming at launch, but it's hard to hit all those bases.
Which is why I think the low expectations is probably what they're going with and keeping it that way. This is value add for a lot of these people and just locking you into that ecosystem again. I think that's what you kind of pointed out at the top.
You talk about the ecosystem, and I wonder if ultimately where this all leads to is just an overall subscription model where you're bundling the hardware, you're bundling all of it into a monthly subscription. I think that's the place that Apple ultimately ends up.
It feels much more like Amazon's strategy to me. It works as a consumer with Amazon, and it works for what Apple's already doing, locking you with the photos and the music and everything that I've got going on, the multiple number of Apple devices I've got.
The hardware, though, is the key element of that. Every 2 years, the upgrade cycle, you don't have to worry about that. It's just going to be delivered to you based on you having the subscription.
Yeah, the one bundle to rule them all from Apple. We haven't seen it yet, but they're building it, and they want to have that surface revenue because of the 2-year cycles. They're tired of being reliant on having the iPhone being the only thing that they can really tout about.
Okay.
Great. Joan, thanks for coming in today, and Gene, it's good to see you.
Thank you. Coming up when we return, the jobs report isn't the only big data point we're going to get today. We're going to tell you about the other number the traders are going to be watching closely. Plus, we'll tell you why Pinterest shares are plummeting in early trading this morning. Take a look at that stock, off about 21%. We'll explain why when we return.
This CNBC program is...
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
It's another Friday morning, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
So it's not fair. Self-service checkouts. Let's forget the fact you're now working on a supermarket checkout. As soon as you put anything past the scanner and placed it down on that bagging area, you literally just nudge. Literally, a blueberry falls out the bag. And it's going, thanks for going assistance. You need assistance. And now you've got to wait there for hours because everyone else is moving things. It's just not fair.
If you want fair, you want fibre broadband from TalkTalk. Search TalkTalk Fibre. Fairer broadband for everyone.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status, damage charges may apply, no ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services, visit audi.co.uk.
Time now for the Executive Edge this morning, and we have some stocks to watch. Take a look at this, guys. Pinterest is plummeting today. Here's what's happening. Adjusted earnings beat forecasts, but revenue fell short, and costs and expenses more than doubled as Pinterest spent more on advertising to attract small and mid-sized businesses. Stock has now given up much of its gains since the April IPO, looking like it's off about 21.5 points right now.
Is the growth. It's interesting. Everyone wants growth beyond the U.S.
Right.
Pinterest had the growth international. That's the problem. The revenue generation is with the domestic users. So they added 22 million new users, 2 million only in the U.S. They need to add more users in the U.S. The problem is the international growth.
Because international growth, you can't make any money off of? They haven't figured out how to monetize?
There's less spend internationally in terms of advertising. They're getting paid more here in the U.S. The U.S. is bringing in more. I think it's 293 is the figure in terms of revenue, bringing in more here in the U.S. The focus needs to be here on domestically growing, and you're seeing the international. While growing, that's not contributing.
But do you think that's just a strategic error in terms of how they focused whatever they're doing, or do you think it's because they've run out of runway in the U.S.?
There is the theory that there is saturation in the U.S. So this is a stock that opened, I think, at $23.75 back in April. It was up 65% in the first 2 weeks.
Right.
Now it's falling back and actually below the IPO price. I think you'll find some support here. But again, the messaging is going to be important. How are you going to grow the domestic user base?
Take a look at this one, too. U.S. Steel reporting a net loss in the third quarter, but it wasn't quite as bad as analysts had expected. Revenue slightly higher than estimates, although sales dropped 18% from a year ago amid falling prices and falling demand for steel.
When we come back, we're going to get you ready for the trading day ahead. We'll be talking about the jobs report and other big data points that you need to prepare for. Check it out right now. Dow futures look like they're up by about 50 points after giving up about 140 points yesterday. S&P futures up by 6, the NASDAQ up by 21, a lot riding on that number that hits in just 2 hours' time.
That was wonderful. Bravo. I loved that. Oh, it was great. Well, it was pretty good. Well, it wasn't bad. Well, there were parts of it that weren't very good, though. It could have been a lot better. I didn't really like it. It was pretty terrible. It was bad. It was awful. It was terrible. Get him away. Hey, boo!
Executive Edge is...
It's another Friday morning. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
On a day such as this, we pray the car won't let us down. But winter sneers, and the battery bails, the bulbs blow, the wipers wipe out. Can anyone save you? Yes, you. Come to Halfords. We'll check your wiper blades, batteries, bulbs and windscreen. We'll even send you an MOT reminder, all completely free. And we're open late 7 days a week. See halfords.com for opening hours. Here in Chiswick. Ready for the cold snap? Ready for anything. Halfords, for life's journeys.
Subject to availability, exclusions apply.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. so you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus, month passes auto-renews unless cancelled. Terms apply.
The jobs report is out today, but it's not the only important piece of data we'll be getting. Traders are also going to be watching for the October ISM manufacturing data that hits at 10 a.m. Eastern time today. That is expected to show a contraction in activity for the third month in a row. The GM strike is expected to weigh on that number. GM strike's also expected to weigh on the jobs data, so we wonder what we'll think of these numbers when they come out, if people will try and discount them and say it doesn't matter because of the one-offs. Investors say goodbye to October after a huge week of earnings reports and the rate cut by the Fed. Now the focus turns to the jobs report, which is due out less than 2 hours from now. Joining us right now for a look at the broader markets is Scott Nations of Nation Shares. Of course, our guest host this morning is Joe Terranova of Virtus Investment Partners. Both of them are CNBC contributors. And Scott, since you're new to the table, we'll start with you on this. What do you expect for the jobs number? What's the market expecting? ISM, do we really get concerned if these numbers are weaker than anticipated, or does it get written off because of the GM strike?
Becky, I think you've lined it up perfectly. We're going to expect 90,000 new jobs for the headline number, but we're going to look through that data. We're going to look at the manufacturing. We expect to lose 50,000 jobs in manufacturing, and that's where people will really pay attention. Because if that's better than expected, that is, if we lose fewer manufacturing jobs, then that means that the GM strike is going to have less impact. If we gain 90 headline and we lose 50, then that's going to be as expected. I think people are going to discount it because of the strike. And as you pointed out, we're going to start looking at ISM data. We're going to take a look back at the Chinese PMI data, which was better than expected, even though that data is a little wonky. We're going to look at the China data, and we're going to say, you know what, maybe things internationally are not as bad as we feared.
Joe, what do you think?
So I think back in April when I visited with you, we talked about the third year of the presidential cycle. First year of President Trump's presidency, he enjoyed 19% higher. Last year, he had 6% down. I don't think there was much credence given to the fact that the third year of the presidential cycle is a very strong one. You go back over the last 70 years, the average annual return is up 16%. So
you think we're going to get big gains from here?
I think the question becomes, do we have a chase for performance? Because I think sentiment has been depressed and defensive in broad asset classes. You look at all the asset classes, total return S&P is up 23% for the year. Investment grade is up 12%. High yields up 14%. REITs, municipal bonds. I could go through the litany of assets. Everything is higher. And that comes in an environment, Andrew, where EPS is flat for the year. EPS is flat. So we've had multiple expansion.
But you think the chase to go higher continues? It has to. It has to because there's other people who think that the emperor's wearing no clothes.
Well, who's the emperor?
Well, I mean, the argument being that if you have no EPS growth, that this whole multiple expansion story is crazy.
We've had that for the entire year, but what's the difference in 2019 versus 2018? The difference is you have a friendly Fed versus a hostile Fed.
Well, we've been treading water, basically. If you go back a year, we saw the huge dip for Christmas Eve.
Year on year, you're still relatively flat.
For the year to date, we're up, but for year over year, you're basically treading water. But you think from here, it's like time to chase because we're treading water.
And the important level is interest rates. Joe, you may be right about the president being in his third year, but he's had very little to do with the fact that the 10-year has dropped from essentially 3.2%.
I didn't say he had anything to do with it.
And that, but that's the reason the stock market is higher. I mean, in a situation like that, with the 10-year yield dropping by 40%, about 150 basis points, and earnings being pretty good, not great,
but pretty good. Of course the stock market's going to do better. I don't think that the stock market has to do great with 10-year yield at 1.7% for us to do well. I mean, the fact is likely that the president has caused more problems for this market.
But the conversation, Scott, the conversation is not
anything else.
This conversation is not about the president. The conversation is about the market. It's about the liquidity that I think we're saying the same thing. It's about the liquidity that the Federal Reserve has injected. So Scott brings up interest rates. Yeah. In 2018, the average 10-year yield was 2.91. The average 10-year yield for 2019 is 2.19. Profit margins in 2019, for the first time in 4 years, profit margins are actually going to be lower for S&P 500 companies.
And Joe, I would add to that, if you're looking at next year, then you're in the fourth year of a presidential cycle, a president who wants to get reelected and is probably going to make sure that he's a little more cautious about doing things to put a stopping effect on the economy, like trade wars or things.
Going back historically, when you're in an election year, the first 3 to 6 months are challenging. Mm-hmm. And I would expect that for assets. I would expect assets to run into the natural headwinds of the uncertainty surrounding an election. But where we're positioned right now, sentiment continues to be incredibly defensive and just focusing on non-belief. I think it's one of the reasons why Apple is rising so dramatically.
Yeah, I'd buy into that.
It's been a good year, and I think I can't see much disrupting it.
Hey, Scott.
Becky, to your thesis.
Go ahead.
Well, to your thesis, he got elected by speaking to people who generally seem disaffected. And by being brash and outrageous. Doesn't he have to cement that base by continuing to be brash and outrageous rather than throttling it back and being to use a word that we don't use very much, presidential? I mean, isn't he going to go out there and, if nothing else, ramp it up?
I don't know. I don't know. My biggest take is I would assume that he wouldn't want to be too brash with the Chinese, I'm guessing, just because that's the type of thing that could hurt the economy, and that's something I would imagine he doesn't want to do heading into election year. Anyway, Scott, it's good to see you. Thank you for joining us today.
Thanks, Becky.
Okay, a lot more on Squawk this morning. Coming up, a new showdown between Wall Street and Washington. Robert Frank, what do you got going on for us?
Playing to billionaire Leon Cooperman accusing Senator Elizabeth Warren of vilifying the rich and treating him like an ungrateful child. We'll have the full 5-page letter and the latest back and forth, including Warren's response, coming up after the break.
It's another Friday morning, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
On a day such as this, we pray the car won't let us down. But winter sneers, and the battery bails, the bulbs blow, the wipers wipe out. Can anyone save you? Yes, you. Come to Halfords. We'll check your wiper blades, batteries, bulbs, and windscreen. We'll even send you an MOT reminder, all completely free. And we're open late 7 days a week. See halfords.com for opening hours. Here in Chiswick. Ready for the cold snap? Ready for anything. Halfords, for life's journeys.
Subject to availability, exclusions apply.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Welcome back to Squawk Box. The war of words is heating up, this time between Leon Cooperman, the investor Leon Cooperman, and Democratic Senator and presidential candidate Elizabeth Warren. The latest salvo, a critical letter from Cooperman to Warren, and then the senator tweeting back a response. Robert Frank joins us with all of the gossip in detail.
Yeah, this is getting juicy, Andrew. Billionaire investor Leon Cooperman sending an open letter to Senator Warren yesterday saying her, quote, soak the rich and vilification of the rich policies are misguided and divisive. It's the latest back and forth that started right here on Squawk Box.
If Elizabeth Warren is elected president, in my opinion, the market drops 25%. All the billionaires that I know are self-made and give back more to the system than they give on themselves.
Just to catch you up, Warren then tweeted saying, Leon, you were able to succeed because of the opportunities this country gave you. Why don't you pitch in a bit more? Cooperman writing now in this new letter that as the son of a plumber from the South Bronx, he earned his wealth through hard work and has pledged to give most of it to charity. Quote, for you to suggest that capitalism is a dirty word and that the wealthy as a group are ingrates who didn't earn their riches and now don't pull their weight socially indicates that you are either grossly uninformed or are knowingly warping the facts for narrow political gain. Ouch. Now, the 5-page letter goes on to say that while the tax system is already highly progressive, he'd be willing to pay more, though not through a wealth tax, more so through eliminating the step up in capital gains, doing away with carried interest, and also imposing a version of the Buffett rule that would be a surtax on those making more than $1 million a year. Warren tweeting back last night, Leon is wrong. I'm fighting for big changes like universal child care, investing in public schools. We can do all of that with a wealth tax. Leon can and should pitch in more so that every kid has the same opportunities he did to succeed.
What's so interesting to me about this is Leon sends the letter, and who leaks the letter? Who leaks the letter? Elizabeth Warren, because she thinks that this is actually good for her, and she uses it as a way to attack him. Yeah. I think that she's going after the wrong guy. I understand her views on the world and what she's trying to do, but I think that Leon Cooperman is not the target of her wrath, especially if you really, especially if you understand both his charitable side. But I was also going to say his views on progressive taxes are actually pretty liberal. Sure. You know, when he's talking about carried interest, when he's talking about getting rid of 1031 exchanges, when he's talking about getting rid of the step up at death, I mean, a lot of those things are some of the low-hanging fruit that we've talked about on this show. And, you know, given his background, given the fact, I mean, I got someone who sent me an email last night.
I agree with Lee 100%. However, I think that he's in a losing position when he hands this red meat to Elizabeth Warren, who's going to do nothing but use it for political gain.
Somebody sent me an email
last night.
but she missed an opportunity.
Are going to jump right all over it.
She had an opportunity to moderate her persona by responding somewhat favorably. Lee he invited her to engage in a conversation. She completely dismissed that on Twitter. That's the end of the conversation.
Is that her or is that Twitter, right? It's a little hard to unless she had said, I want to engage with you now.
You think they meet? You think they sit down?
No,
this is red.
I don't. But what I was going to say is what happens, talking about her base.
Yeah.
I get an email last night, I think from one of our viewers, but somebody who's actually on her base side, who says, he grew up on third base. What are you talking about? He went to Hunter College for free. No, this was the point. He went to Hunter College for free. This is the equivalent of third base. You can't go to Hunter College for free anymore. And I wrote it back and I said, I think you're missing the point. He actually gave the largest donation in the history of Hunter College. He gave them $25 million back in 2013. If you don't think he's paying his fair share, go find somebody else. I just think that Leanne Cooperman's the wrong target for this. I respect what he's trying to do, but I also think politically it's complicated because she's using it. Well, and the question is, to what effect? Clearly, there are people, by evidence of the email I was getting last night, from people in her base who are on her side in this instance.
Because it's so easy to caricature a guy like Lee Cooperman and not read what he actually said which was, I am willing to pay more. I believe, in fact, we do have a progressive system, and it should be more progressive, and here's how we should do it, and no one wants to talk about that side of it.
I think that when he said, I think he wants the system to pay more. He believes he's paying about 50% right now. Yeah, I don't think he personally wants to pay more, for whatever it's worth.
The letter was excellent. I think he believes in social progression. His point was, can we do it without the government bloating itself and controlling it? I think it's an excellent point.
Is caricature really how you say it?
Caricature?
Yeah.
Caricature.
That's what I meant to say.
Caricature. Syllable.
One of the greatest caricatures or characters on Squawk Box. Robert Frank, thank you. Still to come, a lot more. Our guest host at the top of the hour, Kara Swisher. She's turned many in Silicon Valley into caricatures. We're going to talk about them. We're going to talk about Twitter's new ad rules and her big interview with Edward Snowden when we return.
The countdown is on. The October jobs report hits the tape at 8:30 a.m. Eastern. We've got final predictions coming up, and we'll bring you instant reaction from Wall Street as soon as the data breaks. Squawk Box will be right back.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
It's another Friday morning. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End, and Edgware. Bleed for London. Join us today at blood.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
This is the sound of festive fun in London. You want to keep your savings for the things you love this Christmas, not a new boiler. We're with you. So our boilers come with 2 years interest-free credit to keep your savings for a Merry Christmas. You'll get a 5-year British Gas warranty, and now we can quote by video call evenings or weekends. Get a quote by the 30th of November and get £150 off a new boiler, or £450 off for existing home care customers. Search British Gas New Boiler. Conditions apply.
Welcome back to Squawk Box. We're now just about 2 hours away from the October jobs report, where the economy is expected to have added 85,000 jobs last month. Joining us right now to talk about what to expect ahead of those numbers, Michelle Girard, Chief U.S. Economist at NatWest Markets. Jim O'Sullivan's also with us, Chief U.S. Economist at High Frequency Economics. Our guest host, Virtus Investment Partner Joe Terranova, is here as well, and a CNBC contributor. How much should we take away, care about these numbers? I'm a little worried that this whole GM strike issue, depending on whether the numbers are good or bad, we're going to be discounting a lot of it.
Right. That's, it's a very asymmetric sort of analysis in the sense of if it prints weak, we'll be more inclined to assume it could be strike related. Of course, if it's stronger, I have a 105 number. Right. People at the very least have to add 50,000. That will be seen as a strong number, but we won't necessarily. I mean, it feels to me very asymmetric. We will dismiss risk.
So is it a bad number? We're going to say it should
it's GM,
it's GM, and if it's a good number,
we'll say, wow, that was even despite GM, the number is good. So it seems to me there isn't a high degree of chance that we're going to come out of this more worried about the economy, because if anything,
and just so we're clear, the Michelle Girard number to beat is 105?
105.
And what about your unemployment rate?
Unchanged at 3.5. But, we've had a lot of strength in the household survey of employment, where actually their numbers far outpacing payrolls. If that ends up reversing to move back in line with payrolls, maybe the unemployment rate could tick up.
Where do you go, Jim?
I've got lower at 60,000. So
60,000.
I think there's
there are a lot of... You have GM in there.
Absolutely.
Do you have GM?
I have GM, but I've assumed less secondary effects.
The official strike number, the actual number of people on strike was 46,000. But the question is how many kind of other effects there are, indirect effects, suppliers who are lost. But I think we should be able to largely isolate it in the details. So within manufacturing, if you look at manufacturing of motor vehicles and parts, not just motor vehicles, but motor vehicles and parts, and I think if you X that out, you'll have a reasonably clean X-strike number. So I think we will have information from this report. As always, these numbers jump around month to month, but I think we should be able to isolate most of the strike effect when we get the data.
So don't immediately fear if we see a very negative manufacturing component of this report, that it's manufacturing weakness expanding.
I mean, if the strike takes out 75,000 in total, then you're probably going to get minus 80 to 90,000 on manufacturing or something like that. But again, that's the thing to isolate, I think, is the motor vehicles and parts part of that.
So what's more important, the services component of this report, which has been incredibly strong, business, healthcare, social?
Well, I think in general, I mean, even manufacturing X, the motor vehicles part, will have some information there. And of course, we get the ISM number for manufacturing this morning as well. So there's no question that the manufacturing part of the economy has weakened significantly with global trade flows. I mean, the question is degree. Right. And obviously, if we get another drop in the manufacturing ISM number, that would be concerning. But yes, it's really outside of that the economy is still chugging along pretty well.
Go ahead.
Well, I was just going to say, but I think you make a really good point to that. It's even outside of manufacturing that we're most watchful of, because it's the spillover from the weakness in manufacturing more broadly that everybody is focused on. Arguably, that's why, as important as this morning's ISM manufacturing survey number is, the non-manufacturing data are being so closely watched out next week, because it is that degree of broadening out that is, I think, critical to deciding how concerned we are about the economy.
How much are either of you worried or thinking, or all three of you thinking about hourly wages? How big an issue is that going to be this time around?
Well, last time was unusually slow. It was a zero number month over month, although there were some quirky details there. But the year over year, it came back down to 2.9, which is pretty much where it was last year. All of last year averaged 3%, so it had gone up to 3.2, 3.3. I mean, I think that number should be a bit better again today. The net of it is...
But better sort of... Is better worse? Or, is better better? Better for society in some ways, better worse for the companies paying it, and then therefore investors?
It depends on your perspective on that, yes. I would say if you're for the equity market, in many ways, a low wage number is good. But for the economy broadly, in terms of the labor market bringing benefits to people, I guess it's better to see a somewhat stronger number without being too strong from the perspective of causing the Fed to worry too much about inflation.
Okay. Yeah, the numbers are very benign. So.
Michelle, thank you.
Thanks.
Jim, thank you. Appreciate it.
All right, still to come this morning, our guest host for the next hour is Kara Swisher. We will talk about today's top tech stories, including the latest on the streaming wars, also her interview with Edward Snowden. That's all coming up next.
I don't like the idea of my broker taking the opposite.
It's another Friday morning. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Now is the time for a little kindness. It's easy to feel overwhelmed these days, and everyone deserves a time out. Head to austria.info/kindness to tell us about someone who should win a holiday to Austria's beautiful ski slopes. With a pinch of luck, they'll be enjoying the snow, sun and serenity of a winter paradise in no time. Visit austria.info/kindness now.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
October employment report just 90 minutes away.
WeWork's ousted CEO under fire again, this time accused of pregnancy discrimination.
Plus, billionaire investor Mark Lazary and Aussie co-founder Carlos Watson are teaming up. Details on their big media announcement first on CNBC as the second hour of Squawk Box begins right now.
Good morning. Welcome back to Squawk Box right here on CNBC. I'm Andrew Ross working along with Becky Quick. Joe is off today. Joining us instead is Joe Terranova of Virtus Investment Partners. He's been hanging out with us all of the 6 o'clock hour and for the rest of the 2 hours. So
sure.
We'll have you here. We're also pleased to welcome CNBC contributor Kara Swisher is here in the house.
Hello.
For the whole hour. She's executive editor and co-founder, of course, of Recode, columnist for the New York Times, Silicon Valley, Whisperer, all of it.
Yes,
we're going to talk
whisper
about it
all day.
Whisper, not really loud whispering, actually. U.S. equity futures at this hour. Take a look at what's going on ahead of the jobs number. Of course, these numbers often and probably will change at about 8:30 this morning. Dow up about 52 points up. NASDAQ up about 23 points. We'll call it S&P 500 up about 6.5 points.
All All right, here's what's making headlines at this hour. We are less than 90 minutes away from that October jobs report. Economists are thinking that maybe 75,000 non-farm jobs were added for the month, with the unemployment rate edging higher to 3.6%. Of course, the GM strike could have an impact on some of those numbers. We'll try and sort through it and figure out exactly how big that impact was and what the numbers would have been without that strike. Later on this morning, we'll get more economic data that could provide significant ammunition to the markets. We've got the monthly ISM Manufacturing Index that is out at 10 a.m. Eastern Time. It is expected to rise from a month ago, but it has come in below that 50 mark that separates expansion from contraction. The last two reports have been weaker, and again, the GM strike could play a role in those numbers as well. Also, if you've been looking at what's been going on with ExxonMobil and Chevron, they're both going to be out with quarterly earnings before the opening bell. Both of those companies are expected to see both revenue and profits drop by double-digit percentages from a year ago, and that's largely because of the price of oil. And media and technology news, Apple TV Plus is now available, starting with a slate of original programming. So how does Apple's offering fit into the streaming landscape? Joining us right now with their take is Kara Swisher. She's executive editor and co-founder at Recode. Also, Ed Lee, who's corporate media reporter at the New York Times, and Joe Terranova of Virtus Investment is our other guest host. All three of them are CNBC contributors. And Kara, it's great to see you.
Good to see you.
Thanks for coming in.
No problem.
I have a million things I want to talk to you about.
All right.
We'll start with streaming just because this is the day for the Apple launch. I mean, it seems to me that this is a very different product than a lot of the other streaming services. Yeah. This is more akin to kind of Amazon. It's video stuff, and including that in Prime.
Well, it's you're trying to use the distribution network of Apple and the phones and the sort of the halo of Apple to put these sort of high-class shows available to people. And so we'll see if it works. It seems like a lot of the reviews is that it's very traditional television. I think some of the reviews are sort of, this looks like anything that would come from NBC or CBS or ABC. So we'll see how it does. But services are critically important to Apple, and I use that as a broad thing, services. And that includes the music service and all the other things they're trying to sell.
Money.
And they're trying to like daisy chain them one to the other, music to entertainment. They probably could go into healthcare or wellness or things like that. And so it sees what they're going to do.
I mean, I just feel like it's a different measuring stick. Like success in this one doesn't necessarily mean that you're making a ton of money off of it.
No, it's de minimis for Apple.
Right.
Phones are still the deal. It's sort of like Google and search and Amazon, and it doesn't make money from their entertainment stuff, but it's part of the halo effect of everything that they're trying to do.
I have a subscription question, actually, for both of you. Ed can weigh in on this too. We talked about it in the last hour, and I don't know the answer to this, but it has to do with subscriptions, which is, last year, Apple announced with great fanfare the News Plus service. Remember, they got all the big news organizations to join, with the exception of some notable ones.
You get this.
And I don't think I've heard about what kind of take-up there has been on that news service, and I don't remember a ton of promotion for it, and I'm just not sure where it lands, and if that's an example of subscription to any, and maybe that should not be considered the model. What does it mean?
So it's a great question. When it first launched, we reported that I think within the first week or so, they had gotten about 200,000 subscriptions to that News Plus service. So nearly off the bat. I think that was sort of an interesting number relative to sort of zero. Of course, it's a nice number to get to. But you're right. They haven't really released any new numbers since. I think
maybe it's killing it and we have no idea. I don't know.
And I don't think they're going to release numbers until they get to what they feel are good milestones to release, or they may never release those numbers if they don't hit those.
Oh, they'll release them if they're good. Come on. I mean, it's de minimis to their business. I think the music service is interesting. It's sort of developing.
You think that's the better model?
Absolutely.
Number two now.
I think number two, and actually very good. Like I have kids and they've moved to Apple Music. I don't know why
all
they
from Spotify.
They did, and they love Spotify. And Spotify, is a tremendous product. It's the same thing with Netflix. And I think the issue is, look, Netflix and Spotify in each sector are the better ones, the ones that really did break through with consumers. Now, the question is, can they take that from them?
They gave up Spotify, or they added
They gave up Spotify. It was interesting. And I'm not sure why. They just like it. They like the product. That's pretty much it.
It's a better interface, I think, and for a lot of people like it better. I think what's interesting, it's different about music versus television or news, is that the music stuff, it's commodity, right? You're getting more or less the same things on Spotify as you would on Apple Music. So it is as much, there's some differences, but it's essentially the same stuff. With the TV content, it's different, right? You're supposed to be getting different shows. You're supposed to be getting things that are exclusive either to Apple TV Plus or to Netflix. So in the case also of TV Plus, I know it's like, $5 a month? That's free if you have a new device owner. $5 is actually pretty expensive. It's a lot of money for what, a dozen shows at the start. It'll build up over time, but they're asking
Depends on how good those shows are too.
Depends on how those shows are too. But
obviously, the flagship is the morning show,
right?
And that looks so expensive. I don't know if you sort of.
It is expensive. $200 million expensive.
Yeah, and I think what's interesting. A lot of the ones that are getting better reviews are things that are smaller. There was one about Emily Dickinson that got good reviews. I think the issue is whether they can really do well. Like, look, HBO launched HBO Max. Like, now there's tons of these things, and they bought some shows. Friends, I think they've got South Park. Is that right?
They got South Park and Friends, and
so
there's some other originals.
It's all about the content, and the question is if you're going to move from Netflix to those. I llove Netflix, but the question is if they have better shows on Apple, will I move?
But is it an either or can there be multiple winners?
Well, I think not for most people. Yeah. For rich people, I guess. But it's expensive.
To your point on content, Disney launches on November 12th.
That's another one.
They have a distinctive advantage over everyone else because they have that legacy content, don't they?
They have a lot of good content, but HBO has great. We love HBO's content, like everybody loves Succession.
HBO has way more stuff in it than I thought
they
would
do. They do. I think HBO may be sort of the dark horse, although HBO has taken forever to get here. Like, it's been years.
Also, it's expensive. HBO is going to be the most. HBO Max is going to be the most expensive. It'll cost the same as HBO. It's $15.
Yeah.
Whereas Netflix, the standard price is $13.
So you tell me, are there people who historically have not subscribed to HBO who now will because of the additional
It's the same amount if you have cable, right? That's what you pay.
Same amount.
It's the same cost.
So that's the question. Yeah. To me, that's sort of a interesting theoretical question. If you didn't subscribe to HBO before, do you?
Well, I think, first of all, if you're an AT&T customer, I think you have a new interest in that because they're trying to bundle it into the things that already serve you. That'll be a big part of it. The fundamental question, though, is if you didn't already pay $15 a month for what you had on HBO, why would you pay it now because of all this other stuff? It's a marketing question, right? They've got 170 million customer relationships. They're going to start putting them into, the monthly bills when you get them. Hey, sign up for HBO Max. The first month is free. The first year is free, whatever it might be. And so I think that'll be, that could make the difference, whether fundamentally as a consumer you want it.
And then there's a separate brand issue, which is that HBO, I think, always had a sort of very upscale
which Apple is going for.
Sensibility as well. But HBO Max is trying to do something very different.
Right.
And so does that shift it in a good way? Does it then take away on the other end? I mean, there's sort of a...
Peter Kafka was recently talking about it. Like, Netflix has been around the track 20 times ahead of these people. And so the question is, it's really Netflix's to lose. And the question is, does Netflix get sold to someone or should it sell to someone to have better distribution and link it with distribution? I think that's really going to be the key, is where you get these things and how they market them.
I think there's something to that, but Netflix is $60 million in the U.S. already. It's already too expensive, but the thing is that their addressable market that they've said for the U.S. is somewhere between 60 and 90 million, right? So they're going to they're already hitting that mark. They're going to get to 70, 80 at some point. It'll take them a little longer now because of the new competition. So I think getting sold to someone else for better distribution could help if it were more for international stuff, or they could sort of, dominate with the other.
So can we expect to see Netflix at a lower price point?
I don't think they're going to be doing that.
So.
Their plan is to continue.
Not down, right?
Yeah, they raise prices about every 18 months. Yeah. They're not going to slow. Also, they're going to stop borrowing money, right? So they need to do more self-funding to
find ways to pay for all the content that they're spending, like $8 to $10 billion.
That's right.
How do you figure out how to play this? Is there anything you do, Joe?
Disney has been the way to play it. I will say that Disney has performed a little underwhelming. Since the announcement. We'll see what happens on November 12th, but the stock is basically in the same place it was when they made the announcement. Mm-hmm. To me, that would be the right play for the investment community.
Also, Bob Iger's been smart about telling the investor community, look, don't look for profits in the next few years because, it's a completely different benchmark now. The economics of streaming television are frankly not great.
Well, it's the same way you treat Netflix, right?
Streaming is completely
exactly. He said, you see, remember Netflix? Think of the same for us.
Where are you going to be in 2024? That's the way you have to think about streaming.
But again, it's content. It's literally who has the best content
and can they continue to turn
and the best interface. But they're all similar interfaces. And again, the question is, young people, how much do they want to have each of these individual subscriptions? I don't see it. I don't see that that's how people play this game. But we'll see if there can be packages or bundles or different things like that.
Ed, thank you for joining us. It's good to see you. Kara and Joe are going to stay with us.
Okay, coming up in just a moment this morning, stocks to watch. Plus, don't forget to subscribe to our podcast. You can get interviews, behind-the-scenes access, Maybe you can even hear the podcast. She's like the podcaster in chief, Kara Swisher. Maybe you'll hear a little bit of this conversation on today's podcast. If you miss any of the show, you can get it on your favorite podcast app. Subscribe to Squawk Pod. Stay tuned. You're watching Squawk right here on CNBC.
This CNBC.
It's another Friday morning. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living. Reinventing renting.
Just because you travel doesn't mean you can't keep your routine. The more obstacles travel puts between us and our well-being, the more we strive to work well. At Westin Hotels and Resorts, we're focused on empowering your well-being. With Westin meetings, you work and feel your best with nutritious snacks and nourishing smoothies that give you the energy you need to power through any meeting. Don't leave your well-being behind. We give you the choice to get up or to rise. Search Westin online to find out more. Westin, let's rise.
On a day such as this, we pray the car won't let us down. But winter sneers, and the battery bails, the bulbs blow, the wipers wipe out. Can anyone save you? Yes, you. Come to Halfords. We'll check your wiper blades, batteries, bulbs and windscreen. We'll even send you an MOT reminder, all completely free. And we're open late 7 days a week. See halfords.com for opening hours. Here in Chiswick. Ready for the cold snap? Ready for anything. Halfords, for life's journeys.
Subject to availability, exclusions apply.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Among the stocks to watch this morning, Newell Brands reported quarterly earnings of 73 cents per share. It's well above the 56-cent consensus estimate. Maker of brands like Papermate, Sharpie, Sunbeam, and Rubbermaid also said it was ending its divestiture program. Will keep 2 of its units it had previously intended to sell. You can look at that stock up about 3% on that news. Also, Alibaba just out with quarterly results. Chinese e-commerce giant beating estimates on both the top and the bottom lines. The results helped by a jump in mobile users, among other factors. We'll dig into some of those numbers and bring them to you in just a little bit. When we come back, Edward Snowden speaking to Kara Swisher. He risked everything and leaked NSA documents about global surveillance programs. Find out why he says that Facebook isn't much different when Squawk returns. We're back with that.
Time now for today's Aflac trivia question. Where did Honda roll out its first U.S.-built car? The answer when CNBC Squawk Box continues.
We're honored to have you on campus for the official visit.
It's another Friday morning. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
Just because you travel doesn't mean you can't keep your routine. The more obstacles travel puts between us and our well-being, the more we strive to eat well. At Westin Hotels and Resorts, we're focused on empowering your well-being. With Westin Fresh by the Juicery, you can stay revitalized with a fresh assortment of juices and smoothies. And start the day right. Don't leave your well-being behind. We give you the choice to get up or to rise. Search Westin online to find out more. Westin, let's rise.
We've been together 3 years. We both love travel, and luckily we've got the same taste in music. Next year, we're planning a big road trip, and my wife's coming too. It'll be nice. The three of us don't do enough together. We know how much your Mini means to you. That's why Mini Service offers an array of convenient options and allows you to book online anytime at mini.co.uk. Because we love your Mini almost as much as you do. Search Mini Service. Who's in? T's and C's apply, subject to availability, participating retailers only.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
Now the answer to today's Aflac trivia question. Where did Honda roll out its first U.S.-built car? The answer, Marysville, Ohio.
Welcome back to Squawk Box. Our guest host, Kara Swisher, interviewed former NSA whistleblower Edward Snowden this week for her podcast, Recode Decode. And he had some very interesting things to say about similarities he sees between the NSA and big tech companies.
Facebook's internal purpose, whether they state it publicly or not, is to compile perfect records of private lives to the maximum extent of their capability, and then exploit that for their own corporate enrichment, and damn the consequences. This is actually precisely the same as what the NSA does.
Recode's Kara Swisher is our guest host. Were you surprised that he was taking on Facebook with the same gusto as the NSA?
No, I think he's sort of, I'd say, religious about what happens to information. I think it's the same things that prompted him to do what he's done, which is that he was in love with the internet at an early age when it was all about community and it was all about people finding each other, and a very different one. And when it changed into this mass surveillance vehicle, I think he got personally offended almost. It was a fascinating interview because he's so controversial. Is he a traitor? Is he an activist? Is he a leaker? And now is he a whistleblower, given current?
Where does he land? I don't know if you spoke to him about on encryption.
He's for it. He's
for it all the way.
100%.
Despite the other side of encryption,
yes,
which is potential for terrorists to be able to communicate with each other. Potential for.
Doesn't surprise me.
No.
No.
He thinks the incursions into the privacy of individuals has gotten to, and it started with the government and these programs that they had that he revealed, and it moved to Facebook and Google and the whole internet. And so he feels that a lot of people aren't getting the transparency they deserve of what's being done with their data, and that as we add on more and more things like the Nest or whatever, it becomes worse and worse, and we became a full surveillance state.
Kara, where do you kind of come down on that question you raised? Is he a traitor? Is he an activist? I mean,
in 20 years?
Well, just based on your own views, you've kind of watched the internet and the dark tones that it's taken on, and you've lost some of your own love for how this
absolutely.
Kind of works.
I feel I didn't like turn over classified documents.
No. And that's the thing. Like, he did things because he thought one way, but then he took it to a whole new level.
He absolutely did. I think that he makes a very good argument of why he did it in this book, which is quite good. It's quite a beautifully written book, actually. I think that, most of the intelligence is that he is not a Russian asset. I think is he a Russian asset? Is he a Chinese asset? Is he being used? You sort of have to sort of game it out. Why would he be that? Why would he go there? Why did he give it to journalists versus releasing it like WikiLeaks? There's all kinds of interesting twists and turns here. And I think the question is, if he isn't a Russian asset and he wasn't able to release this information of the government violating laws, what do you do? And, today, given the whistleblower in the Ukraine incident, it's what do you do? There are no channels for him.
You think he got played, though?
Played by
the Chinese, by the Russians, after it all came out, whether he was an asset for them or not. But
played how, though? That's what I'd like to, how played?
He lives right now, makes most of his money off of speaking on doing
That's right, he does that,
right. He lives in Russia, he's there.
He doesn't want to live in Russia. He wants to come back here and he wants to have a trial, but the problem is he's instantly convicted, and so he can't explain why he did it. He just goes to jail, and that's it, under the current Espionage Act. And so he wants to come back here. He'd like to live in Europe. He's been trying to live other places, but he can't go anywhere. He doesn't have a passport. And so his argument is that he was on his way to Ecuador, which he was. He got stuck in Russia because the U.S. pulled his passport, and he doesn't want to be there. That's not where he wants to be. And in fact, I think he's on a very short-term visa there, even 6 years later.
I want to ask you just a couple quick Facebook questions, since we're in that universe right now, on the political ad front, and what you think is going to happen there, because there are all sorts of new reports. I don't know if they're right or wrong, saying that maybe Mark Zuckerberg might change his mind about this.
He's going to change his mind.
You think he will change his mind?
100%.
Soon? Because this is a premonition?
Enough.
This is a premonition?
No, because he's done it before. Like, he and I did an interview, which he said, absolutely, Alex Jones gets to stay on the platform, so do neo-Nazis, we're not going to kick him off. We're going to stick to our First Amendment guns, and then totally kick them off later. I think,
he left the door open. He left the door open on the earnings call where he said, I'm still thinking about it.
I'm thinking about it. And, that speech he gave at Georgetown was disastrous. I was there.
Your take on that, I thought, was brilliant.
Thank you. It was disastrous. It was like this sort of China or free speech. And I'm like, there's so much in between. Like, I happen to have gone to Georgetown. I'm like, I think at college I studied that there's a very big delta between full free speech and China. So, but what was good was Jack had a very nuanced
Jack Dorsey at Twitter, who had a very different opinion, obviously, of how to approach paid advertising, which is not to do it.
Not to do it, because they throw in the towel and they can't fix the situation. Right. And Mark is sticking to this, let's let politicians lie. And I think most Americans get that one. Like, it's very simple.
Here's the question.
And he didn't let students ask questions.
That was astonishing.
Do you think that he this is Mark now, is motivated by a philosophical view on this topic? Is it a business view? No, it's not a dollars view. We know that. I think that's true, but it's not a dollars. It's not an ad dollars money.
It's $600 million.
To me, the financial issue is much more around actually, if you think that there's a political contingent that would be upset if you couldn't advertise on the platform, what it does to you from a policy perspective, in which case could cost you a lot of money. If you think he's motivated by that, what do you think goes on in his head around this?
I think he's way over his skis intellectually here, and he doesn't really have a good argument. And if you sat at that speech, you'd be like, this is so nuanced and hard. He could at least acknowledge that people don't like politicians to lie. And it's very hard. Sheryl Sandberg did a video trying to sell this, and I think most people, if you go out in the street right now, would you like to be able to have politicians lie in ads? They'd be like, no. And he wants everyone to sort it out. Joe
Kern's not here today, but I would say that he says you're allowed to. He says,
Joe's take is that he's a big boy.
He thinks that everyone's a big boy and they're supposed to listen.
Everyone isn't a big boy.
I disagree with this
and
particular view.
Not in the context of the internet, because the internet is amplified, it's weaponized, it just goes everywhere compared to television or newspapers or anywhere else. It's a very different medium. And so what Mark was doing, even in the earnings speech, is he was conflating paid speech with free speech. It's not the same thing. It's what Jack said. It's micro-targeted.
I appreciate what he's saying. What I'm curious about is, since I think you know him and you know the Valley so well, what do you think the thought process is that gets him there?
The pressure of how bad this looks. It's a bad look for the company, although it doesn't affect earnings at all. It doesn't affect people. You can talk about this. No. It killed it. This.
Where do the advertisers have to go?
That's right.
Nowhere.
And then hop, skip, and a jump to Macon Delrahim at the Justice Department. I mean, where do advertisers have to go? Google or Facebook?
Well,
that's not a good look either.
Because they are selling you more privacy, because they're able to drill down and get more. I think for Twitter, Jack gave a good reason for this, but for them it wasn't such a big deal anyway, because they were not as good at aggregating and saying, here are the people that are giving.
But it's a bigger question. What he did, whether it's big or not, Twitter is where the political and media class live, and so they love this. This kind of thing. And I think the issue is he's taken the high ground the way Tim Cook did around privacy. In an interview I did with Tim, like he took the high ground, and now Mark is on the low ground, and that's not a good place to be.
Kara, thank you. You're going to be sticking around. You can hear more of Kara's interview with Edward Snowden on her podcast, Recode Decode. Get it on Apple and everywhere else.
When we return, cue the countdown clock, everybody. We are getting ready for the big jobs report. We had hit that number live at 8:30 Eastern Time. We've got a panel of all-stars standing by with analysis for that. But first, our economic newsmaker of the hour, former CEA chair Glenn Hubbard, will join us.
To ask themselves, what is the right? It's another Friday morning, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways, with flights and 7 nights hotel from just £349 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
What if your email let you see a project's entire history and not just the messages sent to you? What if everyone else on your team could see it as well? Then it wouldn't be email at all. Move communication from inboxes to channels in Slack. Instead of seeing a partial set of messages about a project, everyone in Slack sees exactly the same thing and moves work forward faster. Slack. Choose a better way to work. Get started at slack.com.
Breathe in and out. Every day, you take 20,000 breaths, potentially exposing yourself to harmful particles of pollution. According to the Royal College of Physicians, air pollution contributes to around 1 in 20 deaths in the UK. But at E.ON, we believe it's time to do something about it. We've committed to installing ultra-fast electric vehicle charge points. We offer solar panels and batteries that collect and store energy. And we've helped a citywide transport operator introduce a large fleet of emission-free electric buses. It's time to clear the air. Search E.ON Clean Air.
Welcome back to Squawk. It is Jobs Friday. Poll forecasters expecting an increase of 75,000 non-farm jobs and an increase of in the unemployment rate to 3.6%. Joining us now for what he is watching is the professor, Steve Leisman. Mr. Leisman, sir.
Hey, Andrew, good morning. Look, we're expecting a slowdown. Everybody kind of knows that. The bigger question is why, and I want to get beyond the kind of specifics that's going to happen. We got the GM strike. We know that's going to take off 40 to 50. We're going to add back some workers through the census hiring that'll go away in months to come. But the broader question, do we have weaker demand going out there in the economy, or is it a lack of workers? Let's go through and take a look and see what's happening here. First of all, this is the 3-month average of payroll growth. It's a better way to look at it. It gets rid of all the noise that's out there. You can see we were north of 240,000 when you go back to January, the beginning of this year, and now we've come all the way down to 157,000 now, and it's probably trending lower, more towards what economists think is a sustainable rate of employment growth. And now let's look at some of the reasons. There are a couple reasons why this could be good and why it could be bad. If it's a lack of workers, I call that the good reason. You would have more capital spending by business to make up for the lack of labor, higher wages and productivity as a result of this. But if it's weaker demand out there in the economy, you wouldn't have the CapEx boom. You would have stagnant wages, and you would also have layoffs. Fact is, I don't think it's one or the other. I think in different industries you have a combination. One of the things we'll be looking for very closely, 10 o'clock today, we're going to get that ISM manufacturing index. It's supposed to tick up to 49, though I'm a little bit concerned about it because of the GM strike. But that's a key thing that's triggering the market as to how much economic weakness there is out there in the economy, Andrew.
Hey, very quickly, Steve, let's break out the ExxonMobil numbers.
Okay.
Right now, it looks like they came in with earnings of 75 cents a share versus the 67 cents the street had been anticipating. Revenue just a little higher than expected, too, at $65 billion versus the $64.7 billion the street was expecting. Darren Woods, who's the chairman and CEO, making some comments on this, just saying that they're making what he calls excellent progress on their long-term growth strategy. Joe, you're looking through the numbers on this. CapEx, I guess, is one important number to check out. Capital expenditures for the third quarter, $7.72 billion. What jumps out at you?
What jumps out is that we have had negative revisions throughout 2019. We have priced in horrible earnings for Exxon and for Chevron because of lower oil prices, and for Chevron as well. Now, ExxonMobil is getting ahead of that. So what they're doing is at the end of the quarter, they're filing an 8K with the SEC for the transparency. They've already guided and said there would be a $400 million to $700 million hit to earnings because of lower oil pricing. So they're providing the transparency. They're getting ahead of it. I like the free cash flow number. These numbers are not as bad as feared. You're going to have to wait, though, on ExxonMobil because it's a longer-term story.
Right now, it looks like that stock's unchanged. I do not have a clear, it looks like a bid of 67.31, an ask of 67.86 after the stock closed right around there at 67.57. Let's get back to the jobs report, what we can anticipate. Glenn Hubbard is joining us right now. He's former CEA chairman, who is now Columbia Business School Dean Emeritus. Also, our guest host, Joe Terranova's here. Kara Swisher's here. Steve Leisman's at the table. We got a packed table this morning. Glenn, what do you think, what Steve was talking about, just this idea that we're not entirely sure how we're going to read these numbers? How would you
I think that's right. I would expect something like about 85,000, 90,000 jobs, given the effects that Steve rightly mentioned. The real issue is investment. The economy is growing roughly at its potential, but it's being carried by the consumer. The investment numbers are disappointing. And to Steve's story, if you expected the good news story, you would expect to see a little more investment. I expect the reason we're not has to do with the policy uncertainty in Washington, particularly surrounding trade. Very harmful.
Very harmful in terms of business confidence. And
business confidence, what CEOs are willing to take risks on. There's not a business leader I speak to that doesn't articulate that as number 1, 2, and 3.
You can't make long-term plans when you're not sure day by day, even hour by hour, what we might be doing with these policies with China.
Exactly. So I think if you want business investment to recover, we need a little bit more policy stability.
What do you think we'll get next year? And I guess part of my hypothesis is the president's heading into an election year. He may be a little more loath to damage the economy when he's hoping to win some of these states, like a Michigan, like an Indiana, like a Pennsylvania, where there are very high concerns around jobs, as you just saw with the strike, too.
Well, I do think we'll see some kind of mini China deal. I think it's a stretch to imagine we're going to solve all of our problems with China next year. I think that's far-fetched, whoever's president. And I do think the economy is still in pretty good shape. Manufacturing, obviously not, but we're bulk a service economy. So I think there's a good chance for a decent 2020. Obviously, the wild cards remain geopolitical and political.
Hey, Steve, I was trying to look at Exxon numbers at the same time, but did you put CapEx on your list of good things that you were kind of putting together?
Well, what would happen is if you have a worker shortage, and I've just been puzzling this through, not a lot of people have been doing this big think on this, and I don't have a lot of material on this idea. If it's a good reason for the slowdown in jobs, okay, I still have demand out there as a business. I need to meet that demand. So one thing I might do is I might buy more machines. I might buy, for example, the order things at McDonald's. That's a way to get around a worker shortage. And I think what we see is, one of the great things about the U.S. economy is how dynamic it is. And so you could have industries that are slumping, for example, oil and gas. At the same time, you have other industries that are pushing ahead. So I think the story of the good or the bad reasons is alternatingly true in different industries that are out there.
We had Dan Roth from LinkedIn here yesterday, and he was talking about their workforce thing that's out there. The most amazing thing that he kind of talked about was transportation. Hiring is up there, but a lot of the jobs are white-collar jobs, software producers, and software engineers who are looking at these things, not necessarily drivers.
Kara Swisher's done more than anybody on this economic group, but how the economy is changing. We don't even know how to classify retail jobs anymore.
Right.
You were a retail clerk, and now you work in a transportation place. That's where your job might show up.
And the bigger trends that are coming, computer vision, for example, within retail, that's going to be an enormous thing. I just did a podcast with Alexis Ohanian, who started Reddit, but he's doing a lot of other investing. The idea of retail business is utterly changing, where you walk out of a store and it just clicks what you bought is going to change things. The idea of automation everywhere, AI, quantum computing. What Google just announced is a massively important moment in computing.
About quantum?
Quantum computing. It will change jobs.
I've read that 100 times and tried to understand.
I don't understand. I will try to explain it. We're going to have an interview with Sundar Pichai. I will try to. But we don't know. Like, what could you say? What did the internet do? Like, could I explain what the internet did? What is the internet?
Right.
Like, it's going to change the way we do jobs.
The bigger story, though, is that we're headed to a world of more robots, not fewer robots.
Yes,
on a per capita basis, we trail Japan like by an order of magnitude of 10 or 100. What are you telling
quantum computing will help there too, because a lot of it is the speed with which businesses can use AI for robots, for ordinary business processes. So that's going to be a sea change. I think for most business school students, they're going to be prepared for a world in which that's more important. The real issue is people more on the rank and file of business. What are they going to be doing? A lot of them are going to have to upskill in their jobs.
Well, let me just say one thing. Anything that can be digitized will be digitized. And that's a larger, bigger idea. And there's so many things. And with the McDonald's...
How about that economics report you just heard? Is that digitizable?
All of it is. I
really?
just think people don't realize.
But not as intuition. And that's what AI can do is empower people who have a lot of great intuition.
Well, yes, you can.
I'll say that's Steve.
Yeah.
Baseball umpires.
Yeah.
There we go.
Well, I think you want them, right? I'm not a sports ball person, so I don't know.
Becky, let me just throw it back at you. What did ExxonMobil say about CapEx? I heard you say they mentioned it.
It just said hang on, let me go back to the wires. It said 7.72.
Is that up or down?
What they spent. I don't know.
Because one of the new things out there, along with this high-tech stuff we're talking about, is the seriously low-tech stuff, which is the oil and gas business has a profoundly different effect on the U.S. economy than it ever did. You do not create oil production the size of Saudi Arabia, put it inside the U.S. and say it doesn't have an effect. It is unclear to many economists now, are higher oil prices bad or are they good for the U.S. economy? And you can look at the slump in 2015 and 16 in the U.S. economy, and that was directly tied to the lower oil prices. And a lot of the CapEx boom we had that came out of 2018, 2017 was because of higher oil prices.
The problem is higher oil prices are a tax on every single
that's right.
Yes,
in the near term, it's an investment factor. You don't want high oil prices.
But Becky, if you've been on a plane, you've been to these places where there's huge income as a result of higher oil.
It's a regressive tax, too.
Steve, it's true. Thank you. By the way, quantum computing is going to end the encryption debate.
Yes,
because there won't be any
encryption.
Exactly. And there'll just maybe higher order mathematics.
Yeah.
Coming up when we return, did some investors know about a big luxury deal before it went public? You're looking at a little blue box, and you know where this is going. We'll tell you all about it. CNBC special report in a moment. Plus, don't forget to subscribe to the podcast. You can get interviews and behind-the-scenes access. You can look for it on Apple Podcasts or your favorite podcast app. We're back in a moment.
Let's do that.
Johnson & Johnson. It's another Friday morning. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
When it comes to music, I've heard it all. Pink Floyd, Sean Paul, Slipknot. But in the Which Test Lab, hearing isn't enough. When we test headphones, we really listen. Not just to the music, but to the stuff that gets in the way. The traffic, the chatter, all that. Mind the gap. We simulate the loudest commute to find you the headphones that cancel out the noise. So you know we're only recommending the best.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Month, LVMH offered to buy Tiffany, but did investors know about talks between the luxury companies before they became public? Robert Frank has been investigating. Robert, it's good to see you.
Good morning, Becky. Sources telling CNBC that top executive from LVMH met with Tiffany CEO Alessandro Bolliolo in New York on October 15th. That was 11 days before the talks became public. Sources say the meeting over lunch was friendly. LVMH presented its offer. Bolliolo said the board would begin the process of evaluating the bid. The stock that day closed at $91, so LVMH's offer of $120 a share represented a 31% premium. But news of the talks didn't break for another 11 days on October 26th. But in the intervening time period, the stock jumped nearly 10%, which of course reduced the perceived premium to investors. Tiffany shareholders still expecting LVMH to raise that bid. Tiffany said the companies, quote, are not in discussions, but the board is carefully reviewing the proposal and is successfully executing its business plan. No comment from LVMH on whether they will raise their bid. Sources close to LVMH saying Tiffany needs substantial capital and time to turn around its business, which LVMH is better equipped to fund. Investors already dialing down their hopes for a competing bid or maybe a higher offer. Tiffany closing at about $125 yesterday after hitting that top of $130 on Monday. So it's a question of who needs it more. LVMH stock up over 40% over the past year. Tiffany stock basically flat over 4 or 5 years.
But the idea that it was up $10 over that course of
meaning
time.
that kind of it had that spike and it got into the market and there was heavy volume in options trading, so it kind of implies that some people had a sense that something was happening. There's no other.
We should see an enforcement action in the next couple.
I don't know about that. It just means that the original premium was bigger than people suspected as. And again, LVMH.
But then if you look at the price a year ago, or actually going back to July of last
year, they had one great quarter. They had a great quarter with same-store sales growth. Now it's declining.
Okay. Robert Frank, thank
you guys.
Good to see you. Coming up when we return, billionaire investor Mark Lazary is joining us along with Ozzy co-founder Carlos Watson. They're teaming up this morning. They've got a big media announcement, plus a lot more to talk with them about the media landscape and so much more. Squawk returns with that in just a moment.
This CNBC program is sponsored by IBM.
It's another Friday morning. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St Lucia with British Airways. With flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Will cancer affect my sex life?
Your sex drive can disappear. The side effects may stop you.
Sex life can easily stay.
When you search one question about cancer, you end up with millions of results which contradict each other. For clear and uncomplicated information, come to Cancer Research UK. Visit us online or give us a call on 0808 800 40 40. Cancer Research UK. Together, we will beat cancer.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Should we go halves?
I'll get this. Let me just get my card, which was in my pocket.
You can't control awkward first dates, but if you temporarily misplace your debit card, you can freeze and unfreeze it on our mobile banking app. Feel in control every day. Lloyds Bank, by your side. You can only freeze some transaction types. T's and C's apply.
Welcome back to Squawk Box this morning. It's been a big week in media, and today is no exception. Our next guests are here with an announcement in the sector, making a big bet on content. Ozzy co-founder and CEO Carlos Watson is here. Also, Mark Lazary, co-founder and CEO of Avenue Capital Group. Milwaukee Boat. I mean, we can go through all of your so what's happening here? You guys are doing a big deal today.
We are.
You want to tell us about it?
A lot of excitement. We're announcing a fairly big fundraise. There's so much excitement in media right now. Carrie, you were obviously talking about Apple TV getting going, HBO Max, Spotify talked about podcasts this week. And so along comes young Ozzy Media saying we think we can serve millennials in a good way. We're raising $35 million as part of our Series C to let us bring more TV shows, more podcasts, more festivals.
From some big deal people.
Big deal people, starting with... Yes. Lazary.
And who else?
Lots of good folks. The folks at Interlock, the folks at Liontree, you know well. And then good support from our existing investors. So Lorraine Powell Jobs and the folks at Emerson Collective have been great. Axel Springer, who's obviously really active in the sector, and GSV Capital.
Okay, so here's my big question. And Kara, I want you to weigh in on this. So digital media has been a tough business, like a really tough business, especially when it comes to valuation, because you've seen what happened with BuzzFeed go up, and then it's come down. We can talk about Vox. It's gone up, and it's come down. You're the big investor investing in this guy right now. What are you thinking about these? What do you think? How are you feeling about valuations in the digital media space? He's also doing events and so many other things.
Look, I think at the end of the day, to do well in this space, you need to have a CEO who's got a vision, who's going to be able to do it. I think you also need a force of personality. I think the more time people spend with Carlos, the more impressed you're going to be. And there are going to be just a few winners, so I don't disagree with you. There's issues, but where there's issues, there's opportunity. And if you're able to navigate through that, you should be able to do really well. And I think Carlos is that person. That's the reason I invested. I just think Carlos is pretty unique and will be able to do the things he's talking about. But is it hard? Yeah, it's 100% hard. That's why if it works, we should all make a fortune.
And so when you say that you want to capture the millennial audience, how is that different, for example, than another company that was in a sort of high-flying space for a while, which was Vice, right? their whole mission in life is to capture that millennial audience.
I think Vice opened up a lot of opportunities for lots of young media companies. They obviously had some culture issues, to use a euphemism, and more that I think created issues. But I do think that they pointed the way to saying that digital's not enough, and they began with digital and television. I think one of the things that Mark and I are proud that we're doing at Ozzy, and one of the things that Kara has done as well, is diversify even more broadly. And so I think the fact that we're not only selling TV shows to Hulu and Amazon and BBC and PBS, that we're doing festivals in New York and elsewhere around the world, and that our podcasts are entering the top 100, even the top 10 at times, I think gives us a bigger, richer opportunity than if we're a one-trick pony. I think if you're digital only, you're captive to Mark Zuckerberg, and that's not always fun.
Absolutely. Yeah. I think it's really important to have a basket of offerings. I mean, we started doing events 17 years ago, Walt Mossberg and I, and then we moved into podcasts 5 years ago. And so you have to I think the problem is you've got to have very good content that people are going to hold on to. And the next stage is, though, about marketing it and getting it out there in the distribution. So you have to to jump into sort of hyperspace, you do need those distribution deals, you need the money. And you don't want to fall into this idea, say, around millennials. You don't want to be Mike, right? You don't want to be Mike.com. Right. You want to make content that young people want to watch and listen to. That said, they're not different from other people. Like the idea that they consume, that they don't like good news, they don't like good content, they don't like good events is sort of a weird idea.
How much of the business model is now dependent on what seems like a gold rush going on in the TV space, which is to say, if you can sell a show to Amazon or to Hulu, I mean, there's just so much money rushing into the space. When you looked at the business and you're starting to think about the breakdown of these different segments, how much of it is around TV production?
So there's, a majority of our revenue will come from TV and live events, and that's exciting for us. And as you guys were talking about this morning, we're going to go from kind of 3 key streamers to, a year from now, there'll probably be 8 key streamers in the market, including, I'm counting Quibi and Sony and Apple and HBO Max.
And by the way, how long does this last, this gold rush last?
I think we got 2 to 3 years at least before there's a meaningful shakeout. And that means that if you're, as Kara was saying, if you're creating premium content and your shows are the kind of shows that people want to watch and stream, then there's a lot more money for you. And so we're excited about that as an opportunity for growth.
Hey, Mark, I know we've got you guest hosting next week, so we'll get to talk a lot more about your views on the market, but we did just hear from the Fed this week lowering interest rates. Is that good news or bad news as far as you're concerned?
Look, it's good news if you want to borrow money. It's the only reason the Fed's lowering rates is because the Fed's nervous about the economy, and that's not good news. I mean, you don't lower rates unless you believe there's issues out there. And I think, if you think back a year ago, everybody thought rates were moving up. And in the span of a year, they've been lowered 3 times. So the Fed's being pretty aggressive in trying to keep this economy going. I think that's fine, but I don't think that's good for us going forward. I think we'll start seeing GDP drop down over the course of next year. I don't think we get in a recession because I think the Fed's doing a pretty good job of that. But if you have 1% GDP growth, I think it was 1.9. The year before it was 3. I mean, that means we've had a 33% decline in the span of a year. That's not that great.
Unless you're somebody who's looking for distressed properties?
Right. So for me, the more issues, the better it is, but I'd like everybody else to be happy also.
Can I pivot to the NBA for a second? You own the Milwaukee Bucks. I sort of introduced that at the beginning, but not really. Your take on China and the NBA and how this whole situation has played itself out. Has the NBA covered itself in glory here or the opposite?
I think it's been fine. You can make an argument both ways. I think for everybody, you're happy to start playing basketball again. That's really
how much is it about? We've long talked about trying to export our values around the world through sport, through culture, through all these other things. And here we are now in a situation where everybody's zipping their mouth and they're not exporting the value at all. And how you think for money, by the way, that's what this is really all about. Is that the appropriate way to do it? Especially when you have, by the way, players like LeBron and Steve Kerr out on the other side of the country where you are, who are very vocal about the president in the United States and so many different political issues here. But all of a sudden, we're in another place where money's on the line and they're unwilling to speak.
Look, I think people have a right to say, to say what they want. I think what everybody's sort of realized is there's issues out there. And until they understand them more, or they're going to try to understand them more, I think that's part of the reason why people haven't really talked a lot. I think for me, as an owner, I think I'd love to be able to do a little bit more. But
when you say do a little more?
No, I mean, I think you want to try to see and try to understand all the issues. I don't know everything that's been going on out there, and I should. But at least for me right now, I think the NBA has actually handled it pretty well. And we'll see what ends up happening with them going forward with China.
You're going to be joining us
yes.
in a week, so we can continue this part of the conversation.
I look forward to it.
I know this is the part you're really not looking forward to.
I live for this.
But Mark, thank you. Carlos, thank you.
Always good to be here. Thank you, guys.
And our thanks to Kara.
Yeah, Kara, thanks for being with us for this hour. It's been great seeing you. Coming up, we are approaching 8 a.m. on the East Coast. Squawk Box will be right back. Don't forget, Jobs Report coming up next hour.
The countdown is on. The October Jobs Report hits the tape at 8:30 a.m. Eastern. We've got final predictions coming up, and we'll bring you instant reaction from Wall Street as soon as the data breaks. Squawk Box will be right back.
I don't like the idea of my broker taking the opposite.
It's another Friday morning. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hi, I'm back. I just set a personal best on my park run. Feels great.
That's lovely, Mike. I think you've earned the right to put all the bins out.
Hey?
With Vitality Life Insurance, you get properly rewarded when you're active. In fact, you could save over £730 every year in discounts and rewards from our partners. Join over 1 million customers. Just search Vitality Life. Vitality. Positively different. Annual savings available with certain plans and are dependent on members' usage of rewards available. Terms and conditions apply.
Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Right now on Squawk Box, it's Jobs Friday in America. We're just 30 minutes away from the October employment report. Coming up, we'll tell you what to watch for as the numbers break. Then, expert analysis on what the data means for investments in your portfolio. The final high-powered hour of Squawk Box begins right now.
Good morning. Welcome to Squawk Box here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Andrew Ross Sorkin. Joe is out today, but we have our fill-in Joe this morning, our guest host, Joe Terranova. He is Senior Managing Director at Virtus Investment Partners. He's also a CNBC contributor, and he is ready to go.
I am.
Right. Here we are.
Going fast.
Check out the U.S. equity futures at this hour. You'll see right now the futures are indicated up, but not as much as they had been earlier today. Dow futures now up by about 23 points. They've paired their gains. Yesterday was a down day for the markets. Dow was down by about 140 points. That's a decline of just 0.5%, but it is the worst market that we've seen since December 18th, so that tells you how strong the last couple of weeks of October have been. So S&P 500 this morning indicated up by about 3 points, and then the NASDAQ up by 8 points. Also, take a look at where Treasury yields are right now. Yeah, the 10-year sitting at 1.688%, so we have seen the yield come down pretty significantly since the Fed's decision earlier this week. 30 years at 2.181%, the 2-year at 1.526. What do you think, Joe?
Well, I think the Fed did exactly what they needed to do in their messaging, which is basically tell the street, okay, we're going to pause, but we are going to raise the bar for any lowering of rates in the future, but we're also going to raise the bar for a return to a cycle of raising rates. I think that messaging is being lost in the investment community. I think it's a very powerful one. I think the Fed now sits on the sidelines throughout 2020 and 2021 potentially have the conversation if things look good about raising rates. But I thought that messaging was a good one. I think the Federal Reserve did their job.
Yeah, Wednesday morning, before we heard from them, the 10-year was at 1.83%. So you are talking about a big move down in yields as a result. Maybe
but you've seen a steepening. You've seen a steepening of the yield curve, which has been very significant to getting a lift to multi-assets. That's been important. You want to make sure that you don't return to the inversion that we were witnessing, the significant inversion in August, the negative yields that were permeating in Europe with the German 10-year at negative 75 basis points. So I think it's important to emphasize the steepening of the yield curve, the loss of inversion. The messaging of the Fed is right. We've got the liquidity in the markets. Now we need something to build upon that.
Okay, let's get you caught up on some of the other big stories that investors can be talking about this morning. Alibaba out this morning with quarterly results. The Chinese e-commerce giant beating analyst forecasts on both the top and bottom lines, among other factors driven by an increase in mobile users. You can take a look at shares of Alibaba this morning. They're off just marginally, about 1.5% right now on what I thought was actually a pretty strong report. I want to dig into some of those numbers a little later, trying to understand why it might be moving the opposite direction there. ExxonMobil reporting earnings and revenue beating for its latest quarter. CEO Darren Woods saying the energy giant is making excellent progress on its long-term growth strategy. Take a look at shares of ExxonMobil right now. That stock up about 1%. We're also expecting to get quarterly results in just a moment from Chevron at the bottom of the hour, so we'll keep our eyes open for that. And then, of course, we are set to get the October employment data this hour at 8:30 a.m. Eastern Time. We'll talk a lot more about that in just a minute. But there's another economic report a little later this morning that could also prove to be just as significant, perhaps, for the markets. That's the monthly ISM Manufacturing Index. Comes out at 10 a.m. Eastern Time, and that's expected to rise from a month ago, but still come in below the 50 mark that separates expansion from contraction for those economists out there.
As Andrew just mentioned, we are less than 30 minutes away from the government jobs report for the month of October. Economists are looking for an addition of 75,000 jobs to non-farm payrolls. Let's get right to our jobs panel as we start this morning. And joining us for that is Kate Moore. She's the head of thematic strategy at BlackRock's Global Allocation Investment Team. Jason Furman, who's a former Council of Economic Advisors chair. He's now a professor with Harvard's Kennedy School. And Michael Strain, who is Economic Policy Studies Director at the American Enterprise Institute. Kate, let's start with you. Between these numbers today, jobs and ISM, how important are they and how much do we have to discount for the GM strike?
Well, I have to say, we're going to discount a fair amount for the GM strike. Our expectation is considerably below where consensus is. And we actually think this is going to be very transitory. I think the private payroll side is going to look pretty good in general when you take out what's gone on with GM. And actually, we've had lots of other good news. A lot of the earnings stories have been strong this week. I think we've seen companies who've beaten on both the top and the bottom line get rewarded even more in price than they had been in previous quarters. We've had, I think, good messaging from the Fed, as Joe was just mentioning, that they will be there to back us up if necessary, but the economy is in strong enough footing that we don't actually need to cut rates further. And, if we get a decent ISM print, again, perhaps sub 50, but still a little bit of a bounce from last month. I think we have this really interesting, solid macro, solid policy, solid earnings story, and the market can grind higher.
Hey, Jason, what do you think about the economy? Like, just trying to strip out all the noise, seeing where we're headed from here. 1.9% GDP is down significantly from where we'd been a year ago. But what do you think we're heading into at this point? What do you expect for the year ahead?
Sure. I mean, and remember, we got that 1.9% GDP even with a falling unemployment rate. So just think about what growth rates are going to be like when the unemployment rate eventually stops falling. I've been saying this for a while, and all the data is consistent with it. The trend growth rate in our economy is something more like 1.75%. Even without any trade wars, stupid attacks on the Fed, all sorts of craziness, global slowdown, that's where our economy would ultimately be headed. In terms of jobs, right? Yeah.
Well, the only thing I would add to that is I do think the trade talk, all of these attacks on that front, have slowed business confidence. But when we're looking at earnings numbers that are picking up, and if you get any sort of a détente, at least, in those trade talks, would you anticipate that businesses would go back ahead and start putting more CapEx to work?
Yeah. Oh, look, I mean, we've had 2 quarters in a row of business investment falling. We're going to have faster business investment growth than the contraction we've seen. But I think the consumers may end up going the other way. And to understand that, the most important thing to look at this month isn't the total number of jobs, but wages. They grew 0 last month. You know, what's going to happen to those wages this month? That's what you need for consumer spending. That's what you need to keep growth up over the next year.
Michael, you agree with that take?
Yeah, I basically do. I mean, I think we're downshifting. You know, I think relative to 2018, the performance of the economy overall is moving closer to its potential underlying growth rate. The stimulus effects of the tax cuts, the kind of Keynesian stimulus side of the tax cuts, is wearing off. We've seen some effects from monetary policy. Certainly, I think the trade war has had a major impact on business investment spending, as you were saying. And so we're seeing the economy move closer to that kind of 2% growth rate level. And we're seeing the labor market respond to that. So instead of expecting, 200,000 jobs a month, we should start expecting 100 to 150,000 jobs a month. And I think that's roughly what we're going to see today when you strip out GM.
Kate, we look at the performance for 2019. I mentioned earlier we've had multiple expansion. Earnings are basically flat on the year. It's about liquidity that the Federal Reserve has provided to the capital markets. What's the next leg? Because the Federal Reserve is going to step back. We have a strong consumer, but yet we have manufacturing weakness that one can argue is never really going to recover quickly. Where do you see the next leg to advance asset prices higher?
There's a lot of tension in this one. Look, we have had a big snapback in terms of multiples in 2019, but we have to remember that snapback was after a massive contraction in the fourth quarter of 2018. And it's my view that multiples should stay structurally higher than they had been in previous cycles or over the long-term average for a number of reasons. Information availability, the cross-asset, comparisons. I think what the Fed is going to continue to do in terms of providing liquidity, but not just the Fed, central banks and policymakers around the world. And that liquidity environment and, the change in composition of the market and the cross-asset valuation comparison all being expensive means I think multiples stay higher. But you're totally right. Like, earnings are going to be basically flat for 2019 unless there's some big surprise to the upside in the fourth quarter. And I think investors have to get comfortable with investing in companies and industries that can produce above flat earnings growth in a slower trend growth environment. And we're starting to see that bifurcation. There has been a real spread between winners and losers within industries and sectors. And as I was mentioning before, companies that are beating on the top and the bottom line, and even those that are giving more solid guidance about the future are doing even better. So I think we're going to have more differentiation, more dispersion in 2020 and onwards in the slower growth environment. And actually, it's a kind of interesting environment. It's from where we've been, where it's just been about monetary policy and just only been about liquidity.
It becomes a margin story.
Yeah.
All right, we're going to have more from our jobs panel coming up in just a little bit.
Okay, coming up when we return, the big number of the morning. The October jobs report is on the way. We are right back with that and so much more.
Up next, the new front in the streaming wars.
For centuries, we feared this day would come.
On a make-or-break day for both Apple and Netflix, we break down the biggest bets on top Hollywood names and tell you which tech and media giants are poised for success.
What happened to your TV?
We had a disagreement.
Stay tuned. You're watching Squawk Box on CNBC.
Why is Lizzie going rental for Fizzy Haze? Is it because her flat is so beautiful and spacious? Snazzy! Or has roof terrace, garden and party room? Surprising! Or because it's 18 minutes to Paddington? Easy! With friendly staff on hand to take any deliveries? Amazing! Or just because her fuzzy friend can live there too? Find your new home at fizzyhaze.com. Fizzy Living. Reinventing renting.
On a day such as this, we pray the car won't let us down. But winter sneers, and the battery bails, the bulbs blow, the wipers wipe out. Can anyone save you?
Yes, you. Come to Halfords. We'll check your wiper blades, batteries, bulbs and windscreen. We'll even send you an MOT reminder, all completely free. And we're open late 7 days a week. See halfords.com for opening hours. Here in Chiswick. Ready for the cold snap? Ready for anything. Halfords. For life's journeys.
Subject to availability, exclusions apply.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
We've been together 3 years. We both love travel, and luckily we've got the same taste in music. Next year, we're planning a big road trip, and my wife's coming too. It'll be nice. The three of us don't do enough together. We know how much your Mini means to you. That's why Mini Service offers an array of convenient options and allows you to book online anytime at mini.co.uk. Because we love your Mini almost as much as you do. Search Mini Service. Who's in? T's and C's apply, subject to availability, participating retailers only.
You can go with it. You can go with this. You can go with me.
Apple TV Plus launches today. The tech giant using big stars like Jason Momoa, Jennifer Aniston, and Reese Witherspoon to kick off the highly anticipated streaming service. Apple now becomes a direct competitor to Netflix, but the rivals have two very different strategies. Julia Borston joins us right now. She's got more on that front. Hi, Julia.
Good morning to you. That's right. Just as Apple TV Plus launches, Netflix is debuting Martin Scorsese's The Irishman in a handful of theaters before it starts streaming on Netflix at the end of the month. Now, Apple TV Plus's $5 a month service, which is free for those who purchase an Apple device, is all about prestige content. It's launching with just about 9 titles, all from the biggest name creators and movie stars in Hollywood. It will regularly add more content, but its appeal is all about having fewer, better options. The challenge of betting exclusively on premium content is that the reviews have not been great. Its flagship morning show drawing just a 58% on Rotten Tomatoes. But meanwhile, Netflix's The Irishman, directed by Martin Scorsese, is probably the most prestigious film ever from the streamer known most for its volume of options. The Irishman cost Netflix about $160 million to make, more to market. It aims to draw awards attention with its nearly perfect reviews to help in turn draw filmmakers and subscribers to Netflix. Now, for this weekend's content battle, Netflix may be winning with reviews, but we'll have to see if its investment in Oscar bait movies pays off with subscribers, especially as Netflix's most popular shows which are licensed, not originals, leave the service. Guys, back over to you.
Hey, Julia, before you go, what is the scuttlebutt in L.A. in terms of among the content Hollywood folks about Apple right now?
Well, I think that the buzz on the street here is that Apple is paying so much for content. And because they're doing a different model, they're not doing pilots of shows like you see for television. It's going to take them longer to find their footing. But what I've heard recently is that people kind of have it out for Apple, and maybe the reviews are more negative than they would be otherwise. But that sort of Apple was seen as having a lot of hubris to say that it could just jump in and only do a handful of shows, not have to pilot them or test them out, and it would turn out great. And so maybe the content is better than the reviews would indicate, but we'll have to see. I haven't seen the morning show yet, but I'm very curious to watch it.
I have, and I liked it. So, Julia, thank you for that. I still have a lot more episodes to go, though. For more on the streaming wars and what the launch of Apple TV Plus means for viewers and content distributors, we're joined now by former Showtime CEO Matt Blank. What do you think about this idea of just having a handful of shows? Do you think that's a workable model?
Well, it's the ultimate curation, and it's interesting because the rest of the business seems to be going away from curation. Right. I mean, look, Apple is interesting. They're the only one of these launches coming up where, they're not playing defense. They're not trying to rationalize a legacy content business. That's what NBCU is doing. That's what Warner Media is doing. That's what Disney is doing. So Apple has, I think, the luxury of taking a different approach. We'll see if this content really makes a difference. It's interesting, big stars, Jennifer Aniston, Reese Witherspoon. Who was the star of Stranger Things before it was on the air? How many people? Right. But that's not marquee.
We had a bunch of new.
Mrs. Maisel. Yeah. Game of Thrones. So that is not necessarily the path to glory.
Right. So since we last saw you, we've heard a lot more about HBO Max.
Yep.
And what that's going to look like. And we've been debating whether that is a workable model, adding all of these other assets. Does it change the brand proposition for what HBO is?
I think it does change the brand proposition, but maybe successfully. I mean, one of the things that's going to make it hard to evaluate all of these launches is in the past couple of weeks we're hearing about free.
Right.
HBO subscribers are going to get HBO Max for free. Apple is going to give away a lot of content. So you have one of those pig in the python situations. If we're sitting here a year from now or 2 years from now, there's going to be this giant mass of free subscribers moving through this streaming infrastructure. It's going to make it very hard to say if any of these strategies are really successful.
But if you were
a year from now,
actually, Barry Diller was here earlier this week, and we were talking about John Stankey, who may or may, I think may have gotten a bad rap actually within the sort of media community. We'll see whether this works. But would you bet on that?
Look, HBO is a great brand, and when we talk about a lot of the content that we're talking about, it's hard to beat things like Game of Thrones. But, I think one of the things we're seeing right now, it's very easy for tech companies to buy content and get into the content business. It's a little harder for content companies to become tech companies. And I think that's significant when you look at some of the cultural aspects here.
What do you do about Netflix and valuation?
Well, you and I have actually talked about it. It's interesting. You've all spent a good deal of time in the past weeks and months talking about IPOs and the issues that WeWork had, WME, right. Peloton. I think it's an interesting question. What would happen if Netflix was going public today with the balance sheet that they have? Now they have tremendous revenue growth, but would they get the valuation that they have in the public markets today?
Would they have as many subscribers as they have right now, potentially?
Yeah,
That's huge.
They might, but again, at some point, when do these valuations start to merge? What valuation does HBO Max get? What valuations does Disney get? And what does that mean in the long term? And I'm by the way, getting back to Apple, I'm in the corner of they need to buy content.
You think they need a library?
I think they need a library. I think they need a lot of content production capability. And it's great to say we don't need that, but I'm not sure, what their long-term objectives are.
Hey, Matt, just when you talk about the valuations kind of merging for the old line stuff and Netflix, you think that happens because Netflix comes down, because the old line guys come up? Do they meet in the middle?
Well, I can't see if Disney has 50 million subscribers in 2 years. I can't see anybody valuating that part of the business valuing that part of the business the way Netflix is currently valued. You may say, well, it's just going to go on like this forever, but I don't think that's the case.
But when you say merging, you think dragging down?
Yeah, I think so. Yeah. And by the way, I'm a big Netflix fan. These guys are killers. They really know how to do it.
I guess, does it meet in the middle?
It may be.
Disney's valuation and everybody else goes out.
If successful. I think one of the things that the legacy media companies have to contend with is that they had some really good businesses. Some of these businesses were great businesses. You look at Disney, no business in the history of media had the better metrics than ESPN did 10 years ago.
Do you think Netflix could be as successful and spend less money on programming?
I do. I do. I think
they're going to have to.
They're going to have to.
They're going to have to.
You know, somebody used a term this morning. I was watching you briefly. Netflix is a long-tail business. Right. Long-tail businesses referred to the book business, the music business, where IP didn't cost anything. That was existing IP. Netflix is in a long-tail business where they have to spend a lot of money on new IP every day. But, you know, you can never sell those guys short. I mean, I know, you know, every day you hear about the Netflix killers. They are not sitting out there saying, you know, oh, gosh, it was a good run. You're going to hear a lot more from them.
Final question. How many of these things do you think you can really buy? Meaning, do you look at it and say, and we've been talking a lot about this in terms of competition, is it Netflix versus HBO Max versus Hulu? Is that one group? Then you have Apple Plus, but that's sort of in a separate class. Is it in a separate class? Is Disney Plus in a separate group?
Look, I think all of that may not be terribly relevant. The relevant factor is, you know, you can push a button and get rid of these services and come back on 6 months later and watch what you want to watch, which is why I think that you may see some changes in the way the pricing, the way these shows are released. It's just going to be different.
Okay.
Lock you in for a year?
Great to see you.
Yeah.
Disney style. Exactly. Thank you.
When we come back, the big number Wall Street's been waiting for, we're going to get the October jobs report. We'll get the data in just a few minutes. And don't forget to subscribe to our podcast. You can get interviews, behind-the-scenes access, much more. Look for us on Apple Podcast or on your favorite podcast app. Subscribe to Squawk Pod today. Stay tuned, everybody. We'll be right back.
This is Apple Card, a new kind of credit card. It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
What if your email was organized by project and not by date? What if everyone looked at the same thing instead of their own inbox? Then it wouldn't be email at all. Forget your fragmented, jumbled inbox and make the change to channels in Slack. Spaces dedicated to individual projects, topics, or teams. All your communication is neatly organized and everyone is on the same page. Slack. Choose a better way to work. Get started at slack.com.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Still to come, the final countdown. The October jobs report is just minutes away. The futures ahead of that are a little bit higher. Looking at the Dow up by about 35 points. S&P up by 5. The NASDAQ up by 12. Final predictions are next. Stay tuned. You're watching Squawk Box right here on CNBC.
At Synchrony, we're changing what's possible.
Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Yeah, before the game, I said, hey, I want you guys to just treat this as just another game. You know, one more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Far wing elevates. Triple bucket.
The war of the crown. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
the
it.
sideline, the Van Fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now. Hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
NASDAQ market site in Times Square, and we are just minutes away from the government's October employment report. Want to get some final predictions from our jobs panel. We're going to go to Kate real quick. What do you got?
I'm at 43 because of the GM strike.
Okay, Jason.
I'm optimistic, 120 despite the GM strike.
Michael.
75K, including the GM strike.
Ooh. Okay, Joe Terranova, and I also want to get some wage issues from you.
Well, the important thing is the unemployment rate.
The unemployment rate.
Watch the rate. That's where the fear on Main Street comes from. And if we've reached a point where that's at a trough, that impacts consumer spending if the rate begins to rise.
Okay. Mr. Leisman?
I don't actually have I don't have the ISM as what you're critical of my model. I think sub 100,000 is possible. But I wouldn't read too much into it because you have the strike, but you also have the census workers. So we're trying to look at the real
I'm worried we're going to be
why
discounting the good or bad news here. Rick Santelli, because we got to get to Washington in a second. What do you think, Rick, sir?
109,109.
109?
Nothing on the unemployment. Yes, sir.
And how are you factoring GM there?
I subtracted about 75,000 from what my number would have been.
Okay.
Look very quickly to see where the Dow is ahead of this. You can see it's up by about 23 up by 23 points ahead of the futures would open up by that. Before all of this, we were also watching the 10-year to take a look at that too. And I think that was yielding around 1.68.
Okay, but now let's get to Elon Mui in Washington with the numbers. Elon.
128,000 non-farm payrolls rose by 128,000 jobs in October, solidly beating expectations. The unemployment rate ticked up slightly to 3.6%. Now, average hourly earnings, they also rose by a solid 6 cents to $28.18. That's a 0.2% increase over the month and a 3% increase over the year. Now, there were some big upward revisions to previous month's jobs numbers as well. The August number was revised higher by 51,000 jobs, going from 168,000 to 219,000. September's number also up by 44,000 jobs from 136,000 to 136,000 to 180,000 jobs. All told, that is 95,000 more jobs than previously reported. That puts a 3-month moving average now at 176,000 jobs. Now, those strong numbers come despite two big drags, GM strike as well as the census. The employment in motor vehicles and parts was down by 42,000 jobs because of the strike. That brought overall manufacturing employment down by 36,000 jobs. The strike may have also weighed on the work week. The manufacturing work week was down 0.2 hours to 40.3. Now, the federal government employment of census workers, that was down by 17,000 as those temporary workers finished their jobs. Now, the sectors that were leading in job growth in the month of October, restaurant and bars, that was up by 48,000. Social assistance was up by 20,000. And financial activities driven by real estate activity, that was up by 16,000 jobs. The labor force participation rate, that ticked up from 63.2% to 63.3%. And U6, the broadest measure of unemployment, that rose from 6.9% to 7%. Guys?
Okay, Elon, thank you for that. Steve Leisman is here, and you have been
commenting while I was talking. I was doing the play-by-play
as we're going. So give it to the audience.
This is a potentially game-changing employment report, and I'll tell you what is changed here. We had pretty good data that the jobs market was slowing, and we're pretty darn sure it was slowing. The Labor Department comes forward and says, no, you had that nearly completely wrong. Well, not nearly. We were thinking about low hundreds, below 100. Let's take today's number, 131, but you had the census workers come off, which was the opposite of what was expected, and you had the strike. So let's add back. Let's go 131. Let's put back 15 for census. Let's put back 40. We might be upper near 2, okay? Stop there. September was 114,000. It's a lot weaker than we thought. Now it's 167. August, 122. Now it's 163. I'm just talking about the private sector here, not to mention the overall. I think one of them was up. The headline was up above 200,000, if I'm correct about that, with the revision. Anyway, we have to think that the jobs market is potentially slowing less than we thought to a much higher sustainable rate. And Powell had this pretty well right when he called a hold here. And I don't know what he knew. We always have that discussion. It's not worth having. In any event, the idea that the job market has not slowed as much and that there's more, and that's, I think, who was it? Was it Joe said the 10-year was higher? That makes sense. You would just some sort of lift it all to the term structure here because that's going to back off the idea that we have this gathering weakness. Whatever's happening in the economy, it hasn't shown up in claims, and it's really not in a big way showing up in the jobs report.
Except everyone's worried about CapEx, which is a separate issue, not represented here.
That's the interesting part, though, is that we really worry about corporate confidence deteriorating because of trade and was it going to stop spending as well as hiring? That doesn't turn out to be the case. I mean, I think this is an unequivocally strong report. And to echo this point, the Fed is telling us that they were doing a mid-cycle adjustment. That is, in fact, what that was. The economy is in fine shape.
We haven't given a shout-out to Jason yet.
The winner.
Winner. Chicken dinner. Why did you see a stronger number? Was it...
this is stronger than I would have expected because you had those revisions to the previous 2 months. I think Steve has it right here. I don't think any one number on jobs should change our view of the economy. This one changes mine a bit more than your average month does. You have the pace of job growth in the last 3 months exceeding the pace of job growth we had in the first 7 months of this year. That's something that's surprising, given all the increase in uncertainty we've seen, given that should be trending down. You had wage growth okay this month. You had the participation rate rising this past month. So this to me looks like a very surprisingly healthy labor market.
Can I
now,
put
I wouldn't go as far as Steve
Jason,
in
I just
saying
want to
this
put a quick
means
number on that real quick, which is, if you remember at 7:30, I did a quick hit that showed the 3-month average was 157,000. That's wrong. The 3-month average now that I would have reported back then, had I known what we know now, was 188,000, and the new 3-month average is 176,000. So sorry, Jason, I just want to put some numbers on that change that you were talking about.
Do we have to now wait?
And I wouldn't expect we can keep up with 176,000. I mean, that to have that for the
You
next
think it's
year.
still come down?
Yeah, I think it's going to still come down, but it's coming down. Seems to be coming down more slowly than I thought.
Do we wait now till 10 o'clock to make sure ISM manufacturing doesn't curb the enthusiasm from this report?
We have to really think hard about how this economy operates. And I think we all grow up with a certain understanding of the economy. And I remember my dad coming to me and saying, how are we going to survive without manufacturing? Are we all going to sell each other insurance policies? That's a direct quote from Marvin Leisman, in case anybody's interested. And I didn't really have a good answer, and I still don't have a good answer. What I know is that we seem to be able to survive selling each other insurance policies with manufacturing going down as a percentage of employment and remaining stagnant or pretty much the same or stable as a percentage of total overall output.
Yeah, I would echo that. I think the service side is going to be much more important. And given how strong and how broad that strength was in this labor market report, I would be surprised if the market reacted negatively to a weaker than expected ISM.
In terms of stocks that you would look at, sectors, names, as a result of this, is there anything that you'd actually focus on?
Well, the last couple of days, there's been a little bit of a favorability back towards the technology growth-oriented names. Now, we had seen a move towards value. We had seen that there were European opportunities, emerging market opportunities, opportunities in financials. There was the expectation that there was going to be a cyclical recovery. So does this revert back to that thinking that there is a little bit of a cyclical recovery going on domestically and globally, in which that makes value come back once again? I need further evidence for that. I still suspect that for the investment community, the right way is to look for companies that are cash rich, low in debt, strong margins, and that takes you to technology and to growth-oriented type of equity names.
Okay. We have not.
Michael, is Michael there?
Yeah, Michael.
Michael's there. We got to get to Rick. We got a lot of folks who've been waiting patiently. But Michael, go ahead.
Well, I've been trying to keep quiet because I don't want to be the guy that pours cold water all over the celebration.
It sounds like that's about to happen. That's like a comma, but here we go.
That's precisely what's about to happen. I think there's no question it was a strong report, and certainly it kind of nudges up my view of the underlying strength of the labor market. I think it's important to kind of step back and look at where we are at the 30,000 foot. Yes, we're stronger than we thought we were yesterday, but we are still seeing a deceleration relative to a year ago. We're seeing that in the labor market. We're seeing that also in the GDP numbers. So we're seeing a weakening. The slope is negative over a year, but we're still in a good place, and that is surprising. Given all the headwinds that the economy is facing from the reduction of fiscal stimulus, from the trade war. The question, I think, is how long does that last? Right. How long can we continue to have CapEx not grow without that affecting hiring? How long will it take for that not to affect consumers who are really holding up the economy?
The market's not agreeing with you right now. We're looking at the 10-year yielding now 1.7%. We're looking at the Dow futures up by triple digits at this point. But we also have some breaking news, or at least something we should alert you to.
Fitbit right now has been halted. As you may know, there's been speculation all week after a Reuters report earlier in the week that Google owner Alphabet was in talks to buy Fitbit. We don't have that news crossing just yet. We're waiting for news pending, but I imagine that will be the news unless there is a surprise bidder or buyer that we don't know about right now.
Or unless they say never mind.
They could say never mind, but I don't think you'd halt on that necessarily.
That stock's been up pretty significantly as a result of that. It's still a $6 stock, but it was below $5.
You know what the most important stock might be today based on this jobs report, JP Morgan?
Why?
JP Morgan, I think, is indicative of the exact sentiment that I described about this switch back to the belief that there is a little bit of a cyclical rebound. If you see strength in JP Morgan, which, full disclosure, I am long, if you see that strength in JP Morgan, I think that's the investment community giving some confidence behind this report this morning.
Hey, we should get to Rick, too.
Can we also put up a chart of the dollar, which is kind of interesting this morning? Maybe Rick's going to also talk about that as well, but just wanted to throw that out there as something to discuss.
Sure. Rick, what do you think about the market reactions you're seeing to this number?
I think it's very anticipated given the size and the strength embedded in this report. We're up about 5 basis points in 2s and 10s from where they were right before the number. But what's really fascinating is when rates go down, we saw bull flattening. And now rates are going up, and we're seeing bear flattening, another flattening between 10s and 2s. We saw it rebound a little bit yesterday. You know, many big institutions really are playing this curve and how they leg in and play some of their treasury exposure. The dollar index, you know, it's not up a lot, but it is up a bit. The real key to the dollar index is that it needs to regain the 98 handle. Let's not lose sight of the fact it dropped almost 2 full % in the month of October alone. I personally think that the anomalies were the last several months of weakness. This is more in line. If I had my 75,000, I get up to, you know, right around my 184,000, which is really what I would have came in without the GM strike. The revisions give me hope. Let's put it this way. I think we're creating a lot more jobs than we are accurate data describing them.
Hey, Rick, does it surprise you that you have a bear flattening here? Let's explain what we're talking about to people. If you thought the economy was going to do better, you would have steepness. In other words, shorter rates would be lower than longer rates, and they would get steeper. But instead, we have the opposite happening, which is indicative of the bond market either not buying into the strength in this report and or figuring out a way to be pessimistic in the face of it, Rick.
You know, I would agree, and most people on this floor, the first thing they'd say is when you get a steepener, especially like yesterday, the bull flattener, is that the Fed's behind the curve. But here's what I would caution. Don't make any quick decisions, because much of the movement was based on logistics when markets were crazy, either with the Fed and the statement or now with the number. I would say give it a day or so to simmer. I would be very surprised if this curve doesn't start to regain steepening.
It's a blue moon week of a Fed meeting and a payroll number in the same week.
So what do we have to digest?
Next week? I haven't looked. We're going to get a lot of Fed speak. Some later on this afternoon. We got ISM manufacturing, the ISM services, which I'm trying to convince over time to the market is more important, but nobody listens to me anyway. But we keep focusing on the. Who just told me it's not important?
Is that Jason?
This is Jason. We looked at this once. I think it's not important at all.
Why?
But it's most of the economy, Jason.
It's so badly measured, though.
I agree. Now, that's an issue, right? We have a wonderful statistical measurement for the U.S. economy right now in the 1950s. And we just don't have any data for the modern economy as we know it. And I think Rick's point is, look, okay, over 3 months in time, we figured out what the real number was in jobs. You've got the market trading right now over all this stuff. It always confuses me why the market trades on stuff that it knows to be plus or minus 100,000 right.
Hey, Jason, let me ask you one more question. Wage growth. You know, obviously this is a much stronger than expected jobs report. Shows that it's not only this month, it's been the last couple of months with those big revisions too. But what about wage growth at this point? How would you kind of categorize that?
Right. You actually see something interesting right now, which is wage growth for managers is slower than wage growth for production and non-supervisory workers. Over the last 12 months, production and non-supervisory is up 3.5. Production for wages for all workers is up 3%. So we're seeing a bit of a compression of inequality, more wage growth at the bottom. We're seeing that in a lot of different data, and we've seen that in the numbers again in the last couple of months, where when you include the managers in the data, the wage growth is slower.
I don't see how that's not
and
something
we've been
you
seeing
are
it for a
excited
few
about.
years. Yeah, no, that's true.
Steve, just in terms of that, in terms of what we're watching with wage growth maybe coming up a little, it's still so low that there's no way it's going to kick off inflation.
Right.
I mean, so, that is not going to have to step in anytime soon either.
So we can talk about what the reality is here, or we can just deal with what the Fed thinks about it, which is probably most important as to what policy will be. The Fed adds together productivity and inflation and says anything above that is potentially inflationary. Yeah. So let's pick inflation at 1.7. Let's pick productivity 1.25, 1.5. As I add those two together, I get to 3%. If you had 3% wage growth, that would not be considered inflationary. Plus, remember that Powell is piling on top of that calculation the idea that he would not be concerned if we ran a little hot for a little while.
Yeah.
So if we did 4% wage growth, look, that is one of the most important puzzles of this economy. A job market so tight that does not have strong wage growth in it, we don't really understand or know why.
So this plays into your theory.
Yeah.
What you were saying about earlier this morning about the idea that we have a lot building in the last couple of months that still could come in and push markets higher.
We do. It has been a liquidity-fueled, multi-asset rally throughout 2019. I don't see how any of that changes. We've been able to digest that we've got this trade dispute. We've been able to digest that we've got a manufacturing slowdown here in the U.S. and outside of the U.S. So I do see this as over the next 61 days until we close out this decade, that the upside...
I didn't think about that. 61 days till we close out this decade?
But I see the upside as the path of least resistance.
But that's the whole thing, right?
I know that's very unpopular, and I know many have said, well, you can measure sentiment in different ways, but I just look at positioning and talking in the investment world to how everyone is positioned. And everyone was positioned so defensively, and we're finally coming out of that a little bit, and I don't see much to disrupt that.
I think the really interesting thing as we talk about wages is what ends up happening with margins. Now, that's where everyone is going to go next.
Margins are
But I think as companies reported third quarter 2019 earnings, we got the same thing we've gotten from the last couple quarters. Actually, I would argue for the last couple years, which is companies are super focused on delivering on the bottom line. That means managing their costs outside of wages. If there was a departure from that, I would get a little bit more concerned. But if we're getting strong wages and the consumer looks healthy and companies are being thoughtful about managing their total expenses, and to Joe's point, positioning has been sort of skewing towards the bearish, although a little bit less so than it was maybe a month or 6 weeks ago. You know, I think the market rides higher into the year end.
I just want to understand, because this whole rally has been on the come, so to speak, if you play craps at all, right?
Yeah.
We've had 3 quarters of negative comps on earnings. And we've hit new record highs in this environment, right?
Multiple expansion.
Yep. Multiple expansion because the stimulus in train is really one of the things I think the market is betting on right now, which is that the things that you talked about and that Kate's talking about are going to come true. That you're going to have good margins, you're going to be able to turn the earnings around. And one of the things that's out there is you have this massive global stimulus going on.
I would argue, though, that earnings aren't that bad. I mean, the expectations were so negative. We're going to come in flattish for the year. You know, in every quarter for the last 3, people have said, you know, we are in a serious earnings recession and we just didn't show up there.
Have we hit the bottom in terms of that? Have we troughed in terms of the earnings recession or not? That's the biggest question. Right?
No, I think, look, I'll be clear. I think the next couple quarters are also going to be challenging, but it's really going to be up to the big companies who have the ability to manage their expenses and who are generating free cash to carry us through.
I want to throw a monkey wrench in this whole conversation. We all got in a little debate/fight yesterday about what the president might do related to China. And if you remember, Mr. Kernan had a view that when he feels like he's got house money and things are going well, that he can
makes it worse.
That he can lean in to the situation a little bit more because he has more leverage. So my question actually is, you look at where we are now, you look at what the markets are doing, feeling that actually maybe things are better than we thought.
Fatal mistake to do that because of the calendar. If he's going to make that mistake, if he's going to feel he's playing with house money, he's going to be doing it in the month of December, closing out the year when liquidity begins to dry up and you're moving into the next year, which is an election year. That is a fatal mistake for the market. You can't take that risk in December of 2019.
Liquidity issues this year, there's no way the central banks of the world are going to have a liquidity issue in the month of December.
I'm not saying the central banks are going to have the liquidity issue.
No, but what you're saying is that he's not going to be bold. I think it's going to be his platform. I think he's going to stay tough on China, and I think the American people that are his base will cheer that notion versus playing the political timeline.
Okay. I think there are people around the president who know that the market could be higher, the economy could be stronger. Not if the trade dispute goes away, But if the trade dispute were on a tact that the market could predict, right, and it's the unpredictability, I think, that takes away.
Highs. That's pretty good, isn't
Steve,
it?
there's no way you couldn't put this trade dispute on a predictable path as long as President Trump is president. You never know what he's going to do.
My point was trying to be nice about it, saying there are people around the president who know this and who try to communicate this to him. And the question is whether or not the president will take advantage of the possibilities out there for him to fight this trade war in a less disruptive way.
But even if it looked good for 1 week, you don't know what's going to happen the next.
Fewer people.
Guys,
there are fewer
we
people
want to thank the
around
Brady Bunch. That's what it looks like on the screen right now. We only have 6, so I think the true Brady Bunch is we need 9. But we do want to thank this fabulous panel for this remarkable conversation. Kate, Jason, Michael, Rick, and Steve. Joe is sticking around. Thank you all. We should tell you in under an hour, we are under an hour now till the opening bell, and we want to get to Dom Chu real quick, who's got to look at some of this morning's key stock movers, including 2 energy giants as well.
And Dow Components, Andrew. Happy Friday to you guys. Let's kick off our Friday morning movers with shares of ExxonMobil. They're up by about 0.5% or so, roughly 105,000 shares of pre-market volume. This is America's biggest energy company. It reported profits and sales that both topped analyst estimates, driven in part by better than expected results in its downstream operations, or those tied to refining and the marketing of end-use fuel products. So those shares in focus, Dow Component. Next up are shares of Chevron, which is America's second biggest energy company. They're down roughly 1% right now on around 17,000 shares of pre-market volume. The company missed estimates on revenues, citing lower crude and natural gas prices alongside higher operating expenses. So those shares moving in the opposite direction for a Dow component. And then we'll end on a non-Dow component, which is Newell. That Newell brand stock is up about 4% right now, roughly 60,000 shares of pre-market volume. The consumer goods company behind everything from Sharpie pens and Elmer's glue to Marmot outdoor apparel and crock pots came in with better than expected profits and sales. It also raised its full-year profit and sales forecast as well. Newell said it will also end its asset sale program and keep 2 units it had planned to sell off. So those shares higher 4%, Becky. I'll send things over to you.
All right, Dom, thank you very much. We should mention one more stock we're watching right now. It's not trading, and that's the news. Fitbit shares have been halted for news pending. You can anticipate that it could be the idea that Alphabet was going to purchase Fitbit. That was reported earlier this week. That stock has risen sharply since that time over the course of this week. I think the shares were trading at around $4.38 before you heard any of that news. You see the big swing up. It last traded at $6.16. And again, we are waiting to see what happened. Fitbit shares halted for news pending, and we'll continue to keep an eye on that as well.
Okay, I want to get down to the New York Stock Exchange right now, where Jim Cramer joins us now. And Jim, I don't know if you're following Twitter, but I believe Mr. Trump, president, has just tweeted about the jobs. He says, "Wow, a blowout jobs number just out, adjusted for revisions and a General Motors strike. 303,000 is his number. This is far greater than the expectations. USA rocks!" Exclamation point.
It's got some different math. It's a new kind of math there.
It's some new kind of math there.
New kind of math. It's a revisionist math. Look, I think the number's okay. I keep coming back to, we got to focus more on Boeing. I think Boeing is hugely important to the economy, and companies are supplying to Boeing are kind of pulling back. And I think if we're going to see problems in the economy, it's going to be people maybe realizing that Boeing is probably the largest generator of jobs in this country now, and I'm very worried about Boeing. And I think that this job number is going to get worse if Boeing isn't resolved. Yeah.
You know, the new Boeing news that we haven't even talked about this morning is that Qantas, the Australian airline, has grounded 3 of its Boeing 737s, not the Maxes. These are just 3 Boeing 737s over cracks found in the wing structures. This is the other issue that's out there with the call to look at all of these planes and see what happens with them. That, to me, is a story that was kind of quietly percolating in the background. But if you've got problems with more than just the 737 MAX, what does that mean, too?
Yeah, boy, I'll tell you, we got to go to Phil on that because Phil has been spot on. But there was a moment this week where Phil confronted Dennis Muhlenberg, and it reminded me of when Cronkite went over to Vietnam after the Tet Offensive and said, you know what, we're losing this war. And it was just one of those moments where, like, Bowen's losing the war here. And I just am very concerned. This is a pile on at this point. I don't know about the 737 regular. I had Doug Parker. He's didn't mention a problem with that, and that's American. And Gary Kelly from Southwest didn't mention a problem with that. But Doug Parker says that Boeing owes him $450 million. Boeing's got to get this. Boeing's got to get this behind it. And I don't know. This was a very tough week for what I regard as America's greatest company.
Jim, real quick, and I apologize, I don't know if you're seeing this just crossing the wire as well. Elizabeth Warren, we saw the Fitbit news. If it has, I haven't seen Fitbit
it's still
fully crossed. I think it's still halted. I'm now seeing Elizabeth Warren proposing a $20.5 trillion in new federal spending for a Medicare for All program. This is apparently financed by taxes on businesses and the wealthy. I'm just.
And Leon. Is it Leon?
It's not.
Yeah,
not on Leon Cooperman himself.
Apple buybacks too.
But I know you've spent a lot of time talking to her about her plans before.
Yeah. But look, Lee's letter, by the way, let's not be incendiary about it. It's not an incendiary letter. He's debating their math, just like the president's math on the 3,000. I think that's the American people may not like that number. I think the American people are convinced that when you see the word trillion involved, they can handle billion, they can't handle trillion. But look, let's see what she says. But you're not going to be able to so-called soak the rich and get that kind of money. The Leon Cooperman debate, though, is one of the greatest debates going on right now because it's actually a substantive debate. It's not a name-calling debate.
Well, my worry...
But I think she's using it as red meat. I don't know that people are digging into the substance.
I don't think it's substance. I'm getting a lot of emails from people in her base that I don't think are on the substance part of this. I actually think the letter that he wrote is actually remarkably substantive. And unfortunately, maybe it's a function of Twitter, maybe it's a function of name-calling, but I don't think it's unfortunately doesn't seem like she's engaging in a meaningful discussion over some of the issues that he raises, including, by the way, he's actually not that, he's far apart from her when it comes to wealth taxes and a lot of the rhetoric. But in terms of tax policy and some of the other issues, take the wealth tax off it, but some of the other low-hanging fruit, they're actually on the same page. And yet I don't think she really wants to engage with him. She wants to use him as a boogeyman.
You know what? I wish you'd just keep talking about this because we got to change the dialogue because what you said is 100% right. And it's starting to bother me because Lee's letter has got like one negative thing, something which is that he wished, not necessarily that she should have picked on him, but the substance of the letter is unbelievable. Yeah. And you're absolutely right, Andrew. We got to get this thing back on. And he's the wrong whipping. If there's a whipping boy, it certainly should not be Lee.
Yep.
The most charitable guy I ever met. I remember making me give money before I had any money. It's like, hey, okay, I give. She got the wrong guy here.
We are in violent agreement this morning, Jim. Absolutely.
Violent agreement. Yep. Eyes wide shut, you and me.
Yep.
There's an image I can't unsee. Jim, we got to run because we're not going to get to you on time. Otherwise, we will see you in just a couple of minutes coming up. In the meantime, joining us is Stephen Whiting. He's Chief Investment Strategist at Citi Private Bank. Stephen, these numbers, the jobs report, much stronger than you had anticipated. But even before you saw those numbers, you thought that 2020 is setting up for a return in kind of an industrial strength. Why is that?
So our base case here is that we're going to have an industrial and trade sector recovery. Factories around the world are producing below the demand level. Now, there can be some slowing. What you've seen in business investment can feed through some to employment and consumption. Today's data is very encouraging, of course. I think when you look at November employment, you got to remember you've got to add back those workers. Over 225,000 easily for the November report. But put all that aside. So what we're going to see out of the purchasing managers' reports is they can't sustain contraction unless consumption is going to go down. And I see this in markets all around the world. Whether it's Europe, whether it's Asia, whether it's the United States, we have a healthy enough consumer to outlast this industrial downturn, and factories will start producing to the demand level, and that is going to be a recovery in industrial production and trade.
Joe, you're very bullish. You agree with that outlook, too?
I'm bullish on multi-assets. I'm not specifically bullish on equities themselves. I'm bullish on multi-assets. Look, I think today, let's see if financials validate the enthusiasm that we have around this jobs report. Let's see what happens with manufacturing. And it's interesting to me, on a day where we're having this conversation about Elizabeth Warren and Leon Cooperman, we get an incredibly strong jobs report indicative of a strong economy. So are we setting up for 2020 where we have an election based on, do we go for social justice or do we go for the strong economy? That's an interesting question.
Stephen, you got about 30 seconds.
So look, I think we've gone from complete exaggeration as to how weak the economy would be. The bond market was amazingly overbought. The only thing I'd say about what I said with industrial recovery, all of these things, in the U.S. stock market, this is getting priced in. And, next year will not be another 20% year. That's what this year was about, and just what last year's, massive valuation decline was about. But it's good news that we can hold this together, and we just have to avoid any shocks.
Stephen, thank you very much for being here. It's great to see you.
Thanks for having me.
Thank you. Folks, those jobs numbers much stronger than had been anticipated. 128,000. We've seen the Dow pick up sharply, and we're going to hand it over to Squawk on the Street right now so they can keep you up to date with what's happening.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at the New York Stock Exchange. Strong jobs number, not only for October at 128, but revisions up as well. Dow futures bounce more than 100. We'll wait to see if ISM in an hour can also rebound. Europe is green in the meantime. 10-year yield just north of 1.7. Our roadmap begins with that big beat for jobs. Stock futures jump as October gains far surpass expectations. Investors now eye another key read on manufacturing in the next hour.
Plus, streaming wars, Apple launching its TV Plus platform today. It's the latest volley in the original content battle between media and tech giants.
And Pinterest plummeting pre-market. Company stock now losing nearly a third of its value since peaking in August. And the growth strategy for Starbucks. CEO Kevin Johnson will join us first on CNBC this hour. Let's get to the jobs number. October payrolls well above expectations at 128K despite the GM strike. September and August, each with their own sharply upward revision. Unemployment goes up to 3.6. Wage growth 3% from a year ago. Jim, hard to find things to quibble about this month.
Look, I'm going to come back and say that you're going to have the beginning of cracks in manufacturing. I think there's still two economies. The 2/3 of the economy that is consumer is doing very well. The other third is not doing well, and I don't know how long we can go with only 2/3. I think pretty long. But if they shut down the Boeing 737 MAX, you're going to see very different numbers. And I just think that these numbers don't have that yet. There are some places that are cutting back production, but the consumer's strong. I don't know why anyone would say though that the Fed is done. The Fed will cut again if the manufacturing numbers get much worse.
Even with job numbers that are quite strong?
Yes.
And even with an unemployment rate of 3.6?
Yes.
So you're in the camp that manufacturing is the economy. When output of finished goods is...
Look at the lines. The line by line of manufacturing, it's not all GM. I am perfectly willing to admit that the U.S. economy is a consumer economy that is doing well. I'm trying to find an industrial company other than Honeywell and maybe United Technologies that said good things so far this quarter.
That's a good assignment. I'm thinking back myself.
I can't find it.
I mean, we're not including things like Microsoft, hardware-related
exactly,
tech.
not those.
No, but
no. The company that exports.
GE had a decent quarter.
Oh, yeah, well, that's called NABAF. That's not as bad as feared. It's NABAF.
No, absolutely.
Jason Govert says that NABAF is a great term.
Okay, I had not heard that one, but thank you for sharing that.
GE was NABAF.
Right.
It was not as bad as feared, meaning that they're still making windmills.
Yep.
They're tilting at windmills there. Yep. Did you know that?
Yes.
They're tilting
Yes, they may be. Don Quixote-esque, yes.
Either way, guys, we'll continue our conversation about jobs, but Fitbit is being acquired by Google. $2.1 billion valuation, $7.35 a share in cash, expected to close in 2020. Interesting comments here from James Park about how 12 years ago we set an audacious company vision to make the world healthier.
Right.
And Google is an ideal partner to advance our mission.
Well, look, that's good.
I mean, the people have known this was potentially going to happen, but the price is still above where the market. I mean, it's a decent premium to the current price, so you're going to watch that stock, given the $7.35 in cash, move up a good deal. It's about IP, right? I mean, that's what this is about.
Yeah, it's about
their
IP.
Intellectual property portfolio, I would think.
But,
it's a $2 billion, and that's up significantly from where the stock was prior to the first reports of Google's interest.
Why couldn't they close this ahead of when they reported?
I don't know.
I think that the area of Google that people are, or Alphabet that people have been concerned about is, when are we going to see something healthcare? When? And the answer is, I think, this is it. This is a competitor directly. This company, I would say, was made, some people would say, obsolete by the Apple Watch. So it's kind of interesting. Alphabet teams up with what some people think is a not a primary, but maybe a second tier company. Fitbit. I used to have James on all the time, and then I decided, you know what? If you miss your quarter every single time, it begins to be, let's say, there's no draft choice when you tank.
We remember when this was a hot stock.
It was hot. It was at 27.
Yeah.
But David, I'm not kidding. I don't mean to be too negative on someone, but they did not care about what the street thought of them. They said, we're the healthcare company of the future. And there are lots of companies you get a discount if you Fitbit and insurance. So it's good. This is going to be Verily. Maybe this is the way.
It never came anywhere near its early highs after going public.
Well, because it was a giant short squeeze.
In the 40s.
It was a giant short squeeze the whole time. But this is good. James Park has been making some money for people. Congratulations. But we now need to see Verily. We now need to see their healthcare moon, the other bets. The moon shots.
And we should point out $2 billion for a company like Google is what, about 3 days worth of cash flow? I mean,
it's like Beats for Apple, right?
Yeah, it's not a large amount of cash.
But it's for the people who watch our shows. Fitbit has been a stock I get called on, I don't know, every week when they.
Was that true?
Yeah, well, because it's they love $5, $6 stocks. I mean, if Alphabet were to split 1,000 times, they'd love Alphabet.
It's still halted, by the way. So when it isn't, it will show.
Do you think there's any other bidders, David?
I have no idea. I have to tell you, I have not focused on this for one moment.
That's wow. Okay, so yeah, there you go.
There's other things that have been taking up my time.
I would have said, Jim, I'm going to do some work. I'm going to come back.
No, it's got to have another zero.
You got like a casual Friday mind going. Hey, my mind's on casual mode.
Nobody's going to go up against Google, really.
All right. That's what why couldn't you said that the first time?
Okay, there.
Thank you.
You're welcome.
CEOs.
Yes. It does give us a chance. You mentioned competition with Apple in the watch space, and Apple's a big story today because they are upping the ante in the streaming wars. TV Plus is now available, launching today in over 100 countries and territories, $4.99 a month, featuring that lineup of original shows, movies, and documentaries. Comes as Disney Plus gets set to debut in a couple of weeks. Netflix, The Irishman, with its $160 million budget, up today.
Look for me in The Irishman.
What?
It's made on my block.
Really? Oh, that's
I did everything I could to try to sneak in. They did everything they could to try to not put me in.
Did he have a cameo?
I totally would have.
Mad Money on during the Hoffa era?
They make you young?
Probably at this point. I went to Giants. Remember, he was under the first Giants stadium, right?
Apparently.
The one when the Giants were a good team?
The Meadowlands.
Right.
Yes. Before the Metropolitan Stadium.
Before they became a bad team.
Yes.
It was Hoffa karma. But no, I mean, yeah, it was made on my street, and I'm like going like this every time. They said, will you get out of here? Please stop it.
There's a good discussion on Squawk a few minutes ago with Matt Blank, formerly of Showtime, that Apple, unlike its rivals, is not trying to resuscitate a legacy content library. That gives them a chance to try some new things.
Right.
Piece out this morning saying maybe they're going to put their toe in the water, gives them a sense of what to buy maybe down the road.
Well, I don't know. When I talked to Tim, I asked Tim directly about it, that being Tim Cook, the CEO.
Correct.
And it was, I, of course, blundered right into it. I said, look, how would you like to buy? Maybe there's a studio you want to buy or something. He said, no, we're not a catalog company, Jim. We're not buying a catalog. We're going to develop our own program.
And it's going to take a while, as it has for Netflix, as it has for Amazon, but they have done it. And it's certainly possible for Apple to do the same. And to the point Matt Blank was making that Carl mentioned, they're not defending a legacy business that is changing dramatically. So it's not like Disney, where they obviously, Mr. Iger has felt we have to go hard into direct-to-consumer, or like Warner Media, which is now unveiled HBO Max a couple of days ago and is obviously defending against the increase of cord cutting that we talk so often about. $14.99. Yeah.
Millennials eat Spam. They can't afford that. They eat Velveeta as of yesterday.
John Stankey, of course, CEO of Warner Media, and I did speak about this on Wednesday morning from the back lot at Warner Brothers. The price certainly is a key contention, but Stankey also did talk about, in some ways, you can connect it to Apple, the connection between the content and other offerings from these companies. Take a listen.
As we go forward on this, people aren't going to just buy content for content's sake. They're going to buy content because it's associated with other products and services. Whether it's Amazon, who chooses to offer marketplace incentives to have video,
Right.
Or it's AT&T that chooses to put great value with pay TV or connectivity or broadband associated with it. Those are other reasons for people to come into the product as well.
And in many ways, you could say the same about what Apple's thinking. It's connected to their ecosystem, to their devices. They're not defending a legacy business. At the same time, as I pointed out, there's not a lot of there yet.
Right, but this not defending legacy business is the Apple thing. I mean, if you look at the credit card, it's all about not defending a legacy business. They love greenfield, and they have a longer-term view. I like what they're doing because they're trying to reinvent. They're not just trying to buy the Paramount. They're not trying to buy the Paramount studio, Jack Ryan. They're not doing that. By the way, David, David, one of the great things about stocks I've learned, and this is really playing out with Viacom, they stop at zero.
Man, you are just brutal.
Jack Ryan needs to get in there, and then that is the equivalent of. It's not. I'm going to change it. It's now Venezuela. That is not Viacom.
AT&T paid what, $600 million for South Park? That was a Viacom
for 5 years.
Yeah, but nothing accrues to Viacom. It is like a chimney. It's a chimney you put money into. Have you seen the stock?
I think new lows, multi-year lows.
It's got it. Bob Backish can fix this. I'm telling you, when this deal combines, it can't
happen quickly enough for them.
It's going to be
can outperform the low synergy numbers, which seem to disturb people. Not to mention the low free cash flow prognostications that were in
It's not doing that badly.
No.
Why doesn't it go higher? Will you do that thing you did with Discovery where you got it from 18? Will you go see Malone? Go see Malone and get that stock from 21 to 30. Would you do that for me? Remember you did it for Discovery?
Yes, with
do it
Zaslav.
again.
Yeah, okay.
Do it again.
I'll put the word out. I'm happy
He's
to
the
talk
only
about
person who can save Viacom. I believe when that's December, early December, when they combine, the stock goes to 30.
It's going to be
30.
There are just a lot of questions and concerns about that business, as you know.
Stock sells at 5 times earnings.
Cutting about how much
steel mill
advertising. No, I know. About whether they can keep the NFL, how much it's going to cost them.
I asked Tim Cook about sports. I mean, they could own the SEC. They could own. You could amalgamate.
But they're not going to do it, right?
No, they're not.
No. Now it's interesting because HBO Max, they said in their presentation, and Stanky made clear in our interview as well, will go years out. There will be live. So that's news and sports.
That's good. And meanwhile, Frank Pelota at CNN did a nice piece where he added the cost of subscribing to Apple, Disney Plus, HBO Max, Hulu, Netflix, Amazon, and CBS All Access, $71 a month for all of those. That's not including Peacock, he said.
I get
That's less than a traditional cable bill.
Yes, I have the Fios skinny bundle. It's $51. I get a lot of good stuff from that.
Do you?
Yeah, I do.
I got a lot of them too. Hulu, what's on? I mean, I don't know. I guess my kids like the catalog on Hulu, right? That's
SNL for now.
Right, and they're watching.
My wife watches Hulu.
Really?
Yeah. When we come back after this commercial, I'll tell you some other things she watched. Oh, shoot, we're on.
Say again?
Who cares? We all watch all this stuff.
No, but the question about price is a key one. All right, $71 may not, but you're paying for your broadband connection as well. That's $60 right there, or whatever the number may be, because you're no longer taking video with it.
Right.
It does add up.
It's their largest, other than their rent, it's the millennials' largest thing.
Sure. That's because they spend so many hours working on it, watching. By the way, Needham's Laura Martin today says if Netflix doesn't cut prices next year, they lose 10 million subs.
Wow, that's a big number. There's this real belief that they're going to have to go to some sort of ad-supported number as well.
I just can't believe it, though.
They claim they're not going to, but she's, I think, amongst those who believe they're going to have to lower price and have an ad-supported service. By the way, Peacock, of course, owned by NBC, which will roll out, is going to be an ad-supported.
But okay, so your Apple bill just keeps going higher and higher and higher. And remember, they send it to you at 3:20 a.m. I mean, honestly, your Apple bill's going to... Think about all your Apple Care, Apple Backup, Apple Credit Card. I'm like Apple. And that adds up. That's why there's been some talk about Apple offering a bundle when you buy, which would be really good. I mean, I pay Apple a ton. I pay Comcast, Fios, the one down there that you like so much, the Charter thing. What is that thing? Altice, I pay them.
I have no idea what you're talking about. Altice, yes. That's another cable company in the metropolitan area.
Matisse. I pay Picasso. I pay Matisse. I pay Altice.
And you pay a wireless bill, too. Who
yes,
I
do.
That to?
Mine was $1,500 last month.
$1,500?
Yeah.
How many wireless bills do you pay?
I got a family plan that's like the like the Waltons. Wow. I know. I got to look at how that happened.
Fitbit is open for trade. Again, the 2.1 billion. What did we say? 735.
735 all cash. Yeah,
a share.
We'll close fairly quickly. One would expect 2020 is all they're saying at this point. They're not giving us any.
Do you think it reflects badly on Alphabet?
2020 reflects badly. Why? What would you say?
This is all they could come up with.
You don't think they're done? This is not. They're not done in this space.
I think that my hope is that when you go over the arc of that call, of the Alphabet call, you get to the other bet section. And it seems like they just lose $1 billion every. I mean, this may be the way. A lot of people in the healthcare business over there are not that happy. There's 2 different healthcare units. They haven't melded them. Maybe Park stays with it. How about that?
That's a good question. I don't know. Yeah.
How about that? Wouldn't that be something? Maybe he runs it. He's a very efficient guy. Humorless. Maybe the most humorless person I've ever interviewed. What's the matter? He's humorless. It's all right.
I really don't like humorless people. No offense to them.
Hope they. Not everybody can be Elon. You want Elon Musk?
You got to have a little funny, just a little.
No, Park's never. He's just a serious guy. James Park, 28 million active users. This is when you talk. Remember what Tim Cook says: "My legacy will be healthcare." And the numbers for when you talk to watch companies, their businesses are typically down 50% because of Apple. So this is Alphabet's first going up against Tim Cook.
He does say he couldn't be more excited for what lies ahead. It does make it sound like his quote that he's going to stay at the company some period of time, but we don't know the answer.
He's never excited about anything.
By the way, went public at 20, so you're looking at a discount of more than 60% from
a suboptimal situation.
When we come back, we'll talk about Starbucks today, outperforming the S&P so far this year, up more than 30%. CEO Kevin Johnson will tell us how the company's digital strategy is sparking sales growth in the U.S. and China after their earnings earlier in the week. Take another look at the pre-market. The jobs number, if you missed it, 128K, well above the estimates of 90K, and revisions were good. Futures reflecting that. We're back in a moment.
For farmers here,
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more. It's another Friday afternoon. Yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and relax with 365 beautiful beaches.
So what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
It's hard to find a children's gift which doesn't have a short shelf life. They'll eat all the chocolates in 5 minutes, finish their video games by the end of the week, and grow out of their trainers before you know it. So instead of buying them something just for Christmas, buy them something that's for life. Premium bonds from NS&I. Every month they'll have the chance to win cash prizes. And now you can buy premium bonds for any child. Start their savings journey from just £25. Search Gift Premium Bonds to find out more.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi. Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
What a morning in the bond pits. The jobs number and ISM on the way. Let's get to Rick Santelli. Hey, Rick.
Yes, it's going to be so fascinating, Carl, because obviously that jobs number, even GM distorted, was really solid. A couple of things we didn't even hit on. There was a subtle but very important positive revision to year-over-year earnings. Last month we thought they were 2.9. They moved to 3%. Now, even that 1/10, psychologically, that's a positive. 95,000 jobs over the last couple months revised to the upside. How did it all turn out? Well, let's look at some one-week charts, shall we? Look at a 2-year note yield. And on the right side, of course, is today. Look at that volatility. We're not regaining all the yield increase from the positive number, but most of it. And Carl's right. The ISM is going to be the second punch here, and we'll have to see if it's a good one or a bad one. Look at 1 week of 10s. Up 1 on the day, down 10 on the week. 2s are down 7 on the week. There's some of your flattening. And what's interesting, look at 10s to 2s for 1 week. So basically, we're trading a quarter of the range like float. 20, 15, we're bouncing back and forth. Virtually, it was 2 or 3 when the Fed met at its last meeting prior to this. The point is, yesterday and the day before, we're flattening with yields moving down, which means prices moving up. We'll call that a bull flattener. But today, it's the exact opposite, and we're flattening on the bear camp as rates move higher and face value is moving lower. But at the end result, the Fed most likely didn't expect this number, and if ISM doesn't go poorly, I would see a steepening as long maturity yields should move higher more aggressively. Look at 1 week of boons. The interesting thing about boons is that we spent some time right around the minus high 30s. What a huge difference from their all-time low yield close at minus 71. Some give back there, but today is the first official day, of course, of Christine Lagarde, and things are going to be changing. Finally, a 1 week of the dollar index. October was unkind to the dollar index. It is trying to take a stand here, although the positive numbers are small. Carl, Jim, David, back to you.
All right, Rick, we'll see you in 40 minutes for ISM. We will get Kramer's Matt Dash, countdown to the opening bell. Lots to talk about with Starbucks' Kevin Johnson in the First on CNBC interview in just a few moments. Futures look good on this Friday. Don't go anywhere.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi. Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
All right, Fitbit getting bought by Google this morning. Jim mentions the consumer interest in that name. There's a look at a one-week chart, 67% gain. Well, opening bell is next, and our interview with Starbucks' Kevin Johnson, just minutes away.
Options action. Strategies from the street's top trader.
The B&Q 3-for-2 offer is now on, including an unmissable 3-for-2 on tiles and flooring, like real wood and laminate. So hurry to B&Q. You can do it when you're 3-for-2 it. Excludes cut-to-measure flooring, flooring accessories, and underlay. Every third item per single transaction in descending price order free. Offer ends November 3rd. See DIY.com.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Far wing, elevates, triple bucket!
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the right.
Search NBA today to start listening.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
All right, we got 2 minutes or so before we get to an opening bell. Last trading session of the week, by the way, if you like to keep track of the days of the week. And this is the last Mad Dash. What do we got?
Well, I said the other day that Grubhub has been the biggest disaster in the quarter. Well, Arista Networks, is going to rival that, ANET. They're talking directly about a major pause in spending by a cloud titan. JP Morgan says it's Facebook. Now, the confusing thing here is that this is the only company that has seen a major pause in cloud spending. We didn't see it in Intel. We didn't see it. If you go back over and I said AMD would go up because Lisa Su's doing so well, they didn't see it.
Sometimes I think people know. What do they do? What does Arista Networks do?
They make the boxes, white boxes inside data centers.
Okay, thank you.
And what happens here is that this call was a rebellion call.
Okay.
It was a call where people were saying, listen, I don't see it. What are you?
So we're not seeing a slowdown in spending from the other cloud providers.
But the fact is, look, she's seeing a slowdown. She's the biggest. And she's very good. I'm not trying to minimize that they're that they're a bad company. They're a great company, and they've been one of the great performers. But without a doubt, this conference call made people feel that something is very wrong.
Could they be? Is it because it'd be an early sign? Could it be? Would they in some way see the demand slowing prior to other providers?
Jay Shri-Ulal, who used to be at Cisco, I think she would say that look out for 2020 spending. I don't want to put words in her mouth because she's done such a fabulous job. But this was a very jarring call. Kind of broke down in the middle, too, and people were saying, what the heck? This was a what the heck call.
Let's get the opening bell here. S&P 500 and the CNBC Real-Time Exchange and the big board. It's the March of Dimes, highlighting Prematurity Infant Awareness Month. After NASDAQ, Bangji Network Group, a property technology company in China. Jim, you mentioned some of the blow-ups of the week. The Wayfairs, the Grubhubs, Pinterest. We didn't get to in the first half hour.
Pinterest was such... Jane Penner, the IR, their person who used to work with me, they're very... I do not take this wrong. They are a very sweet company. And what I mean is that they care a lot about the pinners. They've done a couple of reorganizations to make the site better. It has made it so it's really hard to figure out how well it's doing. They've never played the game. Todd Morgenfeld and Ben Silberman told me when I went out there to see them, we're not going to do you, Pod Jim. We are not going to under-promise and then over-deliver. That's not our style. Well, it's not. And the analysts, I think, keep thinking, you know what? It's all, don't worry, they've got something under the vest. They got a whole card that's good. No, they did what they said they were going to do, which is continue to work to make the site better. And the conclusion of the analysis is that they're out, that they're done. Other than international, everybody who's a pinner is a pinner.
So what happened? Or monthly average users was below.
It just wasn't up that much.
Average revenue per user,
not great.
Was below
estimates, but not below. So that's what's important.
Right.
See, people have to understand that there are two kinds of below. There's below estimates, and then there's below what you say.
Right.
And they did what they were going to say, and they are very, I shouldn't have said sweet. They're very earnest. And
well, then, Jim, you're not exactly explaining why this company is losing almost a quarter of its market value.
Well, because people expected it. You bought it for the growth, not for EBITDA positive adjusted. You bought it for growth. But people kind of felt, you know what, they can just put the pedal down. We don't really care about how much money they make. We want incredible growth. And it turned out that they were, a prudent company that did the number that they said they did. But people wanted more than that. And this is what happens when you make expectations that are realistic and you do that as opposed to blowing them away.
This is yet another of the IPO class of 2019
it's going to be known as the worst.
That is so far now below its opening price.
Well, and some of the price target cuts on Wayfair today, Barabin goes from 100 to 65.
Wayfair was always one of those companies. There's an example where they said, listen, we're going to grow really, really fast, but Amazon doesn't like them.
That's exactly right.
Amazon doesn't like them.
Jim Chanos, who famously called for a short on Grub, tells the FT today that October is one of his best months ever after PG&E and Grub.
Well, good for him because he does a lot of work. And Grub was one of these companies that kept telling you we're an ecosystem. This ecosystem is a term. There are not many companies that are in a real ecosystem. There are a lot of what I would call poser ecosystems. Grubhub turned out to be a pose. David, I'm over here talking. Grub turned out to be a poser ecosystem.
Yes.
Yes.
So it was a poser ecosystem, and it has promiscuous customers.
Yeah, that was one of the.
I'm never going to get past that one.
That call was the call.
Who made the decision? Who's writing these press releases?
The comms department has some experience.
Are you kidding me?
That was a call from hell, and the release was from hell, and they should go to where that was bad.
But as you can see here, breadth looks really good. We're above 30.50, Jim. A lot of people have talked about that number as being a key reflection of where we are on trade and earnings.
Well, look, we've had a couple quarters. We had look, I don't think people know that Apple's a gigantic, Facebook's a gigantic company. That Facebook conference call was so good, and it basically said, "Listen, we are doing much better than you think." Now, of course, Zuckerberg was completely consumed by the First Amendment and political ads. I know that this is going to sound like I am a heartless person, that I'm just a dollar sign represented by a man, but Facebook has to start talking about how good its business is and talk less about whether they should take ads that say that President Trump is really, I don't know, I don't want to go there, but there is just a disconnect between what the company's saying and what the company's doing. The company's doing much better than what it's saying. It's really mired in the dialogue of, well, should we run these kinds of ads?
Wanted to hit Alibaba, which we haven't.
Yeah, what
don't
the hell,
talk about
David?
it. Excuse me.
I'm sorry. I was paying attention to you as opposed to you.
Well, when you were talking about Grubhub, I was trying to access my Alibaba information.
Alibaba was down 2, then it was up 3,
yes.
then it was down 4,
the call,
and now it's up 2.
The call apparently went well. It was this morning, and I talked to a couple of people, or texted with a couple of people who were on it.
Yeah.
And at least their impression is strong.
Mm-hmm.
Strong numbers.
Okay.
You got 37% revenue growth in the core marketplace. It is, core commerce revenue up 40% year over year. It's still growing very quickly. Adjusted EBITDA 39%. Total revenue, again, up 40%. 693 million annual active customers. And so it is responding positively. And apparently on the call, they did a fairly good job in terms of at least some dealing with some of the key questions. That's what we can tell you right now. Well, it continues to move at a very rapid pace, obviously. We followed it. The growth of the Chinese consumer. Are they starting to weaken has been a key question. This has been in some ways a proxy for the trade fight to a certain extent. No signs, at least, of weakening amongst their customer base at this point.
Estee Lauder yesterday, China was a standout, not Hong Kong because of the protests. China was very, very strong. A lot of the headlines were dead wrong about Estee Lauder. Actually, it was a decent quarter. They did raise, but a lot of our companies are selling a lot on T-Mobile and then on Tmall. A lot of money being spent on Tmall.
That's the branded platform. Taobao is one of the smaller merchants.
It's very important that the consumer in China is strong, the industrial is not. The consumer in the United States is strong, the industrial is not, because the industrial sections are at war with each other.
But China is much more of an industrial manufacturing-led economy, right? So one would expect the consumer would start to weaken.
If they had a labor department, I think you'd see that their numbers are worse than ours.
Well, the Caixin PMI did come in 51.7, best since February of 17.
I don't trust that.
No one trusts that number.
No.
That's true. No one does.
No, look, I had Columbia Sportswear on last night. They have a big China business, and they've been saying, look, they had to rate. China's bad for them. China's down for them. So there's expensive luxury good, but then China good luxury good for Estee Lauder. It's a very hard read.
You want to bring in Kevin?
Oh, my. You know what? We should go to Kevin Johnson.
Let's do it. Let's do it.
Okay. Ooh. Cold brew, which is just incredible for the afternoon day part, by the way, and China, the two big growth drivers for Starbucks. And joining us now, man who just came back from Japan, Starbucks CEO Kevin Johnson. Kevin, great to see you.
Good morning, guys. How are you?
We are good, and I think that you're doing well. I was surprised you happened to report on a day where the market was bad. I thought your stock should have been up 3. Let's talk about, we were just talking about Alibaba, which we know you have a great relationship, Kevin. China looks like they are far more developed digitally than America, and you have been a star. You are a technology genius from the old days. Talk about how great China was, because a year ago, China, people were doubting you.
Well, we had a very solid quarter, and it really capped off a transformative year for Starbucks. I think we're well positioned. Certainly, China was a big part of that, Jim. And you think about the digital savvy of the Chinese consumer. They adopt and they embrace technology at a very rapid rate. Our China digital partnership with Alibaba really unlocked a wide range of new opportunities for us. We launched Starbucks Delivers in China, our mobile order for pickup. Just those two alone were 10% of our sales mix in China. And, we posted a 5% comp with 2% growth in traffic. So the digital strategy in China is working. 10 million active rewards members, 45% growth in those rewards members. So really a strong performance in China.
Now, in the United States, even not that long ago, the investment community, Kevin, really felt that you couldn't get United States going, talking about like a 4% number. Talk about the 2-year comp, which is what really matters, and how it accelerated and why it accelerated in the United States.
Yeah, well, we posted a 6% comp with 3% growth in traffic this quarter. When you look at the 2-year comp, it accelerated to 10%. So, many were skeptical that we posted a strong 4% comp a year ago, but then we posted a 6 on top of that. Now, the growth at scale agenda we're executing against really is all about focusing on the right things and then executing with discipline. In the U.S., it's all been about elevating the customer experience in our stores, driving beverage innovation, and expanding digital customer relationships. And on all 3 of those dimensions, we've executed with discipline. Beverage innovation. We now have Nitro in all of our stores in the U.S. Our innovation on the cold beverage platforms, especially things like cold brew. We had pumpkin cream cold brew, Nitro, but also our iced macchiato. Our cloud macchiato beverage platform, refreshers, shaken teas. So, we've really focused on that beverage innovation that has helped us, and we grew in every day part in the U.S.
Kevin, on the call, you chose to take a bit of time to focus investors on your strategy when it comes to artificial intelligence. Something we talk about a lot here, of course, the growth of AI. Give people a sense here in terms of how you see it helping your business, potentially, eventually, I would assume as well, contributing to margin expansion.
Yeah, well, clearly we've been focused on the digital flywheel and how that customer connection is so important. But over this last year, we've really spun up our focus on artificial intelligence around an initiative that we call Deep Brew. And Deep Brew started really by using artificial intelligence for the personalized offers that we make on our mobile app. But now we're using Deep Brew in a wider range of scenarios. For example, Deep Brew is now doing artificial intelligence to really predict how many store partners we ought to have by day part in every one of our stores. By doing that, it is helping us unlock growth because we're staffed to meet customer demand. Deep Brew is now forecasting inventory replenishment by store. And that is helping partners ensure they have all the items they need to serve customers, and they don't have to spend their time doing that inventory and placing those orders. So Deep Brew is actually freeing up partner time so that they can spend more of that time focused on the customer. Basically, Deep Brew is automating those administrative tasks, freeing up our partners to spend more time with customers, and that has led to an all-time high in customer connections. Now, when customer connection scores are at an all-time high, that's growing our traffic. So Deep Brew really is at the center of helping our partners better serve customers, and it is a key fuel for our growth looking forward.
Hey, Kevin, it's Carl. In QSR, breakfast is getting so much attention, either adding to the menu at McDonald's or Wendy's, what have you. I wonder, is there pressure internally to expand food, at least in the morning?
Well, for us, we're a beverage-first company. I mean, we differentiate on the fact that our Starbucks partners handcraft each and every beverage personally for our customers, and then we attach food. And, we saw good growth in all-day parts, and especially in our morning day part. So I think the beverage platform is helping, but part of what's helping in the morning day part is we're able to attach our breakfast sandwiches, the sous vide egg bites, and a wide range of food items that resonate with our customers. So, food plays an important role as an attach to the beverage, and we're seeing good performance in that morning day part.
In a couple of days, Kevin, actually 10, it's Veterans Day. I think that your company is the one that's maybe the most committed to hiring vets. There are also, I think there's a labor shortage in this country. Could you talk about how you can find enough people to staff Starbucks and what you've done to hire people who've come back from the wars?
Well, our focus on veterans and military spouses has been something we've been doing for several years. We set a goal for ourselves to hire 25,000 veterans and military spouses. We surpassed that goal 3 years ahead of schedule. And we now are on a run rate. We hire 5,000 veterans and military spouses every year. And they are phenomenal Starbucks partners, and we're very proud to be associated with our veterans and helping support them, as they come back from oftentimes multiple tours of duty. So that's been an important part of it. And they are fantastic partners, and they make us a better company.
I want to talk for a moment about something that Mark Benioff has taught us, which is that business is the greatest platform for change. I think, your company uniquely has been an ambassador to the United States. What's it like being, for the United States, what's it like being an ambassador for the United States to China right now?
Jim, well, we just surpassed 4,100 stores in China. We have 55,000 Starbucks partners who proudly wear the green apron in China. We've been in China for 20 years now. And, for us, it's all been about being in that market, entering that market with respect for the Chinese culture, and doing the right things to, beyond the pursuit of profit. For example, we introduced a healthcare benefit for our partners in China to take care of their aging parents. And that's a one-of-a-kind insurance program that we put together in partnership in China. The whole foundation of Starbucks is built on the fact that we believe that the pursuit of profit is not in conflict with the pursuit of doing good. And, in many ways, our purpose and our reason for being goes far beyond the pursuit of profit. So when we're in China, every one of those stores is a part of a community. And we do work to service that community and be a part of that community, take care of our partners, and show up in a way that really focuses on doing good in every community that we are a part of.
Yeah, Kevin, the reason why I'm going down this path is business is under assault in our country. I've never seen anything like it in my lifetime. And the companies like you are doing things that make me feel that business being under assault is a huge mistake, given the fact that, again, it's a great platform for change. I happened to be in Mexico recently, and, I saw orange aprons, and I said, maybe they're wearing the wrong color. That's not true, right?
Well, that's not true. Yeah, I know you shared a great photograph of you visiting one of our stores in Mexico. And in the month of October, we have a great licensed partner, Alsea, who runs our Starbucks stores throughout Latin America. And Alberto Torrado and his team do a fantastic thing in the month of October. They have a very special cause that they orient to. So, every peso that's spent at Starbucks and their other brands that they run, they donate money to help feed the hungry and take care of children, take care of their communities. And so they put on an orange apron to help amplify the fact that they are focused on serving their communities and contributing money to those communities and the people in need. And so we're proud to be, to be a part of what we do in Mexico and in every community around the world.
Kevin, hopping onto Jim's question about China and being an ambassador for the U.S. in a way, and we do see pictures in Hong Kong, and we know Hong Kong's a mess, but we see pictures of broken glass at Starbucks storefronts. How should investors view that?
Well, look, obviously we monitor that closely, and, I just say that my priority is focusing on the safety and security of our partners. And, certainly, we're in 81 markets around the world, and, we deal with geopolitical issues all the time. But my focus and my priority is really focusing on the safety and security of our partners.
Kevin, one last question. I know we got to go. I'm curious to know what you're seeing about the delivery business. There was a debacle this week where Grubhub was saying this business is maybe, I could argue, say, isn't a business. The fact that their profit margins are so thin, is that a win for Starbucks?
Well, I look at the delivery business. China is a very different market than the U.S. In China, we saw 7% of our total sales volume came from delivery. And in the U.S., it's far less than 1%. And part of that, I think, is there's a very different cost structure in China than there is in the U.S. And, I think that delivery will evolve in the U.S., but right now, I think unless you have a very high ticket, the delivery costs, are prohibitive to the consumer. And so, people are having to invest. Either merchants are going to have to accept lower margins, or delivery companies are going to have to figure out a different business model that enables that price to be a lower price to the consumer. For us, we're pleased with our partnership with Uber Eats, but it's very early days in the U.S., whereas I see, delivery is much more mature in China and is embraced, by the Chinese consumer much more than it is here in the United States.
Kevin, it's really great to talk to you. That's Kevin Johnson, CEO of Starbucks. Good to see you, sir. Thank you very much.
Thanks, guys.
When we come back this morning, Pulitzer Prize-winning New York Times columnist Jim Stewart will get his take on Apple TV Plus, on the streaming wars at large. Record high for the S&P, 3055, and the first record high for the NASDAQ since July. Don't go anywhere.
The Bond Report is...
It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books. The celebration is on. The Washington Nationals are the world champions.
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
20-year chart of Apple. You got to measure the gains in the thousands of percent, just burying the S&P over that time period. 251, new all-time high today, and it's Tim Cook's birthday.
Happy birthday, Tim.
We're back in a minute.
It's a madhouse. They buy things, and I'm wondering, where did this even come from?
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboards, but he stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line, with both teams ranked in the top 10. Will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Far wing elevates. Triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
Jim, stop trading.
First, I didn't know my wife, Lisa, has her same birthday as Tim. So happy birthday, Lisa. Corvo, QRVO, that is giving us hope for 5G. It's up 14. It was a fantastic conference call. Made me feel really terrific about tech. And it's people who are down and feeling low, read the Corvo conference call because, boy, we're not left out by 5G. We're a leader. We're a leader, David.
Got it. I was singing the Simon & Garfunkel song in my head with the when you're down and feeling low, you had me there.
Dave, no man's an
What's
so anyways,
tonight?
it's really good. And I'm going to do my game plan tonight. And I'm excited by Corvo because I know that China unveiled its 5G. Dom Chu doing great stuff today. And to me, we're part of it. So let's not forget we actually know what we're doing.
Jim, we'll see you tonight. Important show, 6 p.m. with the S&P 30, 57, and ISM on the way. Don't go anywhere.
Ski moguls. Whatever job you're searching for, you can find it on LinkedIn. First jobs, flexible jobs, work from home on a Friday jobs, advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, lunch in Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways, with flights and 7 nights hotel from just £349 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day,
add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money, and times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
There's It's a Friday Afternoon happy. Listening to Headbangers happy. There's no traffic on the M1 happy. Kid-free this weekend happy. There's only 54 days until Christmas happy. It's almost lunchtime happy. Getting your tyres changed over your lunch break with a free coffee happy. You get that kind of happy from QuickFit in Watford. Book online now at quickfit.com and drive away happy. Terms and conditions apply.
NFL fans, the action continues this weekend on TuneIn Premium.
10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern, and closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Good Friday morning. Welcome back to Squawk on the Street. I'm Carl Quintanilla with David Faber, Morgan Brennan, who's in for Sarah Eisen. ISM, let's get to Santelli.
All right, here we go, and it is going to be maybe the most important number of the day. 48.3, 48.3. Well, it's better than the 47.8 in the rearview mirror, and that, of course, was the lowest level going back to June of 2009. So the comp on this is rather easy. We just go back to August when it was 49.1. But it is an improvement nonetheless. Let's go through some of the internals, shall we? The employment index rose also from 46.3 to 47.7. If we look at the prices paid component, prices paid moved from 49.7 down to 45.5. Finally, new orders, not quite getting up to 50, 49.1, but a nice jump from 47.3. We also actually had another number out, September construction spending, and that's always important. And it's a whopper of a move, actually, up half of 1%. That's rather shocking. Up half of 1% is the best number going back to April, but there is a fly in the ointment. Last month's 1/10 now turns negative to minus 0.3. But I have to say that yields actually haven't moved a little bit lower. So ISM is taken as a negative, and I'm sure under 50 isn't building up psychology, but it still is a sequential improvement. Morgan, back to you.
Rick Santelli, thank you. Let's get over to Steve Wiesman now with his thoughts on today's data. Steve, we had that better than expected jobs number this morning. Yeah. ISM manufacturing, third straight month of contraction, but also seems to be a little better than feared.
I think that's the way to think about it, Morgan. It's spot on, actually. It's still contracting, but it's contracting faster to the downside. New orders, production, and employment were all contracting. Supplier deliveries were faster from slower, and backlog was contracting. That's actually a negative, believe it or not. I just want to see if there's any commentary here about trade. Comments from the panel reflect an improvement from the prior month, but sentiment remains cautious, rather more cautious than optimistic. We'll just do that right there. So it's not getting worse. And I think the way the market is thinking about this right now, looking at how it's trading, it expected this number to be a little bit better, and it was a little bit better, just not as much improvement as they expected. But a potential game changer of a jobs report that really makes you rethink just how much the recent slowdown in activity is hurting the jobs market. Here are the numbers. Non-farm payroll was 128. We were looking for 75,000. But those big August, September revisions, plus almost 100,000 additional jobs. Average hourly wages not really accelerating very much, but pretty decent, up 0.2%. The unemployment rate ticked up just to 3.6%, and labor force participation 63.3. Let's look at where the jobs were. Leisure hospitality, that's a strong number, 61,000. Education, we always see that, and health services up 39,000. Wholesale trade 10.8. But government and manufacturing both down. And this is where we put an asterisk on the jobs report. We're going to do a little math here. The actual number was 128, okay? GM strike, 41.6, so we're going to add that back because that's not happening again. We took off another 17 for the census workers being fired. We'll add that back. So the number could have been, and I say could have been, upwards of 190 without those two individual one-off events. The new strength can be seen in the revisions. What was a 3-month job average of 157? Well, now it's 176. Not too shabby. It's still down from last year where it was north of 240,000, but not as much and not careening downward. All of this making Boston Fed President Eric Rosengren's dissent from the recent rate cut look not too bad. Rosengren saying in his dissent, fiscal and monetary policy are already accommodative with labor markets tight, inflation near target, real GDP growing around estimates of its potential, and a moderation of the risks surrounding trade and Brexit. I believe further accommodation is not needed. Well, the pause from the Fed looks pretty good. I'm just going to update this while I'm talking here. The probability of a rate cut going into the meeting was, before it was a 30 or 25% for December. Now it's down below 17%. Another cut isn't being priced in until March or April of next year, Carl.
All right, Steve, thanks. A lot of information that investors are trying to process right now. Joining us this morning, Grant Thornton Chief Economist Diane Swank, Wells Fargo Securities Head of Equity Strategy Christopher Harvey as well. Happy Friday, guys. Good to see you both. Diane, your piece earlier in the week making the case for a Fed pause this week. Does today's data, even though we didn't get it on Wednesday, do you think now's the time?
It is certainly defensible that the Fed could have paused, but they didn't, so we have it now. I think what's important, too, though, is in the composition. The dirt is always in the details. The upward revisions really came from leisure and hospitality, most notably food services, and retail. Retail had been careening downward all through the summer, really on a downward trend. It peaked in 2017, retail employment, but that actually was revised up over the last couple months along with the food services. The food services also interesting because we know from Yelp data, from people searching and where they're going and how they're rating things, they've moved downscale. They've moved to lower cost restaurants and to fast food restaurants, which could be accounting for some of that hiring. What is a little bit surprising in the data, the manufacturing data, we did not lose as much as we thought from GM because we saw GM's competitors pick up production and manufacturing outside of the vehicle sector add jobs. So I think that's important. On the other side of it, though, those service sector workers are seeing a deceleration in wage growth. They're not seeing increasing wages out there as rapidly as they had been, and they're getting less hours worked. Their hours are being cut back a bit. So as many of these service providers have had to pay more for workers, now it seems that they're willing to cut back on the hours that they have them and not have them pay overtime or, in some cases, cross a threshold into benefits.
Right. But all of those things, Christopher, are better than layoffs, right? Layoffs are expensive.
Layoffs are expensive. Yeah. What we're seeing from the claims numbers, claims have gone sideways. What I think the bigger picture, the bigger issue that we have is the fears are really, it's not that they're unfounded, they were just too great. Whether we're looking at earnings, whether we're looking at the job picture, whether we're looking at the economy. And that's what we're beginning to see. And that's why the stock market's walking higher.
But does that mean record highs are justified then?
I think record highs are justified. You have low rates, you have an accommodative Fed, you have reasonable valuation, no inflation, and people are positioned very risk averse. What's been leading the way? Your bond proxies, your low vol.
Diane, let's dig into that a little bit more because it was just a couple weeks ago that we were having these discussions about recession fears, and now it seems like the discussion has shifted, and you can certainly continue to make that argument looking at the reports we got this morning towards a bottoming out of the slowing we've seen in economic growth, at least here in the U.S. Is that how you see it?
We are seeing it for now. I actually think the fourth quarter will be worse than the third quarter. In overall, right now it's adding up to be worse. There is some slowdown in momentum, not a dangerous slowdown in momentum, but a slowdown in momentum. What's critical is, what have we taken off the table? We've taken off the table the escalation of tariffs for the moment. And as long as that stays in the background, we can handle the tariffs we have. Much on a recession hinges on whether or not we up the ante on a trade war or keep things a little, the de-escalation that we've seen out there. We can handle the cost of tariffs, the uncertainty compounds, but that alone does not get us into recession unless we up the ante on a trade war with China again. And that's really what the recession call hinges on, is purely on that part of the trade, which the Fed also cited as one of the abating risks for the moment.
Are we going to start seeing macro notes titled soft landing? Or is trade too much? Is there too much optionality in Trump's approach to trade to write that piece?
You'll probably hear the phrase Goldilocks a few times. That's not our approach. Our belief is this economy, 3 yards in a cloud of dust. It's not real pretty, but it's very robust. We continue just to rumble along. And again, a lot of what we've been dealing with is just too much fear, and now we're getting the facts. And the facts are okay. The other thing that you're doing is we're dealing with uncertainty. We're taking away more uncertainty. We're taking away more tail risk, whether it's trade and tariff or whether it's Brexit.
How long would it take then for businesses to say, all right, we see a runway, we'll commit to CapEx again?
So I think what they need to do is, again, it gets back to uncertainty. Do they have a lay of the land? Do they believe that we have a détente for the next 6 to 12 months? And if they do, they can start planning. And I think we're beginning to see the start of that.
Diane, I wonder if we're talking enough about the pain in the oil patch that's emerging here in the U.S. We've seen rig counts come down. We've seen signs, certainly a number of oil field services companies coming out and saying that they're seeing continued slowdown in shale production. When you talk about manufacturing and the industrial part of the U.S. economy, I mean, that, as we saw back in 2015, 2016, oil and energy is very closely linked with the broader industrial part of the economy. Right. How much has that been, I guess, weighing on or clouding the data around things like ISM manufacturing?
Well, actually, some of the oil data shows up in some of the service sectors, so it depends on which ones you're looking at. Yep. But the mining data actually was down in this report, and we know that their shale bankruptcies are up. We know low oil prices actually help the manufacturing sector, so we've decoupled a little bit where it's helping on costs and helping to dampen the blow of higher tariffs and wages. So that's good news for the manufacturing sector, bad news for the mining sector. And the mining sector, I think, is going to be a big drag. Now, remember, the mining sector is also a big swing factor on investment in the U.S. That hasn't been what's been the primary drag so far, but it could add to the drag we see until we see the veil lift entirely on the trade picture. And until we actually get more than just a détente, we actually get a deal with China, I think that's very difficult to do.
So, Christopher, I mean, with markets at record highs right now, and the conversation we're having, where should investors be putting their money?
So what we've been telling investors is you want to barbell your portfolio. You want high growth, but you will also want to add some cyclicality. We upgraded the banks in early September. We also like the cap good space and parts of the semi space. So you need to balance risk and reward.
But if you've ridden home builders and healthcare for the past 3 months, time to ring the register?
I think you want to ring the register on your bond proxies, your low vol, and you have some of that in those sectors, but really it's more on your bond proxies.
All right. Fascinating set of data today, guys. Thanks.
Thank you.
For helping us usher in the weekend. Diane Swank and Christopher, thanks.
Meantime, Google parent company Alphabet buying Fitbit this morning, a deal valued around $2.1 billion. Our John Fort joins us now with more. John, your takeaway from this deal, which we had gotten some reports could be coming.
Yeah, we had an idea that this could be coming, and make no mistake, Fitbit is going to be part of Google, not some floating Alphabet component just out there alongside Google. The idea is for this to be part of Google's devices business under Rick Osterloh. He's quoted in the press release here, but let's not fool ourselves about what this is really about. This is not about taking on Apple in wearables. I mean, case in point, you take a look at just the numbers. Fitbit in 2 years has seen its revenue drop about 25%, while Apple in its wearable home and accessories categories over 2 years has seen revenue double roughly to about $25 billion. Fitbit is at about $1.5 billion. So they're not even in the same category. What this is really about for Google, I think, is shoring up the Android ecosystem that it's got. Look at IDC's numbers released earlier this year, just at wearables in general. Apple is #1 in wearables. The Apple Watch is 2/3 of the smartwatch category. Behind Apple at #2, you've got Xiaomi, which is growing fast. You got Huawei at #3, which is growing really fast. #4, you've got Fitbit, which hasn't been growing that fast, but has been kind of hanging in there. So as part of Google, Fitbit gets a chance to sort of rationalize its costs and trying to do hardware in a kind of challenging tariff environment, no question. Gets a chance to really have some marketing oomph behind it that would have been really difficult otherwise. It gets to sit alongside some Google devices. Just a couple weeks ago, we were talking about Google's new devices for home wearables that are out. It gets to be part of that portfolio. And Google really doesn't want to lose control of Android in the era of of artificial intelligence, home speakers, and wearables. So it's taking on challenges not only from Huawei and from Xiaomi, but also from Amazon, which is releasing its own wearables. This is Google's way of keeping that all together.
You know, John, we were having this conversation on Fort Knox the other day. I'm going to bring it up again. GoPro shares are up 4.5% right now in sympathy with Fitbit. We've seen both of these companies, even though they have different businesses, where they're both hardware businesses that have fallen hard since their IPOs. We've seen them trade together largely. Do you think there's any read-through to be had here on GoPro and the future of that company?
Nope. I don't. Here's why. GoPros aren't really that wearable. And what's arisen in the era of not only wearables but home products is things like your Ring doorbells and your in-home cameras that are more for keeping track of things going on around the house, dealing with packages showing up, that kind of thing. GoPro really hasn't played there. Their expansion play was more in the drone category, and they backed away from that. So it's really unclear how GoPro becomes this same sort of smartphone ecosystem play, because the market seems to be moving in a different direction.
Yeah, they have one similarity. They both were down dramatically from those early, heady days when they went public, right, John?
True. Both a bargain.
Yeah. John, thanks. When we come back right here, Mark Zuckerberg fights back. The Facebook CEO taking a swipe at critic Aaron Sorkin about political ads using his own words. We're going to have the details. And later we're going to speak to Goldman's chief economist on today's record-setting rally. More Squawk in the Street is coming right back.
Through the AT&T network, edge-to-edge intelligence.
It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
In cinemas November 15. So you're going to build a car to beat Ferrari? With a Ford. Correct. Get ready for Le Mans 66. I hate guys like us because we're different. Starring Matt Damon and Christian Bale. What are they doing? Making your car go faster. That's more like it! Based on the incredible true story. You got a plan? It's high risk. Of Ford versus Ferrari.
No, I thought the whole point was to win the damned race.
Le Mans 66. Hit it. In cinemas and IMAX November 15.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status. Damage charges may apply. No ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services. Visit audi.co.uk.
Mark Zuckerberg fighting back against screenwriter Aaron Sorkin's criticism of his stance on political ads on the Facebook platform by quoting Sorkin's own words from the movie American President, saying, quote, "America isn't easy. America is advanced citizenship." Joining us now, Pulitzer Prize-winning New York Times columnist, author of Deep State, Trump, the FBI, and the Rule of Law, Jim Stewart. How do you come down in this debate about Zuckerberg saying it's free speech, we can let political ads on the platform, that even though they may contain vast inaccuracies, it's okay, versus Sorkin who says, no, you can't?
Well, I've been giving this a lot of thought since it first cropped up a couple of weeks ago. We talked about it, but now Twitter has come in and said, well, we're just not going to run political ads. And And they're both in their own way, I think, trying to punt this issue. I mean, Facebook is saying, well, we're not going to police it. Twitter says, we're not going to do it at all. And it seems to me there's got to be a middle ground here. That those are simplistic, those are bright line policies. At least Facebook has the advantage of not giving up a revenue stream. But I think there is a middle way. You know, we're all in the fact business. And one thing I've discovered about the internet is the minute I write something, it goes online. Boom, the crowdsourcing on that is unbelievable. If there's an error, I don't care how trivial, somebody nails it within 5 or 10 minutes of it going up there.
Yeah.
And if you read the Times Online, there are a lot of those little things at the bottom where there is a quote-unquote correction. Now, usually it's a demonstrable fact, like you misspell somebody's name, you get a date wrong. Anybody can correct that. Facebook could easily correct stuff like that. But that leaves this vast middle gray area that we all grapple with, like, what is a fact? And, example, just from my book, a lot of people have said, well, how come you didn't have in there that the FBI tapped President Trump's phones when he was a candidate? Well, I do address that. The FBI investigated, the Justice Department investigated. They all said, no, we don't have any evidence of that. But when Trump came out and said, my phones were tapped, that is a fact. That is accurate. The embedded fact, who knows, but Barr comes out and says there was spying on the Trump campaign. The Attorney General says there's spying. That's news. That is a fact. What was the FBI spying on the Trump campaign? We don't know. I haven't seen any evidence to support that, but we now have a whole investigation going on that. So I'm completely sympathetic to Zuckerberg in the sense that there is a vast area that you have to let the court of public opinion weigh in on this, and I kind of tilt to the Zuckerberg view here.
But Facebook, obviously, one of its great strengths is the ability of advertisers to target very precisely the people they want their messages to reach.
Right.
So to the extent you can do that with people who are already like-minded or are certainly going to believe certain things, even though it may be filled with inaccuracies and outright lies, you don't have a problem with that?
Well, look, I think the outright lies can be addressed. I think Facebook has the mechanism to do that. And what I'm saying is, let's harness the power of the internet. The same way the internet magnifies the potential for errors, it can magnify the potential to correct those. And I think there's a big area.
You mean outside of Facebook? Because I think
no,
some enormous percentage of people get their news from Facebook.
Yes, they do.
It is perhaps, if not arguably, the most powerful platform of distribution of all sorts of things out there, Jim. And you don't think it should be regulated?
Well, whether it should be regulated is a whole separate question. I mean, in general, I feel it would be better to have some policy that applies to all of these platforms. So we don't have completely disparate, or shutting down the public debate. But again, once you invite the government in and start saying, let the government determine what's a fact and what isn't a fact, that makes me very queasy as well. So I think that's sort of a separate issue. But I do think there's a lot Facebook could do without and out falsehoods. And by bringing to bear the power of the internet and counter those ads, send the same people a message that says this is incorrect. This is the actual fact. Here, they could easily do that, and they can harness the power. They've got 2.8 billion users who can weigh in on the truth or the falsehood of a lot of
just
this.
to be clear, you see a world where Facebook lets an ad run, it runs, people respond to it, and then Facebook says, by the way, that ad was a lie. That seems like a messy place to go to.
Well, exactly how the mechanism would work, I don't know. But look, we deal with this in the media all the time. You put something up, 10 seconds later, somebody says it's wrong, and you paste something up there. It's not that hard. I just feel, look, I don't want to see speech suppressed. There have always been falsehoods in political campaigns, but I do think the internet gives you the power to fight falsehoods with more speech and not less speech, and people weighing in to be able to correct.
All right, topic 2, Jim. Topic 2.
Yes.
The war of words between Leon Cooperman, of course, the well-known hedge fund manager, has got his family office now, and Elizabeth Warren, the presidential candidate. We should tell you, in a letter obtained by CNBC, the hedge fund titan writes, quote, "For you to suggest that capitalism is a dirty word and that these people as a group are ingrates who didn't earn their riches through strenuous effort, paradigm-shifting insights, and now don't pull their weight societally indicates that you are either grossly uninformed or knowingly warping the facts for narrow political gain." That's actually an interesting letter. He writes well, Leon. I will
yes, he does.
Give him that. thoughts?
I think some of these arguments would be more powerful if they were not being made by billionaires. So I will say I'm not a billionaire, and I am opposed to the wealth tax. I think it raises all kinds of issues. I don't think you actually have to go to the question of whether billionaires deserve to be rich. I mean, nobody's going to win that argument, and partly because, look, there are billionaires, I think everybody would agree they deserve to be rich, and then there are those who feel, what lucky tree were they born under? Like, why did they get it? So I think it's a mistake to kind of go down that particular road, but I'm against the wealth tax. And I do feel he's touching on something. What is the essence of capitalism? It's kind of like many things we're questioning again, we always took for granted, but it is healthy to have a debate about what are the benefits and the harms of capitalism. How does the system work? Why do we have the system that we do? And I think implicitly he's raising some of those questions, and that's a healthy debate.
Here's what I think's missing from the debate, or at least the way it's being framed, rather than it being candidate versus billionaire, or whether capitalism is broken, etc. What do the job creators actually have to say, right? The people that are having this debate, have you created jobs? Have you ever been in a position, heaven forbid, where you've had to let people go from their jobs? And that seems to me to be the part that's kind of missing from this, because that's the key to capitalism in the U.S., right? It's that job creation.
Right, and it's, they contributed in massive amount towards an expanding economy.
Are we calling Leon a job creator?
I'm not even saying it's Cooperman necessarily, but I'm just saying that's missing from the debate.
I'm just asking, if that's the line, how many jobs do you have to create until you're called a job creator?
Look, I've been a long-time critic of hedge funds. So
Leon, that's not a good place for Leon to be in terms of it. But he does cite a number of people in his letter, of course, who've created an awful lot of jobs, whether it's the likes of Michael Dell or Bill Gates or Mark Zuckerberg.
Right, and they have their arguments. But again, I think we don't really need to go there. There have been plenty of wealth taxes imposed around the world, and to the best of my knowledge, they've all been a failure. They've all been rolled back. In Europe, the experiments have not gone well. And why, as I said before, why we have such an imperfect tax code that you could actually improve and generate a lot more revenue and have a much fairer system, why we need to leap out of that and start layering on this massive wealth tax, I really think it's a non-starter.
Speaking of taxes, final subject here, our president, my hometown Queens, his entire life, his entire career built on New York, but now he's decamping for Florida at some point. The SALT tax, he's leaving us with not being able to have any sort of ability to deduct that from our taxes.
Well, I happen to have given a talk in Palm Beach not long ago, and there was a big dinner of wealthy donors to the nonprofit organization where I was speaking. And much to my amazement, everybody there were New Yorkers. They were transplanted New Yorkers, and topic A was, we're all moving down here because of the tax situation. We're getting out of it. The taxes are too high. But of course, I was thinking to myself, many billionaires, millionaires in the crowd, and I'm thinking, they can't live wherever they want. It's like you can't pay the tax. I mean, I'm living in New York, and I realize in absolute terms I'm not paying nearly as much, but probably on a percentage basis I'm paying a lot more. Isn't the point of being that rich you could live anywhere you want? So I don't get that, but I can tell you.
I've had that same conversation with extraordinarily wealthy people who even have talked about moving to Puerto Rico, a few of them. I'm like, why? Again, to that very point, where's the value consideration? But you know what? If you're focused on that is making lots of money, it's going to be extraordinarily important to you how much taxes you pay.
Right. I think it's kind of in their DNA.
And minimizing it. Yeah.
To minimize tax, and that's where they derive a lot of pleasure out of that. So I guess, and by the way, Trump is already spending a lot of time down there. He's hardly unique in assuming that he's as wealthy as he says he is, and he would be planting his flag down there. I don't think it's a personal slam on.
No, I mean, actually, Leon Cooperman also, right? He went down to Florida too. I mean, the estate tax also plays into it, by the way. Not just SALT.
Well, and the president specifically also has had these investigations underway in the state of New York, and I don't think there's any love lost there in that specific relationship as well.
Yeah, I mean, look, New York is the ultimate blue state. He's not Mr. Popularity here. Although, again, one thing nice about New York, it's always tolerated, people from all over the place. I mean, he could still come here, he could have his dinners at what's the restaurant he goes to with the red check tablecloth,
likes
whatever.
21 Club.
The 21 Club, exactly. I mean, he can still inhabit a world that I think would be very congenial to him, even though the
Meanwhile,
state
what
may
happens
be
to the
hostile.
tax base of New York is a question with all those people leaving. Although many of them are not making money anymore because they are near retirement.
Right.
Jim, thank you.
Sure.
Jim Stewart. Monday, by the way, Leon Cooperman, he's nowhere near retirement. I don't think he's ever going to retire, actually. Knowing Leon as I have for many years. He's going to be in the halftime report discussing that letter to Senator Warren. That'll be Monday at 12 p.m. Eastern.
All right, when we come back, the weakest sector in October. Not a surprise. Energy looking to rebound, though, with Chevron and Exxon out today going different ways. We'll go through those numbers on this busiest week of earnings now coming to a close. Dow's up 219.
Opportunities aren't always obvious.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Look at that. A riveting quest. A glorious opportunity. A scratch card. Yet he remains unfazed by the challenge, wavering at nothing.
Miss, please keep it down. We're in the quiet area.
Sorry. Here we are. The moment of truth as he reaches the end of...
Instant excitement with scratch cards from the National Lottery. Amazing starts here. Search Dream Big, Play Small. Rules and procedures apply. Players must be 16 or over.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books. The celebration is on. The Washington Nationals are the world champions.
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today. NFL fans, the action continues this weekend on TuneIn Premium.
15-10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern. Then closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Good morning, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Another new fire in California. The latest is burning in Ventura County, north of Los Angeles. The Maria fire broke out Thursday evening. Strong winds and dry brush have helped fuel that fire, which has now consumed more than 7,000 acres and has destroyed several buildings.
The good thing for us is we still had a lot of equipment in Ventura County because of the Easy Fire. So what we did was we relocated a lot of that equipment over to this fire, and they're assisting us with this fire right now.
Police say 4 people have been killed and 4 others wounded in a shooting on Halloween night. It happened at a home in Orinda, California. Details are sketchy, but officials say more information will be released later today. And as you may have heard, President Trump has moved his residency from New York City to Palm Beach, Florida, where he has his Mar-a-Lago resort. Trump tweeting that he will always cherish New York, but has been very badly treated by city and state political leaders, despite paying millions in taxes. You are up to date. That's the news update this hour. Guys, I'll send it back downtown to you, Morgan.
Sue Herrera, thank you. It's time now for our ETF Spotlight. Today, we've got our eyes on energy, the worst performing sector of October and year to date. And today, it's the biggest gainer on the S&P. That's despite a mixed earnings picture from Exxon and Chevron. Joining us with more is Stuart Glickman, CFRA Energy Equity Analyst. For Chevron, he has a buy rating with a $133 price target. For Exxon, he has a hold rating with a $73 price target. Stuart, thanks for being with us today. Given the fact that we got results from two of the very biggest integrated oil companies in the world, your takeaway on those numbers?
Yeah, good morning. Thanks for having me. So I think that, if you look at the numbers, both companies beat fairly muted expectations. There was a lot of year-over-year deterioration across the board. It wasn't just upstream; it was also downstream, and in the case of Exxon, it was also chemicals. So, if you just look at the numbers, quarter on quarter, there's a lot of problems that the industry is facing, a lot of headwinds. However, that being said, both companies look like they're certainly investing for growth. I like Chevron's growth potential a little bit better, and I'm sorry, say again.
So, Stuart, taking a look, you look back at a year ago, and oil was in the 70s. Today, it's in the 50s. Where does it go from here, and what does that mean for energy stocks overall, more broadly?
Yeah, I think the outlook for oil prices is pretty mediocre. I think if you argued for something in the high 50s to low 60s range, I think that seems reasonable to me, just because there's an awful lot of supply still out there, and global demand is being buffeted back and forth depending on what the trade discussions are like of the day. I think the biggest thing that these companies have going for them, but Chevron particularly, is their Permian exposure is very strong. They have an awful lot of they can harvest a lot of the fruits of the stuff they've done in Australia with Gorgon and Wheatstone on LNG projects. And I think, historically, Chevron has always been trading at a fairly substantial gap to Exxon, and I think that gap is getting closed.
So looking across the sector more broadly, whether it's the producers, the oil and gas producers, whether it's the oil field services companies, or whether it's the refiners right now, or of course these integrateds like Exxon and Chevron that we just talked about, where do you see value? Where should investors be considering making an investment?
I think you have to be kind of picky. Within upstream, I think the names that don't depend on high oil prices are probably better bets. So a name like EOG Resources, which I would consider kind of best of breed among the E&Ps. I think they've been focused on premium wells before anyone else was. I think that's a good bet. I like, as kind of a contrarian play, I like Cabot Oil and Gas on the gas side because they have such a low-cost leadership position there. And then if you look among some of the downstream names, a lot of the downstream operations are going to benefit from the looming change in marine fuel sulfur regulations that hit on January 1st. That should really do a lot to help boost refining margins. So names like a Valero or a Holly Frontier especially should do well. Holly Frontier inland refineries and have pretty good exposure to Canadian crude that I think is going to come under a lot of pressure.
Okay. All right. Stuart Glickman, thanks for joining us today.
Thank you.
As we hit a break, let's take a look at Apple. On their all-time high today, the company's streaming service officially launches today. Stock's up 60% for the year. More squawk on the street continues in just a moment. Dow's up 234.
ETF Spotlight is sponsored by Invesco QQQ.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick, and relax with 365 beautiful beaches.
So yes, sir, what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hi, Susan. What's a Brew City Brew Bite?
It's Beer Munch.
Oh, all right. But what exactly is it?
It's Beer Munch.
Okay. But what about a Brew City Halloumi Fry?
It's Beer Munch.
And an onion straw?
It's Beer Munch.
Yeah, it's Beer Munch. Yeah, so you keep saying. Hot, shareable snacks. They're delicious with a cold beer and friends. You'll find them in the freezer aisle. Brew City.
It's Beer Munch.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
That October jobs number well above expectations, 128K, overcoming the weight of that GM strike. Markets obviously reacting favorably this morning. Got new highs on the S&P, 3060, and the NASDAQ for the first time since July. Goldman Sachs chief economist Jan Hatzius is here on set. Talk about the number, which surprised even you, given how we were able to walk past the strike.
Yes, it was a very strong report. The current month was significantly stronger than expected, and there was a large upward revision. So if you look at the jobs numbers now, you're really not seeing that much of a slowdown. It's a little bit surprising because other indicators do show a slowdown over the last year, but the job market's just chugging along for now.
One big take this morning was that Rosengren and George were right, and the dissenters who said we don't need to cut again.
Yeah, or you could say that the message from Chair Powell on Wednesday was right, which was basically we're done here and we've done the adjustment. And there are different views on whether the adjustment was necessary. Rosengren and George obviously think it wasn't. But I think it underscores that the cuts are over.
We saw a labor force participation rate tick up. It looks like companies are having a harder time finding new workers. The pool of available labor fell to the lowest level since December 2000. What's that telling us right now?
I think it's very consistent with what you're seeing in the establishment survey jobs numbers, that labor demand continues to be strong. And I think the long-term trend in labor force participation is probably slightly down still because of demographics, aging of the population. But against that, you've got this very strong labor demand, which is pulling more people into the workforce, which is obviously a good thing. And it's a signal that, job market is very robust.
You've written in the last couple of weeks that labor scarcity is not a big deal right now in terms of subtracting numbers from non-farm. Is that true?
Yeah, so I think there are some signs of labor scarcity, nothing major, but to some degree you are seeing it in the wage numbers. Today's number was obviously weaker, but the trend has been towards stronger wage growth. But yeah, I think workers companies can still find workers where they need them, but they do have to pay up more than they have in previous years.
One of the big bear theses right now is that, all right, companies are not laying off workers, but they're doing everything they can do short of that. Give them fewer work hours, be less aggressive on wages and benefits, and that people say once the year clears, then we'll see this new wave of layoffs. Do you expect that?
I don't really see that, no. I mean, again, the wage numbers are picking up, gradually, and I don't think you should put too much weight on the sort of month-to-month numbers. The trend is higher. And I think as far as hours are concerned, I also don't see a meaningful downward trend there. So clearly growth has come down somewhat. We're closer to trend. GDP over the last year has grown 2%. That's probably only in the neighborhood of trend, maybe a little above. So, you should see some adjustments in things like hours, but I don't think it's anything dramatic.
These guys were having a discussion last hour about Boeing and the impact of 737 MAX groundings on the numbers. How much noise do you think that is adding to the manufacturing picture right now? And Is there any reason to think that that's going to change or subside or have a bigger effect?
I think it has weighed on GDP growth to some degree by a few tenths of a percentage point cumulatively in Q2 and Q3. You're not seeing a major effect in the jobs numbers though. If you look at manufacturing ex motor vehicles, it was up. Ex the GM strike was up about 10,000. So I think it's not a major factor, but it has subtracted a little bit from the numbers.
Then we got ISM, pretty decent, I guess you could say. Is that cycle bottoming as well?
It looks like it. If you look at the manufacturing indicators, they clearly weakened. The surveys weakened sort of in the spring and into the summer, and you saw that not just in the US but globally. But now I think we're seeing some signs of stabilization, even a little bit of improvement in Asia. The Chinese numbers have picked up somewhat, and I think we're starting to see that in the US data also.
Kudlow's comments on trade have been constructive today. Clarida says the cuts that we've gotten will start to kick in Q4. Can we start to expect more aggressive retail sales numbers again?
Well, we've had very strong retail sales numbers up until the last report. So I think the last report was probably a little bit of payback for some of the previous, very, very substantial strength. So I wouldn't necessarily expect a big pickup there. That said, I think the picture is solid enough. So continued consumer spending growth in the sort of 2.5%, 2.75% range in real terms. I think that's a reasonable expectation.
What's the most interesting question to you then right now regarding the economy?
I think we've put the cuts behind us at this point. The most interesting question is, I think, still what is the risk of a downturn? We've taken the view that the risk of recession in 2020 is still relatively low. If you look at market economists and ask their average probability of recession, most recent number is 35%. That's the consensus. We would be below that. We recently rolled out a new model of recession risk that put us in the sort of low to mid 20s.
Low to mid 20s.
And that's not too far from the sort of unconditional probability, the typical probability that the economy is in recession.
I've seen some others that argue the yield curve takes it down to low teens. Could we go that far?
Well, the yield curve is still quite flat, and that's been the driver, and the earlier inversion of the yield curve has been the driver of some of these higher recession risk estimates. But I think it's important to put the yield curve into context, because the yield curve is affected by some structural changes in the fixed income markets, in particular the much more compressed term premium at the long end of the curve, which I think distorts some of these calculations somewhat.
Last thing, people are still going to look at liquidity pressures, repo, New York Fed. Are those things even on your radar at this point, or is it just technical adjustments?
Well, I think it is more of a technical issue. It's very important for market participants in the money markets. They are very focused on year-end and potential tensions as we get to year-end, as we've seen many times in the past. From a broader economic perspective, though, our expectation is that this will continue to be sort of a non-event beyond the money markets. We do think that the Fed's put in place measures that should keep these pressures contained and prevent a fallout to the broader economy.
That's a good insight from you, as always, Jan. Thanks for coming in.
Thank you.
On Jobs Friday. Jan Hatzius.
As we head to break, take a look at Pinterest, plummeting on its quarterly results, down about 22% right now, trading just above its IPO price of $19 a share, missing on revenues while costs and expenses more than doubled in the quarter. Full year guidance also below consensus. The stock, as I mentioned, trading around its IPO price of $19. We got more Squawk on the Street when we return.
Another month?
Hey, NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand, anytime, anywhere, all season long. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The The Washington Nationals are the world champions.
Yeah, before the game, I said, hey, I want you guys to just treat this as just another game. You know, one more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
Stock just had its worst month in nearly 2 decades, and the charts point to more pain ahead. Find out more on tradingnation.cnbc.com. More Squawk on the Street is coming up.
Okay. Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane to the rim, throwing right corner three. Another
TuneIn Premium brings you every minute of the NBA season, so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
Welcome back to Squawk on the Street. Rick Santelli here live on the floor of the CME Group. You know, 95,000 in revisions to the upside. Solid jobs report. If you looked in the rearview mirror, it wasn't only previous months that gained jobs. We also gained a 10th on year-over-year average hourly earnings. Now, granted, these numbers aren't spectacular, but they're certainly above average. And when you consider what part of the cycle we're on, which I always think is kind of a mug's game, there was about 4 or 5 years in between the credit crisis and today. Well, I just don't think they counted, to be honest. I think that there was many things going on in the economy. I think we have reinvigorated and gained some more momentum. But the point is that whether you looked at the market yesterday when stocks were down, rates were down, curves flattened. Today, rates are up a bit, and the curve still was flattening, especially on the numbers. You would think 3 eases and better jobs, well, the long end should rise to the occasion, and I do think it will. Look at a 1 week of 10s minus 2s. You can see there's definitely been flattening, but stability in its flattening, and most likely this 15 level intraday is solid support. Just like if you open the chart up to July 1st, most likely 20 will be resistance. I think we could blast through 20. It isn't going to happen overnight. Do remember one of the other issues to consider is bill issuance. That has been running rather large. Manufacturing pessimism, ISM. You know, there's no way to put a good face on that other than sequentially it was better. But we all know that manufacturing has issues, so it shouldn't be shocking that 12 of the 18 industries in ISM reported contraction. And finally, there is a big landscape change in Europe. And I'm not saying that I think their economic data looks spectacular, but there's something bubbling up. Christine Lagarde coming in, rates have been more buoyant to the upside. And finally, on stock fund inflows, 1.3 billion, the best since March of 2018 in the European Union group. David Faber, back to you.
Okay, thank you, Mr. Santelli. Now time to send it over to John Fort so we can get that look at what is coming up on Squawk Alley. John.
David, there's been a lot of action in the payments space. So we got the CEO of Global Payments, Jeff Sloan, coming up. Talk about M&A, talk about performance, some of the technology that's pushing in. That's coming up on Squawk Alley.
It's another Friday afternoon. Yet another rainy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today. NFL fans, the action continues this weekend on TuneIn Premium.
15-10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern. Then closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go. Hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut
The
it.
sideline, the man bleeds for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now. Hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
Flight attendants taking a stand against Boeing and its 737 MAX airplane. Our Phil LeBeau joins us with the latest on this part of the overall story. Phil.
David, this is what Boeing is going to be facing, not only with American, but with a number of airlines as they try to bring the MAX back into service early next year. The Flight Attendants Union for American Airlines, about 28,000 flight attendants, sent a letter to Dennis Muhlenberg after his testimony in Capitol Hill saying the 28,000 flight attendants working for American Airlines refuse to walk onto a plane that may not be safe. Now, they didn't come out and say flat out, we will not be on this plane when it's recertified. They basically said, we want assurances that this plane is in fact safe. These are some of the 737 MAXs that are grounded. Remember, about 500 of these planes either were in service or have been built. They're waiting to be recertified. As for when the American 737 MAXs are expected to fly again, American, much like United and Southwest, they've moved this into next year. American officially has it off the schedule until January 16th, and you see that Boeing still stands by its return to service target of the fourth quarter. So by the end of the year, they get a sign-off from the FAA. When they do bring these planes back into service, guys, Boeing is going to be compensating the airlines and perhaps some of the flight attendants or pilots unions as well. They've put aside $5.6 billion, but how much they exactly pay each of these airlines or unions, that remains to be seen.
All right, Phil, thanks. Quite a story as the Max saga is far from over. Our Phil LeBeau. When we come back this morning, Fitbit shares are surging. Google's buying the fitness tracking company for $2.1 billion. What that deal means for both companies as Squawk Alley starts in 3 minutes.
As a principal, I can...
It's another Friday afternoon. Yet another rainy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways. From £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price, just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane to the rim, throwing right corner three. Another
TuneIn Premium brings you every minute of the NBA season so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Good morning. It is 8 a.m. at Fitbit headquarters in San Francisco. It's 11 a.m. on Wall Street, and Squawk Alley is live. Good Friday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with Morgan Brennan, John Ford at Post 9 of the New York Stock Exchange. Record highs today for the S&P and the NASDAQ. Earlier in the session, the Dow on pace to post its best gain in about a month on the heels of that good jobs number and decent ISM. Let's get to Bob Pisani with more on the floor. Hey, Bob.
The important thing is we're holding up really well today because we're starting to break the new narrative that's out there that we're going to have some kind of slowdown in 2020. So remember, the recession narrative has gone away. Those worries 3, 4, 5 months ago, no recession in 2020. Instead, it's a slowdown narrative, GDP 1 to 2%. Now these economic numbers today are starting to suggest maybe the slowdown narrative is not such a good narrative anymore. So we're taking the edge off of that slowdown narrative, and that's why things are moving up. We not only had a strong jobs market, remarkably strong upward revisions that most people were not anticipating. Then we had weak manufacturing, but new orders were generally pretty good. Still 49, but above expectations. And remember, that's what you're looking for, new orders. The stock market is a discounting mechanism for a future stream of earnings that are represented by the new orders. ISM not getting worse, that's the key. So here's what you need to think about. What would it take to move the market higher? Say another 5 to 10% beyond this thing? Three things very important. First off, let's see bond yields move up a little bit more. That would be a good sign of modest reflation. We're really not getting that yet. That's holding back. Trade, we got to get those December 15 tariffs off. a deal, a comprehensive deal seems very elusive, but at the very least, get those December 15 tariffs off. And how about this one? This would really move the market. Remember, the narrative is earnings will keep coming down into 2020 instead of 10% for 2020. Now it's 0 to 5%. A lot of people think if that changes, people start saying, oh, wait a minute, we're not going to keep dropping our numbers. Boom, market goes much higher from there. The important thing here is we're seeing the breakout beyond the old highs here. Remember, was that 30.25 was the old numbers? Now we're convincingly breaking out above that 30.25 numbers. And what we're now seeing is breakouts of sectors and individual, even country indexes. So we have the S&P 500 at a new high, but we also have Europe. This is EFA, Europe, Africa, Far East, new high here. What a surprise that is. Japan is at a 52-week high. That is the EWJ there. That's the basket of all the Japanese stocks. Individual sectors here in the United States also starting to break out as well. There's the value index, which we like to talk about. A lot of financials in that one. There's the QQQ, heavily tech weighted. Here's semiconductors breaking out. This is an equal weight semiconductor, XSD. There's the healthcare at new high and communication services new high. So we've been complaining about the fact the S&P is at a new high, but with market cap, big market cap names like Apple have been moving those indexes. We want to see broader breakouts now. The next thing you're going to start seeing in the next couple days if this happens is a lot of individual stock breakouts that frankly we haven't seen yet. Now you're seeing very broad participation in the market. We haven't hit that yet, but Carl, we're heading in the right direction. Back to you.
All right, Bob, we'll keep our eyes on it. In the meantime, we'll talk some media here. Apple, it has Hollywood swinging this morning with the launch of its streaming service, Apple TV+. We're going to begin with some M&A. As you know by now, Google agreeing to buy Fitbit for about $2.1 billion. Joanna Stern of the Wall Street Journal is here, along with Dennis Berman of Lazard, to talk about probably more than we've discussed a $2 billion deal in a while. Joanna, why is this so interesting?
Well, this is so interesting because it's Fitbit, which has been an independent company and gone at it on its own for a number of years now. And now Google's like, it's time to gobble these guys up. And I really think go after the Apple Watch. I mean, this seems to me about the Apple Watch. The Apple Watch or Apple smartwatch has 51% of the market at this point. Google's Android Wear OS, you guys probably didn't even know the name of that. They've got like no market share there. So you've got Fitbit, you acquire Fitbit, you really look at this wearable space for them, and you see what happens.
And that's why I'm going to disagree with you a bit, because Apple is so far ahead here. I think that Google's got to worry about Huawei, Xiaomi, it's got to worry about Samsung in this space. I mean, Apple makes this look easy with the Apple Watch, with the AirPods and whatnot, but I think Google and others are proving that it's just not. This stuff isn't a gimme. Remember when Samsung was coming out with watches? You seen one lately? All these, the tablets that all these other
players. You don't hear about that.
Yeah, you don't hear about it. Nobody's breaking them out in their numbers as being a significant source of revenue, while quietly Apple has built this $25 billion business around wearables and homes. So, I mean, Google's got to get its own Android house in order. I think that's what this is about.
Yeah, and core to that Apple Watch success has been fitness. I mean, Tim Cook was saying that on the earnings call this week. You got Fitbit here, that probably no better company, maybe Garmin, maybe some of the running companies doing a little bit of a better job in the fitness workout space, but Fitbit's the one to have. The issue with Google is really they've bought other fitness companies and wearable companies before. They bought Fossil, some tech from Fossil before. They bought Misfit, which was a startup in the fitness space and the wearable space. Nothing came of that.
Dennis, it's amazing to me because all of these big cap tech companies, Google included, have come under this antitrust scrutiny. We've got these investigations playing out. A big part of it is M&A and the fact that they've been so voracious in gobbling up smaller companies. Now, I realize Google specifically is being looked at for its advertising business, not for its hardware or potential wearables business. But the fact that it would make an acquisition like this, and by the way, I think Facebook and Amazon have been making acquisitions as well, despite the scrutiny. I mean, what does it say about, I guess, how
I'd say
thinking about this?
Moving beyond any one company, looking at the overall scene of things right now, valuations for public companies, as we're seeing here, S&P at an all-time high, NASDAQ at an all-time high. This is a very opportune time to sell. Remember, we were talking about recession overall in the summer. It was coming. Remember all those headlines? It hasn't come. So, look, I think part of this is just generally speaking, it's a great time for sellers to get out there. And if there are opportunities to be had, companies would be remiss not to take them if sellers are willing to sell, given where valuations are today. So it's either sort of get on or get behind. So that's how I view it right now.
Yeah, don't worry. The DOJ is not going to find out about this. They have no idea. They're just going to slip under the radar. Yeah.
What do you think a Google-based Fitbit needs to provide to be competitive with an Apple Watch?
I mean, go back to John's argument there. It's hard to say.
You're saying it's hopeless?
It's not hopeless. It's definitely not hopeless. But it seems to be that there's been the lag in the Android Wear space because both hardware, but also just showing a need for the software, right? Apple made a point on the Apple Watch. There were other reasons, right? You could sell good watch, you can get notifications, but health and fitness were core to some of that sales. And if you again look at that market, people have come over to Apple, to the iPhone from Android because of the watch.
Yeah, the good and the bad news is that the Android and iOS ecosystems aren't really competing. If you got an iPhone, you're probably in the market for an Apple Watch. If you got an Android phone, you're in the market for something. But the ecosystem's fragmented. There's no clear place to go to get the best of that anymore. So Google can afford to bring possibly all of that together, but it's expensive to really control distribution. Do you do more retail? What do you really do?
So it's asymmetric ecosystem stickiness, right? You agree, Dennis?
I think that's a very fair point. And I have a question for the best tech reviewer out there, Ms. Stern.
Are you journal guys?
No, what's on your wrist?
It's my Apple Watch is dead this morning. Usually I have an Apple Watch on this
That
wrist.
speaks for itself. But I think this does get to some of the streaming video issues that we're talking about, right? It's just sort of all versus all right now, and the effects of that are going to be so incredibly interesting. I know you guys have some things you want to talk about.
Speaking of that, exactly. Today is the official launch of the streaming service, Apple TV Plus. Stock above $251, an all-time high today on Tim Cook's birthday. Can the television service be a leader the way you just described the watch?
Today's Tim Cook's birthday?
It is, yes.
That's what we're celebrating here? I had no idea.
No one's celebrating, but yes, I mentioned it.
Maybe that's the release of the morning show, is the celebration of the service. I have not watched any of the shows yet. I'm planning to binge them all weekend. But I really think for me, and I think for anyone who's going to consider getting this service, it's going to all hinge on how good this programming is. Despite the fact that it's free, despite the fact that you can get this service for $5 a month, and even if you've bought an iPhone or all these products within the year, get a year for free. It all hinges on using it if the video and the original series are good.
Carl, you've been in this business a long time, so there are now at least 15 paid streaming services. Do you think that all those can really coexist? I mean, my view is that looking at the big picture, the disintermediators will be disintermediated, and ergo you wind up at mediation. Ergo you wind up back at some sort of choose your own cable bundle.
But if everybody has a different business model and a different reason for doing it, right? Then does there necessarily need to be traditional winners and losers here?
To me, this is the current problem of sort of the ecosystem writ large, is that it's for the company's needs more so than it is for the consumer needs. And if there's anything that Silicon Valley has taught us, and Joanna knows this all too well, the companies that really focus consumer first generally prevail. And right now, I don't think that match is in there.
Yeah, I think the winner of the streaming wars seems to be the companies. The consumers do not seem to win here. I mean, the confusion alone on where we find the content, the confusion on what hardware device gives us all of this content or series.
The cost of watching Netflix alone is, what did Heath Terry tell us the other day? 20 cents an hour? Something like that? You think the consumer's getting a raw deal on streaming?
Is the consumer only watching Netflix?
Increasingly so, if you look at what linear
watch
TV's
Amazon
done.
too, which is
I don't think once we're going to have Disney Plus, I think we should discount Apple here. We've got HBO Max on the way. We've got Peacock. We've got all of these services which are going to fragment where the content is. No one is going to be able to now just go to Netflix to find what they want. They're going to be looking at a variety of different services for the content they want.
Why not
case for Roku?
I was just thinking that.
We sort of wind up, back exactly where we started. And the really interesting thing is at the lower end, at the pure ad-supported models, where you see so much more advertising than you would have on traditional broadcast TV, and they have the data that they're collecting that makes it so much more powerful. Like, we're literally back where we started, 1950s, 1960s, television-supported advertising. Advertising-supported television.
Yes.
It's just remarkable that we've sort of hit this Rube Goldberg moment.
It's the pendulum of a la carte and back. It's crazy.
And you start to look at your cable bill, and I still have a cable bill, and I'm looking at both those two things, and cable's looking pretty good.
God bless you.
I love my bad cable.
I don't like the whole contract thing.
I love bad cable.
be the next step of this discussion.
Joanna, thank you. Good to see you. And Dennis.
Thank you.
Coming up, today's biggest earnings mover is down more than 20%. What's the stock? And why is it getting an upgrade today? Over at D.A. Davidson, we've got that answer and the analyst behind that call after this break.
Tomorrow. It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways, with flights and 7 nights hotel from just £349 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hey, we know that Nature Valley nut butter cups are delicious anywhere. But why just sit in the kitchen eating them? When you could be here, chilling outside in the fresh air with a tasty treat. Oh, good night. Whole grain oats with a delicious real nut butter filling. Nature Valley nut butter cups. Get out more.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Yeah, before the game, I said, hey, I want you guys to just treat this as just another game. You know, one more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today. NFL fans, the action continues this weekend on TuneIn Premium.
10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern. And closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today. College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Strong earnings, a deal with Citi on a new digital consumer-facing payments business. And those are powering shares of Global Payments higher this morning. The stock's up better than 65% since the start of the year. Global Payments CEO Jeff Sloan joins us now in a CNBC exclusive here at Post 9. Jeff, good morning. Happy Friday.
Thanks for having me.
So tell me about this year of M&A that's been going on in payments, because there's a lot of action on the tech side. We've got PayPal and Apple making moves, but you guys in the core payment space have not been idle. What's driving it?
Well, John, there's a lot of scale in our business, and that's what really drives the ability to make investments so that we can partner with people like PayPal, Visa, MasterCard, Apple, Amazon. So we need to get bigger to do those things, and I think that's what's driving those transactions you referred to.
How much is the global consumer writ large, kind of the underlying fuel behind this, and how much of it is the digitization of money in general?
Well, listen, we stand at the intersection of digitization of payments and also cloud-based SaaS software, so I think we're in a really good space. But overall, we depend on a healthy macro environment. We announced yesterday in our third quarter that same-store sales for us were up 3.5% for the third quarter here in the United States, our biggest market. So the health of the consumer is very important to our business because we want people to spend more. What was surprising in our report yesterday was the health of the British consumer, which probably for the last 3 quarters in light of Brexit wasn't so great. But actually that rebounded to the mid-single digits on the third quarter.
So how much risk is there in the rest of Europe, the part of Europe that's still going to remain part of the EU, some of which has had a lot of economic turbulence? I mean, as you head into 2020, is that a real concern?
Not really, John. So we've had a very good performance in Europe throughout the last year. Our business ex the United Kingdom grew double digits in Europe in the most recent quarter, and that's been a very consistent trend. So notwithstanding the Brexit, the consumers really hung in there. The only weak spot was really in the UK, and as I mentioned a minute ago, that's rebounded. So our business in Spain, our business in continental Europe has been very strong, our business in Ireland as well, so we're very pleased with where we are.
Has the discussion, sort of the round trip we've made on Libra as a concept, has it made people think of payments differently or not?
Yeah, I think so, Carl. Anything that brings 1 billion plus consumers potentially into the financial system is something that's very good for global payments. So whether Libra is ultimately successful or not, we want more people to participate in the digitization of payments, to buy more things using their phones regardless of what the currency is. So I think it is topical, but anything like that benefits us because we are the beneficiaries of developments in the ecosystem.
Tell me about technology you expect to significantly advance in the payment space in 2020, whether it is more payments through wearables, whether it's facial recognition. What's going to be the latest?
So I think the most important trend in our business, John, is what we call omni-channel commerce, which means buying something on your phone or online, but on the phone, pay with your face or pay with your thumb and get it delivered via Grubhub or DoorDash to your door, or pick it up yourself. So we have 20 of the top 40 quick service restaurants in the United States using global payments, hardware, software, payments, and drive-thrus. And today the consumer expects frictionless, zero-cost e-commerce, and there should be no distinction between the virtual world or the physical world. And today that's $1 billion of revenue for just global payments. So I think you'll see more of the same, and that's what consumers have come to expect.
I guess you're arguing that consumer gets promiscuous is good for you, even if it's not so great for Grubhub. Jeff, I just love that promiscuous thing. Carl, Jeff, thanks for being with us.
Thanks for having me.
They're never going to live that down. When we come back, today's mystery chart is Pinterest, getting crushed, as you can see, down 21 and change, as expenses more than double for the quarter. Just one of several stories that were growth ideas in the first half being rethought. We're going to break down those results with an early investor and an analyst who upgraded today. In a minute.
There's golf.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Mate, this fan's suspension is rubbish.
Tell me about it.
Even the radio's had it.
I know, but I'd get nothing if I scrapped it.
Actually, you can get at least £2,000 off a new Ford for it.
You're kidding.
With Ford's new for old scrappage scheme, you can get between £2,000 and £6,250 off a new Ford van if you scrap an eligible vehicle with us responsibly. Also, there's 0% APR representative on Ford Acquire. Ford Commercial Vehicles. Backbone of Britain. Search Ford Scrappage. Exclusions apply. Contract and registered by 31st of December 2019 at participating dealers. Agent ownership criteria apply to scrappage vehicle. Subject to status. Free post full credit. Deposit restrictions apply.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions! Before the game, I said, hey, I want you guys to just treat this as just another game. You know, one more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
Welcome back to Squawk Alley. Take a look at shares of Pinterest getting crushed today despite a beat on earnings. A miss on revenue and slowing sales growth are what are dragging the stock down this morning, down about 21.5% right now. Pinterest also said expenses more than doubled for the current quarter. Well, let's bring in early Pinterest investor and former executive Cameron Ansari, as well as Tom Forte of D.A. Davidson, who upgraded the stock to buy just earlier today. Welcome to you both. Cameron, I'll start with you. As an investor, as a shareholder in this name, you surprised to see a 21.5% move lower?
I am. I worked at the company as well, and we all had a lot of puns there. Things are fantastic. Today's a pentastrophe, I think, if you're a Pinterest investor and shareholder. But the early few quarters, when a company goes public, there's a lot of volatility, and I think you're seeing investors that have come in and out of the stock kind of doing that. But you saw the stock also come off of lockup a few weeks ago and barely moved. So I think most insiders did not sell a lot of shares. I think long-term people are fairly optimistic about this company and the stock.
Anything about the numbers that were reported last night or the move in the stock today that would change your, I guess, investment thesis on the name? Would you be buying more? Are you going to hold, sell?
I mean, I don't know if I can make a recommendation on the stock. That's not my role.
For
but
you personally.
I think it's a great name to hold long term. I think it's if you believe in the story, if you believe in the narrative, that it's a great management team, tight nexus between the user base and e-commerce, and strong international growth and user growth. I think that the business is well poised.
The international is what people have issues with, right?
Yeah.
They want to see a broader spectrum of advertisers. True? Fair? Valid?
I think what people don't understand is international, some companies like Twitter, for example, have a lot of users internationally, but they may be in places like Indonesia. They're very hard to monetize. Pinterest users internationally tend to be in Western Europe, the UK, Australia, Canada. These are highly monetizable markets. So I think you're going to see this play out over the next few quarters. But today's a tough day for the stock, no question.
Tom, I kind of don't get it. I mean, if you believed in Pinterest before, what has really changed? I mean, yes, they're figuring out how to get their public company footing, but they have some strong underlying numbers, fundamentals, half the market cap of Twitter. I guess that's why you say it's a buy.
So definitely, I think that yesterday's move or today's move has created a big-time buying opportunity for Pinterest. And really the opportunity is what you're just talking about. It's international. Today, the audience for Pinterest is 70% international, 30% US, but the monetization is only 10% international, 90% US. This is a company that's had 3 quarters as a public company, has done really well. We're encouraged by the improving trends when it comes to international monetization. We understand today's been a tough day for the stock, but we say take advantage of it, which is why we're upgrading.
Tom, what do you think of the fact that spending did rise sharply? Costs and expenses, total costs and expenses were up 94% year on year. Were you surprised by that?
I wasn't surprised, but I look at Pinterest kind of through the lens of Roku. So 2 advertising-based business models that have similar levels of sales today and similar levels of profitability. But because both are advertising-based business models, I'm confident over time they will have much bigger margin and generate a lot of free cash flow over time, which is why I'm comfortable recommending Pinterest despite that short-term increase in expenses.
Cameron, I'll put the same question to you.
Well, it's funny because they increased expenses year on year, as you mentioned, but they also indicated a narrower loss for the year as an estimate between 10 and 30 million, down from 25 to 50. On a scale of over $1 billion in revenue, losing 10 to 30 million dollars this year is pretty light, and it indicates that the company's on a path to profitability fairly easily in the next 12 to 18 months, which is a really different story than a lot of other tech IPOs you've seen in the last few months.
Cameron, it seems to me that maybe Ben Silberman's personality plays into this a bit, in that he's kind of incapable.
We talked about this on IPO day.
Yeah, I mean, he's not a hype guy. Right?
No.
So, I mean, the reality of increased spending as they try to expand into international markets, that hits you in the face. The growth number being a little lower than you wanted, it hits you in the face. But he's not going to tell a hyped story around how well they're going to do. Do investors need to factor that in? And what are the real significant tells in Ben Silberman or in the company's numbers that investors should look at if they want to get excited?
Well, I think it's the things we talked about. I mean, the user base is still growing pretty healthily. The overall ad revenue grew 47% year on year. That's a pretty large increase for a company this scale at this point. And I think, hopefully you're going to see that continue over the next year. And I think Ben is a very steady operator. He is not a big hype guy, but he's also not someone that's going to lose the forest for the trees. I think he's the kind of person that builds this company for the future. He mentioned, I think, on the call yesterday that they made some tweaks to the algorithms and made the site more usable. And I think those things tend to have longer-term benefits. But look, it's a tough quarter, and I think the company's going to learn from this and hopefully move forward.
Tom, biggest risk to your buy thesis?
So the big risk has got to be that international monetization doesn't play out as we think it will. The good news, though, is that they've survived GDPR. So as far as regulatory concerns, that's not a concern. They have an incredible visual platform, and they're just in their early days and starting to monetize it. But they've done a good job so far, and we think they're going to continue to do a good job over time.
All right, gentlemen, thanks for joining us today, Cameron and Tom.
Thank you.
Thank you.
When we return, two very different streaming strategies in focus today as Apple TV Plus launches and Netflix releases its film The Irishman in theaters. We've got more on all of that after the break. Stay with us.
It was Sophie's big day.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Watford, it's chilly outside, and you're staying in with your feet up, and they can stay up. Because with Hive Active Heating, you can set the perfect temperature without even lifting a finger.
Alexa, ask Hive to boost my heating.
And by never having to heat an empty home, you could save up to £120 a year on your heating bill.
Alexa, play my Nice and Toasty playlist.
Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want crime dramas, I've got loads, and they're never going to guess who did it. Comedy, coming up, way better than the dad jokes in this house. Or how about thrillers? They're going to be on the edge of their seats with these. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Senator Elizabeth Warren promising to spend more than $20 trillion over the next 10 years to provide government-funded health care to every American without raising middle-class taxes. Most of the cost burden is being put on businesses and the wealthy in her plan. Syrian President Assad says President Trump is the best type of president because of his transparency on annexing Middle Eastern oil. In a state TV interview, he said all American presidents are, quote, criminals, but President Trump at least admits the U.S. wants the oil in the Middle East. Turkey and Russia launching joint patrols in northeastern Syria under a deal that halted a Turkish offensive against Syrian Kurdish fighters. The joint patrols did not fly Russian and Turkish flags on their armored vehicles. And Chick-fil-A issuing an apology after sending a promotion to its loyalty program members about National Sandwich Day, which is November 3rd, which falls on a Sunday. when Chick-fil-A's are closed. But Popeye's taking advantage, saying its popular chicken sandwich returns on November 3rd when they are open. That's the news update this hour. Back downtown to you guys on Squawk Alley. Morgan, back to you.
Sue Herrera, thank you. We've got two very different streaming strategies being launched today, both by Netflix and Apple. Julia Boorstin explains from Los Angeles. Julia.
Well, Morgan, it is a big day in the streaming wars. Apple TV Plus launches and Netflix is releasing Martin Scorsese's The Irishman in a handful of theaters in New York and Los Angeles before it starts streaming on Netflix at the end of the month. Now, these may seem like two very different moments, but Apple and Netflix are both focused on the same thing: big bets on premium, expensive content to differentiate them in the streaming wars. Apple TV Plus's $5 a month service, free for those who purchase an Apple device, is all about prestige content. It's launching with just 9 titles, but they are all from the biggest name Hollywood creators and movie stars. Apple will regularly add more content, but its appeal is its fewer, better options. The challenge, though, of betting exclusively on premium content is that the reviews of its flagship morning show, with a reported $150 million budget for the season, drawing just a 59% on Rotten Tomatoes. But meanwhile, Netflix's The Irishman, directed by Martin Scorsese, is probably the most prestigious film ever from the streamer, known not for the quality of its originals, but rather for their quantity. The Irishman cost about $160 million to make, aiming to draw awards attention with its nearly perfect reviews to help in turn draw filmmakers and subscribers to Netflix. Now, Netflix is trying to shift focus to its originals, as some of its most popular shows, which are licensed, including Friends and The Office, are going to be leaving the service. Now, while Netflix may be winning with the critics this weekend, these two companies are both playing the long game. Apple using TV Plus as a bonus for consumers buying its products and into its subscription ecosystem. John?
All right, Julia. We are also getting some news on TikTok. What's the latest there?
Well, Reuters is reporting that the U.S. government has launched a national security review of TikTok. Its owner, ByteDance, which is a Chinese company, and it purchased U.S. social media music app Musical.ly 2 years ago. So Reuters is reporting that there's an investigation here into that from the Committee on Foreign Investment in the U.S. Now, we've reached out to TikTok. We haven't heard back yet. And there's this report here that because those CFIUS reviews are confidential, there will be no official comment. But TikTok giving a comment to Reuters saying that TikTok has made it clear that we have no higher priority than earning the trust of users and regulators in the U.S. Part of that effort includes working with Congress, and we are committed to doing so. So, guys, I've reached out to TikTok in the past about these concerns about national security. Obviously, TikTok has a lot of information and data on its users, but they've said that they operate totally separately from China and that Chinese ownership when it comes to things like censorship. So we'll see what this yields. Back over to you.
Yeah. And certainly we've seen a tightening of the standards for CFIUS, and we've seen investigations into other Chinese companies that have access to that social data as well. We'll see how this plays out. Julia Boorstin, thank you. We're going to continue to monitor that story, but meantime, Apple so far being cast as an underdog in these streaming wars. Joining us now to break down the landscape, USA Network's founder and former CEO Kay Koplovitz here at Post 9. Welcome.
Welcome to be here. Thank you.
Do you see Apple as an underdog in this? Is that the right way to think about it?
Well, it certainly is in terms of the content creation, even though they have very big names on the content producers, Steven Spielberg, Oprah Winfrey, Jennifer Aniston, J.J. Abrams. They've got a really great cast of people producing for them. The shows are unknown, and you don't know whether they're going to play or not, and they don't really have a library to sort of drive people to their service. On the other hand, they have a lot of devices, and they have a lot of opportunity to introduce people. And for $5 a month, the cost of a cappuccino, maybe people will give it a try, see what these shows are really about. So they have a worldwide reach that they can get to, but they're definitely lagging the marketplace. They've got a long way to go to fight with a Netflix or even a Disney that has tremendous content.
One of the conversations we were having earlier in the show is the fact that the landscape's getting so crowded with all these services that have launched, the services that are coming, and that maybe perhaps it's getting confusing or even it's poised to get expensive for consumers. Is that the case? Is it going to be more confusing for consumers?
Absolutely. It's going to be more confusing. And one thing I want to point out, consumers don't just watch studios. They watch programs, and they want the programs. And so now if they have to go to 7 or 8 different streaming services to get the programs they want, there's going to be a lot of disruption in this marketplace. There's going to be billions of dollars spent to try to attract those the subscribers. And it's a whole, I mean, this is just a major change in the media market and who are going to be winners. Look, they're going to be multiple winners. And what does an Apple really need to do? They're looking to do 100 million subscribers in the next 4 years, something like that, $5 a month, $6 billion on a $250 billion, revenue stream. It's a little tiny bit, but it really is the start for them in an area that they don't have the expertise. But now they have the iTunes, so they have music, they have podcasts, they have TV. Are they going to split those up? Are they going to offer them as a bundled package to their device users across all their devices and all the other ones that they're going to access? That's a really good question. I think they're going to have to find their way through that because they haven't really announced what they're going to do with that.
Well, what's more likely in your mind, a bundle like that or having to buy a library of their own?
Buying a library of their own will be very difficult because now the studios all have their own. Disney has theirs, AT&T.
It's snapped up, and it's gotten expensive.
Very expensive, and they can afford it. They can afford the expense of it. But what does it really bring to them? The streaming revenue, people want to see in the public marketplaces anyway today, people want to see reoccurring revenue. I think Apple is going to be pushed more and more to find streaming revenue and reoccurring revenue in addition to their devices. I think they're going to be pushed in that direction.
So if you were Apple, what would you do? You've been an entrepreneur in this space. Yeah. You think outside the box. Apple is already determined to offer this, not just on its own platforms, but on Samsung TVs. Right. They're starting to hint at a wider play. If you were running this business for Apple right now, would you tell them to bundle it all together? What?
Well, I think I would have options. The consumer today wants all kinds of options. And I would say that they should get a bundled service together. Make it simple for an Apple device user or a device user of Roku or something else that they're going to be available through, Samsung, etc. Make it easy for the person to get not only Apple Plus, but the music and the podcasts, which they're trying to build a marketplace in more aggressively. Make it easy for them to get it at one place. Or if people only want one, let them split it off if they want to. But I'll bet most people will buy that as a bundled package. It won't be very expensive at all. And I think people, would prefer that because there aren't just these 4 or 5 major streaming services out there. There are dozens of them. And, when you look at Disney and you look at Disney Plus and you look at ESPN Plus, and, it starts to add up. And really the average buyer today has maybe 4 of these services. Maybe they'll have 6, but they're not going to have 20 different bundle services for everything that they want. The consumer is going to be confused in this marketplace. That's why I say a lot is good. The interesting play may be I've put on the outside rail in a race is maybe the universal package because it's not going to cost. It's going to be advertising supported. So I think they're looking at it as added plus to what they're already offering. So that was an easy thing for people to subscribe to because they aren't paying additional money for it. Okay. So I think it's just, you got to wonder what's going to happen to the cable operator. Now, their broadband revenue has surpassed the video revenue already. We saw that coming. You could see that was going to happen. With 5G, now what's going to happen? And so that's another, there's so many changes in the marketplace right now. It's chaos is going to reign for a while. And as an entrepreneur, I love chaos because there's all kinds of opportunities in chaos. When there's no chaos, it's harder to get in.
Well, we look forward to having you back to talk about all that chaos as it unfolds. Kay Koplowitz, thank you for joining us today.
Apple, meanwhile, hitting an all-time high. Let's bring in Deutsche Bank Apple analyst Jeriel Ong. Jeriel, the reason why it's hitting an all-time high, arguably not just services, it's just as much the outperformance on the iPhone side, but how closely are you watching the progress of TV Plus in particular, and how are you adding it into your model as far as the upside for Apple?
Sure, yeah, that's a great question. So Apple TV Plus is certainly something closely followed over this past that I'll closely follow over this past weekend. I haven't had access to the shows early, obviously, because I'm not a media personnel. But it all depends on if there's a tentpole TV show that kind of launches a lot of interest in the next 6 months. I think near term, in terms of revenue, because it's offered for free to anybody who buys a new iOS device, really it's tough to discern any immediate revenue impact. I think beyond the next 12 months, there could be anywhere from $1 to $3 billion revenue impact annually, depending on the amount of users who actually do pay for it beyond the free trial. So it kind of depends on the initial uptake, and I'll be monitoring that closely in the near term.
How much do reviews matter? Because the Joker movie got some pretty bad reviews, but turned out to be a huge blockbuster. Could the same be true of Apple? And what do you want to hear from the company as far as metrics on viewership? Do you think they'll give them to you?
Yeah, it's a good. So on the topic of reviews, I think they do matter in the near term, especially Apple's install base, which tends to skew more educated and wealthier, and people tend to read things before they decide to consume them. But in the long term, it's all about the quality of the content, right? Even if the reviews aren't good, people ultimately decide for themselves whether they want to continue to consume the content beyond the first 1 to 3 episodes that they watch. In terms of the metrics that we'd like them to disclose, I think they probably will disclose some sort of subscriber count. But the key thing to track will actually be what percentage of subscribers are paying versus what percentage of subscribers are currently on the free trial, and tracking that as it trends over time, specifically as we get closer to that 1-year mark for the free trial.
Is it possible to start to model in the impact of streaming, especially if there's a hit on iPhone?
It certainly is possible, but the problem is that the services line itself is a number that's approaching $50 billion. Even if you get to call it 100 million subscribers in 5+ years, it's really not going to be a material portion of Apple's services business or a material portion of the total revenues for Apple, which kind of approach the $300 billion in the next couple of years. So it is something that I will be paying attention to and modeling closely and following closely. But the success, because Apple is so large, is difficult to determine.
One of their shows is called See. We'll see. Jeriel Allen from Deutsche Bank. Thanks.
We knew it was coming one way or another.
We got through 45 minutes without it.
Yeah.
When we return, we apologize. Rick still sat down with the former CEA chair, Ed Lazier, after the break. Rick, what's on your mind today?
You know, I'm going to talk to Ed not only about the recent spat of numbers, whether it's GDP, ISM, or jobs, but also the trade versus business spending. He has some unique thoughts. After the break.
Johnson & Johnson is a baby company.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and be unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Watford. On freezing days like today, forgetting to turn the heating off is easily done, especially when you're out enjoying some lunch. But it's nice to know with Hive Active Heating, a Which Best Buy, you can turn your heating off from wherever you are. And by never having to heat an empty home, you could save up to £120 a year on your heating bill, which sounds like the perfect excuse to order another course. Search Hive Heating to buy now. Hive services require broadband and Wi-Fi. Terms apply.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Let's get to the CME, get a special edition of the Santelli Exchange. Hey, Rick.
Good morning, Carl, and thank you. Yes, I'd like to welcome Ed Lazier, my favorite economist, chairman of the Council of Economic Advisors under George W. Bush. All right, Ed, let's jump right into it. Today's numbers, and maybe even GDP and ISM, weigh in.
All right, well, today's report was pretty much what we've been seeing. Everybody says it was a great report. It was a great report, but that was because people were expecting a bad report. It's pretty much in line with what we've seen over the past few months. Job growth, 3-month job growth, about 175,000. That's what we've been seeing. Wage growth, 3% year over year. That's about what we've been seeing. The employment to population ratio, 61%. That's where it's been for the past couple of months. And then finally, if you look at hours work, which I always like to look at, it's been stable at 34.4. So everything is really on track. I think the important point, though, is one that you raised earlier this morning. You said, you just think that these numbers are wrong in the sense that jobs are still coming back. And I think that's true. If we look over the past few years, when people were writing off the labor market and saying, we're there, we've already peaked, that just wasn't the case. We are still creating jobs at a rate 100,000 above what we need to keep pace with population. So there are still people out there that are coming back into the economy. That's really remarkable, almost a decade into the recovery.
I couldn't agree more. All right, the second biggest topic is business investment. It's been on the light side. And many of us, including me, say a good chunk of that slowness or disappointing level of expansion is due to the trade infractions. You have a bit of a twist on that. Explain.
Yeah, I think the trade issue is certainly important in the short run. The way I would put it is this. Trade is obviously an important issue. It's something that we care about. The whole world economy is something that we care about. And what that does is it creates uncertainty. It changes the way businesses think about their investment environment. They want to see what's going on before they're willing to invest. So it's not so much that it discourages investment, but it does tend to postpone it. That said, if you look at what happened last quarter with a 15% reduction in non-residential structures, that's a really big number. It's pretty hard to argue that that's caused by the effects of China. It just isn't big enough. Our trade with China is just not large enough to
But Ed, I hate to push back because this is right in your wheelhouse. But my pushback would be that there are secondary and tertiary indirect feedback loops all over the globe with regard to how trade works. Even though the direct correlation in the numbers with China might be small, the reverberations of the uncertainty have much larger global effects, don't they?
They do, absolutely. But even what I'm saying is even taking that into account, you're certainly right. There are secondary effects. But even taking those secondary effects into account, it's just not big enough, in my mind, to account for what you're seeing with structures. So then what's the problem? If I'm an investor and I'm holding back on taking my bazooka of capital for investment because I don't like the business investment level, not enough money coming in, what should I subscribe that to, and what should I look to change in the future to make it grow larger, faster? Well, I would say the major issue right now is, we've got something coming up in a year, like a political event. It's called an election. That could change things pretty dramatically, depending on what happens. And if you look at the plans that some of the candidates are putting out, particularly Elizabeth Warren's plan this morning.
Be careful, Ed. You're in political waters here.
Well, no. I'm going to talk about the policy part, not the politics part. If you look at just the numbers of that, what we're talking about, even by her numbers, you're talking about increasing taxes by something like 66 to 75%. That's enormous. If I'm an investor and I'm thinking about that and saying, well, I don't really believe that will happen, but there's certainly some chance that it'll happen, that scares me. So
I couldn't agree more. Listen, we're almost out of time, Ed. I couldn't agree more. These candidates, modern monetary policy might be fascinating fiction reading, but I think it belongs to the nonfiction economic world, something closer to reality. Finally, real quick, do you think some of the structuralists of Europe are working themselves out real quick?
Well, Europe is trying to use monetary policy to deal with their structural issues. They've had long-term structural issues, high taxes, high spending, regulatory issues, labor markets that are pretty much impacted, and they're trying to deal with any little blip that they have. They try to deal with monetary policy. It may be all they have right now, but I think that the negative interest rate policy is certainly not the right way to deal with it for the long run. So,
all right, you know what? I couldn't think of a more perfect place to leave this. I like the fact that you don't like negative rates. All this research trying to find some straw in that pile of lead, I think, is insane. Thank you, Ed Lazier. Morgan,
thank you, Rick.
Back to you.
Rick, thank you. Still to come, when life imitates art. How Mark Zuckerberg decided to respond to Aaron Sorkin's scathing op-ed next. The Dow's up 267, and we got fresh record highs for both the S&P and NASDAQ in trading so far today. We're back in a minute.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today. Hey, NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand, anytime, anywhere, all season long. College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane to the rim, throwing right corner three. Another
TuneIn Premium brings you every minute of the NBA season, so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
Record high for the S&P today, first record high for the NASDAQ since July, and the Dow is about 50 points from its own closing high. We're watching all those levels carefully. Back in 3 minutes.
Tomorrow.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raz, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content, learn about hot new podcasts, and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
Changing environment. Consistency keeps us on track. Columbia Threadneedle Investments.
Meeting people is my life. I was embarrassed to show my teeth. It was time to do something that was going to be permanent.
The Clear Choice one-day approach is making dental implants a reality for people all over the country who suffer from missing or failing teeth.
We have expertise that you might not find anywhere else, all in one location.
The next day, I had a new smile. Couldn't wait to show some folks.
Schedule your free consultation today. We'll even talk about financing options.
I had the best smile I'd ever had in my life.
Call Clear Choice today.
It was Sophie's big day. By the way, she's the next Mozart. As usual, we were behind schedule. But Sophie's enthusiasm could not be dampened. Not even by a runaway donut. We powered through it in our Toyota Prius. Because the star's gotta shine. No matter what.
It's unbelievable what you can do in the Prius. Toyota. Let's go places.
Why is Old Dominion #1 in customer satisfaction? Maybe it's our over 99% on-time rate, or how we support the dynamic digital marketplace. Our people never stop working to make your shipping easier. Old Dominion, helping the world keep promises.
Looking for the best rewards credit cards? Introducing CNBC Select, the authority on all things credit cards. We do the research, you reap the rewards. Head on over to cnbc.com/select and take control of your money.
Facebook's Mark Zuckerberg responding to Academy Award-winning screenwriter Aaron Sorkin's scathing op-ed in The Times yesterday, using his own words against him, posting just a portion of dialogue from Sorkin's 1995 film, The American President.
America is advanced citizenship. You've got to want it bad, because it's going to put up a fight. It's going to say, you want free speech? Let's see you acknowledge a man whose words make your blood boil, who's standing center stage and advocating at the top of his lungs that which you would spend a lifetime opposing at the top of yours.
Sorkin, of course, also wrote The Social Network, the story of Facebook's beginnings. Kramer's point this morning was maybe Zuckerberg needs to stop talking about big ideas and start talking more about how well the business is doing.
Yeah, if you want the stock to move, but I think he wants something bigger than that about people understanding and perhaps embracing Facebook. What frustrates me about Zuckerberg's response here, this argument with Sorkin has nothing to do about just people who disagree with you. It's about how we tell, post, understand what's true and what's not. So free speech, okay, that's an important issue, but it's not what this is about.
Yeah, and I think that sort of gets right at the heart of what this debate has been about. You got Zuckerberg talking about free speech, and then the other side of it, the critic side of it, has been amplification and getting right back to the roots of Facebook's business model. I have not seen The American President. I'm going to put it on the list right behind For All Mankind, the space show from Apple.
Next week, Disney, Uber, Peloton. It's going to be big. Let's get to the judge.
Carl, thanks. I'm Scott Wapner. Front and center this hour, the case for a year-end rally, why the final 2 months could be a big one for your money. It is 12 noon, and this is a halftime report.
A new trading month and new record highs for the market. November, usually the second best month of the year. what to buy and what to avoid. Apple jumping into the streaming wars, launching its service today. The winners and losers in the battle over content. Shares of Pinterest slammed, falling below their IPO price for the first time. But the stock just got a monster upgrade. It's our call of the day. The investment committee is ready to go. Halftime report starts right now.
All right, welcome. Good to have you with us on this Friday. Our investment committee at the table today, Jim Lebenthal, Steve Weiss, Jenny Harrington is the CEO and portfolio manager at Gilman Hill Asset Management. Rob Sechan's back, UBS Private Wealth Management, one of Forbes' top 100 financial advisors. And Tom Lee is here, the Fundstrat Global Advisors managing partner and the head of research. Let's begin with the markets. Better than expected jobs report. Stocks are sharply higher. Jim Lebenthal, S&P 500, new record intraday high. NASDAQ's finally joined the party, new intraday high, first since July. NASDAQ 100, new intraday high. What the difference a day makes, we're not questioning the economy today.
Well, but maybe we should, right? The ISM disappointed, but let's not do that. Let's not rain on the parade. I think the bigger question is, where do we go from here, right? You're saying we're in a great mood here. We got Tom Lee on us, and he's going to tell us why we should continue to be optimistic. Here's my comment, all right? You know I've been all over trade, that's what's moving this market higher. I think at this point, the market has fully priced in phase one being signed, okay? So I think there's very little upside to that, and if it doesn't get signed by, say, November 15th, I think you've got a problem. As far as 3,200 or whatever the targets may be hit, yes, I think we'll reach that. But I think that December, I think you might see a little pause because people are going to look past phase one of the trade deal and say, what's next? I'm
going to say, Weiss, maybe do you really need phase one? I'm saying in the context of economy good, Fed's going to cut if it has to, again, right? Seasonality is your friend too. You haven't had a down November since like 2012, if not before that, since 2011. The last 2 months of the year are usually good.
I'd say you need it depending upon from what level. So if you take yesterday's action in the market, that was purely China related. You had great numbers from two good companies, Apple and Facebook, which the FANGs, and they're both not FANGs, don't have the same impact on the market they did. But what impacted the market was the talk on China, that the phase one deal is going to be okay and there's not enough to get to another deal. So yes, you do. So to get meaningfully higher or even to break meaningfully above a trading range to another trading range, you absolutely need trade, without a doubt. Now, if the market sells off, then the trade deal is less important. I still think we'll see some upside from a trade deal. It's not fully discounted in the market just yet because that's not what the market does. It plays momentum, and it's no different than momentum on the news. So what I've been doing, I've just been rejiggering the portfolio, taking some profits here, skinning down some positions, and using the opportunity to buy beaten up names, particularly in days where there's big volatility.
Okay, Jenny, what are you doing in the market right now?
Right now, it's earnings season, and we're in the heart of earnings season. So we're actually tuning out the macro noise just a tiny bit and totally all in on looking at our companies and listening to what they're saying on their earnings reports. One of the things that we found noticeably absent this quarter, which really surprised us, was trade talk. So I think we've got, at this point, about 60% of our portfolios have reported, and very few have actually been talking about trade or concerned about trade. So we're listening to what they're thinking about 2020. Seems pretty constructive, and looking at that and just looking at things at the company level, which are executing really, really well right now.
All right. Mr. Forbes, top 100 advisor. What were you here a couple weeks ago?
Mm-hmm.
You were underweight stocks. You were cautious, right? Memory doesn't fail me, right?
You're pretty good.
So what are you doing? What's up now?
I think the reason we were positioned that way is we thought the market was discounting a lot of good news or a lot of probable good news, and we were a little worried that might not happen. You needed better than feared reports on earnings. Got them. You needed better than feared on manufacturing. Today you got them. It was a lower number than expected, but better than feared. You got it. You needed good jobs numbers or solid jobs numbers, and you needed incremental progress on trade. And the fact is that cascaded really well for markets, and that's why we are where we are today.
So where are you today?
We're neutral on the U.S., and we're still underweight stocks globally because of our underweight to the Eurozone. Okay, so
why are you neutral the U.S. right now?
Just because of the move that we've seen, and we think some of these macro risks could play out worse than feared. I think that's a low probability outcome, but it's an outcome where the tail risk is a little higher, and you continue to need to see progression on all these fronts for the upside to happen, and I think the upside is going to be measured. I don't think it's going to be as big.
All right, Tom Lee, why is Rob Sechan's positioning wrong?
I don't think it's wrong necessarily. I mean, I think everything that people have raised here as concerns are valid, true risks to the market. But I think the combination of, the Santa Claus rally that's happening now, client positioning, JP Morgan data shows, clients are positioned the same way they were in July 2016. They're bearish.
He's neutral, though, the U.S. stocks.
Yeah. And
you're not. You got your pedal on the floor.
Yeah, so
right?
I think...
You're like on the Autobahn.
Correct. I think that the next 8 weeks will be like fireworks. I think that we could easily be above 3,200 before the end of the year.
I think that's possible.
Fireworks.
That is possible, and it's probably the high probability outcome. And then you get into the election cycle and what ends up happening there. Who knows? But the underlying fundamentals are good. I think what Tom talked about that, we may have underestimated was positioning. We were in the consensus. And when you're in the consensus, and you have incrementally positive news, you're in a % here, 50 basis points there, and it's been a grind, which means the fundamentalists are being pulled into the market because they're underweight. And you saw hedge fund positioning in September. Performance was not that good in equity hedge. It lagged the market quite significantly, and I think you're seeing a game of catch-up being played right now.
Tom Lee thinks that you're going to move from these defensive
we're already doing it.
into more offensive cyclical stocks, right?
Yeah, I think even today's reports on ISM, and the jobs show the industrial cycle's bottoming, which means 2020 economy is better than this year.
He was very close to not confirming that, by the way.
Does it really show it's bottoming? I don't see that. Chicago PMI yesterday stunk.
Yeah. True, but, semis started rallying in May, the DAX in August, and industrials in October. So 3 very sensitive but lead to PMIs
they're anticipating a change in the economic data that we're not yet seeing. And when I say not seeing, okay, yes, this ISM this month was higher than last month, but it still was below expectations.
Well, the market doesn't wait until it sees it. It anticipates it either positively or negatively.
Exactly my point.
Market's moving up in anticipation that Tom Lee's right that we've bottomed.
Let's change the tense of your verb. It has moved up. Now, where it goes from here is the question we're trying to answer.
It's still moving up.
Factual statement.
We just broke out of a range that we've been
at any point in time. We're at the present point right now. Where do we go from here? 3,200? Yes. I don't think by the end of the year. And I'm going to be very specific on why. No, but very specific on why here is because phase 2 or whatever number that comes after phase 1 is so hard to achieve. You think Huawei's getting off the banned list? No way. But I think China's going to change IP rules?
I don't think IP, which has been around forever, they're stealing our technology, has anything to do with company guidance and forecasting, right?
It has everything to do with CapEx. It has everything to do with CapEx.
Well, it hasn't in the past.
It has for the last year. Absolutely it has for the last year. China trade tensions have absolutely brought down CapEx.
Well, that's what I agree. I'm saying IP's got nothing to do with CapEx.
IP is the next thing that is on the plate as far as trade tensions easing, and it's not easy to go after.
Focus on what I'm saying.
Focus on what I'm saying.
What I'm saying is that
what you're saying doesn't matter. Okay? That's why, I'm listening to what you're saying. You're talking about over the last 20 years, IP theft hasn't stopped the market. That's fine. But what I'm saying is the market right now is going up on trade tensions. And for those to ease from this point in the present forward, you got to start attacking IP.
You're saying that's a speed bump.
Give me a second. You're conflating 2 issues. I'm saying they're 2 completely separate issues.
I am not.
Jim, let me finish 1 second.
We've been having a fine debate. I like those. I don't like when you talk over each other and then the viewer is like, I don't know what the hell anybody's saying because I can't understand it. So go ahead, Steve.
I agree with you. What I'm saying is the IP is a completely separate issue. It's not weighing on anybody's investment in the market. If they do away with tariffs, if they limit tariffs, that's what's going to drive capital investment.
That's already priced in.
Okay, you think it's priced in. I think it's priced in to a large extent. My thing with the risk to the market is earnings. I don't see the bottom that you're seeing. I think it's very difficult to read the markets these days to assume because industrials are moving up or capital equipment stocks are moving up, that means we're bottoming. In fact, the data does not allow you to draw that conclusion conclusively.
So let me ask you this. Maybe we're not bottoming from a manufacturing side of things.
Right.
Okay, so that keeps the Fed engaged. And as long as the consumer remains strong, why can't stocks continue to go up, Jenny Harrington?
So I...
Does that make sense?
And I think the reason that
Plausible?
the market's going up is because if I look at my portfolio, as it may be indicative as of the broader market, you know what our average earnings beat has been so far this quarter? 13%, right? That's why the market's going up, right? And since earnings started, markets up, since our first company reported on the 15th, we're up like 2.5%. Market's up about the same. Like that's what's driving the market more than anything. Jim looks like he's about to explode because he wants to go with
not explode.
Well, look, to your point, if I would have waited,
yeah,
all right. You've been saying you need a trade deal. You need a trade deal. You need a trade deal. I mean, it's like ringing in my head over the last many months.
And
if
I've been invested for that.
Had I have waited,
I never said wait.
I'm just saying, had I waited,
I'm glad you didn't.
It would have missed this whole thing.
I'm glad you followed my advice.
Why do I need a trade deal now to get the final 2 months of the year fireworks that Tom Lee says?
Because you're at 3060-ish on the S&P 500. You're not at 2800. It's that simple. And I'm glad you didn't wait. The whole time, I've been very consistent about staying invested. I've said it on the show. I've tweeted it. Now, to Jenny's point, and everything I'm talking about, Scott, is where do we go from here? 3,200, yes? I don't think so by the end of the year.
It's 4.5%.
And the thing to your point about earnings growth of 13%, you look at 2019 versus 2018, it's flat. Hang on one second, okay? So this rally in the stock market is based on 2020 earnings, not 2019 earnings. And for 2020 earnings to have the 10% growth that most analysts are predicting, you've got to get more from China-U.S. trade.
And you've got to get multiple
Look at transportation. Look at how bad railroad car loadings are. That is a direct effect of trade tension.
But this is a nuance, but it's important. I'm not saying I have earnings growth of 13%. I'm saying we've beat expectations by 13%. Okay. And that's important, right? Because it's the difference between what people were expecting going into this quarter and what they're actually getting. And they're just getting companies delivering. And you know why? Because the economy underlying it all is strong. And what I've said all along is like, I don't need trade. I don't need the Fed. I just need the companies to deliver. That's what they're doing.
I think flatter, first of all, what you're talking about in terms of surprises, it's typical. This
not to that degree.
This earnings season,
maybe in your portfolio, but I agree with him. This has been in line.
Exactly.
It's been in line with earnings historically.
Well, then maybe we go back to what? Okay, fair enough.
Yeah, I mean, maybe in your portfolio, I get that. That's why you get paid a lot of money to pick stocks, right? But
there we go.
The reality of it is, broader market participants are not having that same.
Or maybe
experience.
It's because I'm value leaning, and the value leaning were underestimated, and that's what's bumping up the broader market.
It's like Dubravko Blakos from JP Morgan, right? You know him. You've seen him. He was on the show the other day. He was talking 3,200 by the end of the year as well. Yeah, but that's pull forward from what you may get for next year.
Yeah, it's a possibility. I mean, I'd say that's the risk, but this year is looking a lot like 2009. I think it's actually the start of a new bull market, and I think the slowness we've seen, which has caused nowhere markets for the last 20 months, is resolving with the industrial cycle bottoming and a new expansion, which means, I still think it's possible to be like S&P 4,500 in 2 years. That's how flat markets resolve.
I don't see how you'd say that this looks like 2009.
Well, just the start, forget that year, but the start of a new bull market.
No, but that's why I'm saying it, because you're coming off a market that corrected 34% the prior year, right? Versus a market that's been up.
Sure, we had a 20% drawdown last year, and global markets had the worst year for risk markets since 1900, so it was a proper global equity bear market. I think the U.S. decoupled, and I think that's why the U.S. has held on better.
Of course, you need your trade deal to get your new bull market.
Yes.
Why isn't that plausible, though, when you think about it?
Plausible,
trade deal
50% higher in 2 years.
I mean, we don't have to match the performance of 2009 and throughout to be a bull market. This is one of the greatest, longest bull market of all time.
Right. So we're not
measuring everything against necessarily that. We're just saying consumer remains strong, right? Earnings have troughed. The economy's trough, things pick up, trade deals signed.
Look, you do have a super Goldilocks environment. I mean, that scenario could play out. Again, you have to be positioned properly to have some of that exposure. You have a world where interest rates are low. They look like they're going to stay low for a long time. There's no inflationary impulse for a variety of reasons. You have good earnings growth. You have a strong consumer, a reasonable economic trajectory, and you could have a continuation of this bull market for a long time.
The fly of the ointment, though, isn't it? I mean, the election.
Yeah.
Is this going to be maybe the start of a new bull market? It could also be the start of what could be one of the most short-lived bull markets, depending on what happens in the election.
Yeah, I agree. I think the market would get very nervous next year if we're looking at momentum shifting towards Democratic White House. But conversely, I think the markets are telling us that the probabilities are a Republican White House in 2020. Post-2020.
I agree with that.
Okay. Whatever. You believe cyclicals and value are the best overall bets. And then you're into stock picking as well.
Yes. So, when you look at the seasonal playbook, value actually tends to work really well in the final 10 weeks, which is where we are, and I think that's why your value portfolio is doing so well. But you want to stick with the leaders, and the cyclicals have been the best place this year. So I think if you're cyclical, overweight, value overweight, plus some of the stocks that on our list are the ones that you want to own in the next 8 weeks.
I'm not bearish. I mean, I'm very positively disposed to an up market with my positioning. All I'm saying is that for us to see it run away, we're going to need to see the earnings growth come back.
Of course.
We're going to need to see tariffs being put in abeyance or cut back.
Well, if we haven't bottomed, his thesis fails.
Let me illustrate this with a point of where we are versus where we want to go. Class 8 truck sales, all right? These are the big semi-rigs, right? This year, they're tracking for 150,000 annual sales. That compares to a recent high about 2 years ago of 450,000. That's a decrease of 2/3. What does that due to? That's due to trade tensions, okay? That's why goods are not being shipped. Now, I want that to turn around. I've got a heavy exposure to the transportation sector in many regards. Railroads, telemetry, you name it. But for that to turn around, yes, Steve, tariffs need to be delayed or eliminated.
That's right.
And
It's
then,
the short cycle industrials that you're talking about.
Tom, you'll be right. Okay, if those trade tensions ease and we go back to selling just 300,000 Class 8 trucks, we're going to feel a heck of a lot better. I just think there are hurdles that have to be. There's action that needs to be taken in order to get there.
How many months have rail car data been weak?
For over a year.
Right.
Over a year.
Where's the S&P today? 3,055.
And we've all enjoyed it. We don't look in the rearview mirror. You don't look in the rearview mirror. Your question to us is always, where does the market go from here?
What he needs to see to be a catalyzer for a significant further advancement.
What I'm saying is that maybe you only need the consumer not to weaken. Is this a consumption economy or an export economy?
It's a consumption economy. You're 100% right. And next week, you're going to be watching some of that data. A lot of that data is coming out on the consumer next week. ISM services, consumer confidence.
And as long as that remains strong, are we not in a good place despite the weakness in the manufacturing economy?
Yes. I think we're fine through up until the date that the agreement gets signed between Xi and Trump, and then going forward from that. We've got the Fed that's accommodated with a good employment number. The market's optimistic, okay? By definition, when it goes up 85% of the time, it's optimistic. So to try to pick the point in time where it's going down, absent just a huge tell, is kind of ridiculous. What I'm curious about, though, with your concern about earnings and being topped out, why are you in such economically sensitive stocks?
Because I believe
that aren't undervalued, by the way.
Here's my point. I'm fully invested, so let's get that clear, Scott, because I think sometimes you're looking at me saying, why are you being negative?
How often are you not fully invested?
From time to time. I'll take cash up to 25% in an equity portfolio. I'm at 3% right now, so I'm in, okay? My point is, I need to see some progress on phase 2. My second point is, I expect there will be progress on phase 2. Both economies are smarting from this, okay? And whether it's a ban on Huawei or tariff, both economies are smarting. So I do expect that the rational outcome, I've said this for a while, will be achieved. My point is, you need to have the rational outcome to be achieved in order to get that next leg higher.
We're making the exact same point on that topic.
So you realize, though, if phase 1 actually gets signed, that the train's going to be far down the track by the time you start thinking.
And you realize I'm 97% invested, but also
no, I
I'm
don't
actually
necessarily think we are there.
But we're there in terms of we are invested for that outcome. It's not like we're massively underweight stocks. We're invested in the areas that we like. We're invested in communication services. We're invested in consumer discretionary, focused on those pockets of strength within the economy. And so quality growth. You look at what's happened to quality growth at a reasonable price. Anything that has revenues and earnings has been smoking hot of late and doing
that's
really
fair, at the expense of the ones that don't, which have been smoked.
They have been smoked, no question. It's a story of haves and have-nots right now. So if you're exposed to that, and that's how we're positioned, you're going to do well, even if you have punk earnings growth. I'm curious, I ask you a question, Tom. What is your earnings growth forecast for next year?
I think next year earnings growth will actually be more than double digits. But part of it is the idea that this, like if you look at industrial earnings and basic materials and even energy, they've been smoking. Yeah, they've just been whiffing for more than a year.
Yeah.
And I think that's the turn that's coming. So I think
that would be very powerful. I mean, my expectation is you get 5.5%, and you get some multiple expansion, and that's what.
I just want to check and see what's in. What are you drinking?
No, Tom's quoting consensus.
Kool-Aid.
If you look at the FactSet numbers, they're exactly what Tom's saying. They're like 10 to 12% expectations for earnings growth next year. So if we get past the election and the bumpiness in the middle of it, we should have really decent earnings coming in. So once we get past it, we can move on. We can start to grow again. We can have your own special fireworks. I'm going to consider them like sparklers. 3,200 is only 4.5%.
So I've got another question. What if we don't get a trade deal? What if we don't get the election outcome we want? What if the market is not right on the Fed? Market's expecting 40 basis points more of cuts. What if everything doesn't play out in the Goldilocks storybook ending, right? What is the downside versus what is the upside if it plays out right? And I think what Steve's saying, what Jim's saying, what I'm saying is the upside feels like it's a little more capped. The downside, if this doesn't play out as expected, feels significant. And that's...
Yeah, I mean, it's hard to know.
That's a fair and a good question.
It's Rob, it's the key question. I think all that is discounted in S&P 30/50 is a low probability of a trade deal, no cyclical upturn, no industrial cycle bottoming. I think the market is priced in a lot of these concerns. So I think if we do get it, we have an asymmetric upside.
Okay.
I think the downside's limited just because of where credit is and where the Fed is, and
where positioning is. It sounds like you think there's a lot of cash on the side. Okay.
I'm sure there's a lot of cash on the sidelines. And if you just look at fund flows alone, it stuns me every time I see it how much money continues to pour out of equities. And then whenever I'm talking to new clients or even existing clients, nobody's happy, right? Everyone who's getting in with cash is terrified that they're buying at a top. Everyone who's in is nervous that it's the top. There's a lot of fear that's holding the whole thing back. So I think Tom's right. Like I think it's priced in at this multiple.
A spring that's a little coiled.
And in theory, with Treasury yields where they are, the multiple on the S&P should be a lot higher than it is. So if you think maybe the multiple should be 18 to 20 times, trading at about 16.5 times would suggest that a lot of worst case scenarios priced in.
I mean, you would think, given all of the risks that have been in front of us for the entire year, where positioning and sentiment has been for the bulk of the entire year, we're having the best year for the S&P since.
So if you took out 2013, it's the best in almost 23 years, which means in everyone's career. I mean, people managing money for 23 years haven't seen a market this good. And that's why I think there's a signal coming from what the market's telling us. I think the cycle's turning, and I think people have priced in a lot of bad.
All allocators have to decide when they want to hit the brake, tap the brake. There's a lot of decisions that go into this, and part of it's a function of how far you've traveled.
A lot of them have been riding the brake.
That's not been us. Yeah. We've been there. We just recently.
No, I'm not saying you in general. I'm just saying overall.
That's
been a feeling of riding the brake.
Yeah,
that's a factual statement, and that's why you have this potential uncoiled spring that's going to launch the market higher and get more people drawn in.
All right, good stuff. Good to see you. Thanks for coming out
great
here.
To see you all.
Always engaging in the conversation that we like to have. All right. Here's what else is coming up on the halftime report.
Pinterest plunging on a revenue miss and disappointing forecast. But one firm says this is a big buying opportunity. Our experts will debate it next in Call of the Day. Plus, the investment committee is answering your questions ahead in Ask Halftime. You can reach us at cnbc.com/halftime or tweet us. The Halftime Report with Scott Wapner and the Traders is back in 2 minutes. The CNBC program is sponsored by Payton and Regal.
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want comedy, coming up, way better than the dad jokes in this house. Documentaries, I got ones about space, sharks, or superstars. Or how about dramas? I've got Emmy-winning shows. Oh, I know, so fancy. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
We are back, and Apple shares are back at another all-time high today. The tech giant's highly anticipated Apple TV Plus debuts today, entering a crowded streaming space occupied by Netflix, Disney, Amazon, AT&T, our parent company, Comcast, as well as others. You don't own Apple.
No.
You apologize almost every time you're here for the fact that you don't.
Somewhere in between sorry and proud.
But you say that, why proud? How could you be proud?
Because there are so many better things to own, right? That have like really strong growth, that have a really strong free cash flow yield, that have a really strong dividend yield. And Apple just fires on none of those. And all of their earnings have been driven by pricing increases, not by unit increases. And so I don't want to own that. Are we talking about Apple TV now?
Well, yeah, but I'm having a hard time getting past what you just said.
Everything she said is just about right. I mean,
right?
They've had declining earnings, they've had declining revenues, yet the stock's moved up from multiple expansion and from momentum. Yeah. So it's my biggest position, so I'm there, but I know what I own. So it's I bought a pair of the AirPods yesterday. There's no scarcity, at least where I bought them.
Mm-hmm.
They have plenty of them. I said, is there a run in the bank here? He said, no, they just bring out more and more. Yeah, the new ones.
Well, of course they have plenty of them. Did they just come out?
Not of course. Not of course.
You don't mean the noise canceling.
Not of course.
Did they just come out, or is it just me?
They just came out. Scott, not of course, because when they launch new products, typically there's always a scarcity factor. Whether it's the iPhone 11 or whether it's the iPhone 10, you've got to wait. The first few weeks they launch, it's very scarce.
Phones are a little bit different.
That's their game.
Phones are a little bit different than some of these other.
I wouldn't say so. It was true of the first AirPods.
I think we better back off Steve a little bit. He looks like he's ready to
Only back off if you're going to be wrong. If you're going to be right, you can come at me.
He's a little cranky today. But on the multiple.
Don't argue about Apple with the guy who just said it's his biggest position. Okay?
I'm not going to
argue with him.
Through appreciation.
Don't argue with him.
He's a little tense today. Are you noticing
It's this new diet that he's been talking about.
But the multiple.
You say no one cares about Apple TV Plus? That's what I'm reading here.
I don't think they do. So I'm going to use my husband as the barometer, right? He loves TV. He has no interest in getting Apple TV. He's got He's got the AirPods. He's got the phone.
Is your husband a millennial?
No.
It's not. Well, that's probably why.
I don't know. I don't think
that's the whole
think
story
from
there.
What
Not
I've
true.
heard, I don't think
My
they have a
millennial
compelling...
kids do not care about Apple TV. It's not in
What's
any,
going on?
It's not in any discussion whatsoever. They don't have enough content. They've got two shows.
That's what I was going to say. And the main show with what is it, Jennifer Aniston and Steve Carell's been banned.
Ratings not good.
No, so I don't know. I just think it's not a very compelling product.
The comparable is The Watch, which when it came out, there was some modest expectations, and people really started to forget about it after a while. And it's become forgettable, even as it's contributed a little bit. The point being is that Apple TV there's no negative, there's no positive, it's neutral. If it does well, the stock will react, but if it doesn't do well, it's not going to hurt the stock. It's not what moves the stock. What moves the stock, iPhone sales still, and services, which, yes, Apple TV will contribute to, but it's not the bulk of services.
For me, I would love to buy Apple one day, and I do always say this. And one day, the market will tank.
We should wait until it hits 300.
I'm aiming more for 200. But like one day, the market will tank, right? It'll just go down irrationally.
Right,
and then that
like
point
last
I get
December.
Like last December. That'd be a great time to have bought it.
But you'll find other stuff to buy because other stuff.
Isn't that when you could have gotten it at 150, Jim?
Yeah, I was waiting. Listen, I deserve it. You know what? In all honesty, you can't give me that heat enough.
I'm only saying it as an example for Jenny.
I'm thinking it before you said it.
And in December.
And in those
and
points
Apple
in time,
went
you can
sub
buy it.
150.
So I didn't buy it then. I was fully invested. I didn't have cash, and I had more at that point. I had more compelling things to buy that were a better fit for my dividend portfolio. But if you're looking at it for growth or you're trading, then that's when you buy it.
What's the minimum dividend yield that you would buy a stock
for? Me, 3.5%. So it's pretty rigid.
Way above where it is
now.
Yeah. 3 times that.
I did own it a long time ago. Like back when I worked at Neuberger Berman in the early 2000s, and there was enough yield back then, and I owned it for a long time, and it did well.
Big smile when you talk about owning Apple. Now she doesn't own it.
No, but I want to give Jim credit. He was pushing it at 218.
Right.
I forgot that.
Yeah, I was on with you. I thought it was very
ignored it at
bold.
154.
I'm still smarting from the 140.
Let's talk about Pinterest. That stock's getting hammered today, despite an earnings beat. Miss on revenue, slowing growth. Oh, shares are getting smoked. Pinterest said expenses more than doubled for the current quarter. D.A. Davidson, though, today, this is gutsy. They upgraded to a buy. It's our call of the day. Who wants a crack at this? Pinterest, is it a buy on one of the worst days we've seen for the stock in some time?
This feels tough. I mean, if you're going to be in and I'm calling it a social media stock, why do you have to make it hard and go into this name? Why not go into, I own Alphabet, you can own Facebook. Yep. Why not go into one of the big giants that's just killing it?
I third the motion.
So
too hard.
It goes to kind of the sentiment thing you were talking about around, quality growth versus now questionable quality of the company's growth.
And I think that trend persists.
Growth at any price is kind of over.
Growth
for
at
the
a
time
reasonable
being.
Price is here to stay. Period. That's
Always
what
will
we, and I think it's definitely a sustainable theme. It's Buffett's whole methodology, but there's a whole new category of growth that's emerged. And if you do believe we're late cycle, investors typically pay up for quality growth. And you look at most of these managers that focus in this space, they're up nearly 30% for the year.
Okay, let's get the headlines now from Sue Herrera. Hi, Sue.
Hello, Scott. Hello, everybody. Here's what's happening at this hour. Actress Lori Loughlin and her husband Massimo Giannulli are contesting the latest charges against them in the college admissions scandal. Their lawyers filing court documents saying the couple plans to plead not guilty to conspiracy to commit federal program bribery. The couple also waived their right to appear at a November 20th arraignment. Fires continue burning this morning in Ventura County. The Maria fire is now consuming some 8,300 acres. 7,500 people had to be evacuated. There have been no reports of injuries. Penn State University is looking into a new allegation of sexual abuse against former assistant coach Jerry Sandusky, although it would not go into any detail. It comes as Sandusky awaits his resentencing hearing next Friday. He has been serving a 30 to 60-year prison sentence. And Kohl's is the first major retailer to put out its Black Friday ad. The chain posting the 64-page sale online early this morning. Its stores will open at 5 p.m. local time on Thanksgiving. That is the same as it has done for the past 2 years. You are up to date. That's the news update. Scott, I'll send it back to you.
Appreciate that, Sue. Thank you. Straight ahead, betting on the banks. Financials up 20% this year and on track to close at a new 52-week high. Today, we are joined by the BNP Paribas USA CEO for his take next. Halftime's back right after this.
you hear the call of the wild, answer with a pair of Skechers.
It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
There's It's a Friday Afternoon happy. Listening to a banger happy. There's no traffic on the M1 happy. England won the Ashes happy. There's only 54 days until Christmas happy. It's almost home time happy. Got a free brake check happy. You get that kind of happy from QuickFit in Watford. Book online now at quickfit.com and drive away happy. Terms and conditions apply.
Do you remember picking out your engagement ring in the jeweller's window? Or choosing your first home? Or deciding the names of your children? When it comes to the important choices in life, you've always taken the greatest care. So shouldn't the same go for which firm of funeral directors you use? After all, that's an important choice too. At Dignity Funeral Directors, we're like you. We also take the greatest care. Our name is your assurance we'll be there by your side every step of the way. Just look for the sign that says Dignity. It's on all our branches and on the Dignity website. Dignity Funeral Directors, taking the greatest care.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
The bank trade has been one of the best in recent months. The financial sector recently making new highs. So can that continue? Let's ask our next guest. Jean-Yves Filion is the CEO of BNP Paribas Americas. He's back with us live here on the show. It's nice to see you again.
Scott, it's great to be here. Thank you for having me.
Of course. Your stock's up today off your earnings. Is the environment better for financials now?
Well, as it relates to BNP Paribas, the Q3 was quite solid. Volumes up, revenues up across the three divisions for the group. Management of the cost line has been effective. Very low cost of risk, obviously. This explained, the good situation of the net profit, basically. Environment is contrasted. If you look at this U.S. economy here, I believe it is actually quite resilient in spite of some softening you've seen recently. But spending time with CEOs most of my days, I see them confident in terms of GDP, in terms of employment, in terms of consumer spending, confidence. We'll see later next week what it really does. Where I see hesitation is when it's time to look at more like medium-term investment or M&A transactions, more strategic or CapEx.
And you feel like that's obviously related to the trade uncertainty?
I believe that, to your point, the challenge of this economy is not so much coming from the inside. It's coming from the outside. Uncertainty linked to geopolitical, political, and social tensions. Trade is one of them. Brexit could be another one. It's a longer list.
I've seen written where people have called you the most European of the European banks because of the exposure you have in the markets that you do. So theoretically, you would have a better eye than many on what's happening in the Eurozone. Do you feel like things have bottomed or are in the process of bottoming there?
I believe the bank is probably a good proxy for the Eurozone, given our lead presence there. But just before I get to your question, I think the strength of this bank is its diversified business model. diversified geographically, diversified in terms of products, and then diversified in terms of clients. What I see happening in Europe is contrasted as well, meaning the main challenge there is negative interest rates. It has weighed on the banking system for sure. One could argue actually it's probably more positive for corporates and consumers. Not so obvious at times, right? But looking into Europe more deeply, you remember the peripherals, Portugal, Spain, Ireland. I mean, they've recovered, massively. If I look at some other countries more individually, France is doing really well. Germany is challenged on economic activity and export, but still strong. And the Nordics are actually a strong pillar of economic growth. Then I believe that the Eurozone, if we can provide probably more stimulus in terms of fiscal policy, I think monetary policy might have done whatever monetary policy can bring, could have actually an interesting future ahead of them.
So we manage an international strategy also. And a lot of the pushback I get is the blanket statement, oh, international's terrible, Europe's a disaster. But the picture that you laid out just now, which we believe in too, shows incremental improvement across many of these European countries. What does it take to get people to appreciate and realize that there's incremental improvement?
Well, it's an excellent point. I think what it takes, and it's probably what this bank is benefiting from, it's to be in the field. It's to have boots on the ground. When we speak about Belgium or Italy or Luxembourg or Turkey, we own banks there. When we speak about the platform here in the United States, I have 14,000 people across retail and wholesale and, dealing with clients every day. It's a $6 billion revenue platform. I think it's really being connected. I don't believe so much anymore in a global firm per se, but more like in what I would call multi-local.
You have excuse me one second. You have a more substantial, say, U.S. footprint than many European banks do, and you're looking to obviously grow that. So do you see a scenario where rates are going to rise anywhere markedly from where they are now? I mean, the Fed just signaled they're going to pause. Where do you see it? Because that plays into the whole conversation we have every day on whether this trade that's been well received by investors and financials continues.
And by the way, I think you do it very eloquently here, and you're highlighting a lot of the different dynamic here. Well, your point is how much monetary policy can bring, particularly when you have a still resilient economy here. However, what I think the Fed is doing here, and central bankers are fact-based, they are just adjusting to what the overall economy is doing. You cannot sustainably have deep negative interest rates in Europe and basically not doing anything here. Having said that, I still believe that monetary policy is probably not sufficient, that fiscal policy, which by the way took place here with the tax reform, and maybe more engagement in, I would say, development such as pushing further infrastructure or investment in education or, revisiting healthcare, which probably could, I would say, start another kind of spending and job creation. Job creation, by the way, the report today is quite impressive, right? Probably above so. Guidance, which I think supports this belief that this economy is more resilient than anybody believes.
I completely... Do you want to go ahead?
Go ahead, Jim.
I completely agree that the need for fiscal stimulus is there, but you have a political and a cultural issue, particularly with Germany, that prides themselves on balanced budgets. It would be fantastic if Germany said, we're going to borrow until the 10-year Bund goes positive and used all that money to build infrastructure. Will they ever do that? How does that happen? How does the political will get created?
I think you touched a very critical point. Beyond Germany itself, by the way, back to the future of the Eurozone, which I believe there is a real future. By the way, Brexit happening, it's already benefiting the Netherlands, Germany, France, in terms of getting more space to grow in terms of financial markets. And we need more leadership from France and Germany going forward. The challenge, what I can see from here, obviously, with Germany is the more QE they might be doing, because German, savers are very conservative. You would expect consumerism to be boosted. But actually the reaction is because more QE, more uncertainty, more prudence. And basically it provides somewhat the other way around. And I think that's probably why there is some hesitation there. In any case, it's still a strong economy. In any case, I believe that some of the key, I hope, European countries will not only get more involved in fiscal policy, beyond monetary policy, and have, there is something that is missing in Europe, and I'm a big Eurozone person, is a similar capital markets as the one we have here. When you look at the capital market in the United States, capital velocity is amazing. It helps the banking system, because they can recycle their balance sheet at a faster rate. 80% of the funding is coming from the capital markets here. In Europe, 80% of the same funding is coming from the bank's balance sheet. Then creating a union capital market, more capital velocity, it could start with a structured securitization market there. There is plenty of collateral assets to do that. Would probably be a good next step.
Let me leave our conversation with, we lost someone recently that many people knew here in the business world. I know you knew very close, Mark Hurd. I wanted to give you an opportunity to say your feelings about Mark and your relationship that you had as sort of we all continue to grieve his loss.
Well, thank you so much, Scott. Well, Mark was a dear, dear friend, and I've had the privilege to know him for the last 20 years. I've been impressed by his leadership at Oracle. Wonderful personality. He was the kind of person who provided simple solutions to complex problems. And he has such a sense of humor, even under the most tense situations. We had many things in common, including tennis. Mark was a huge contributor to the tennis world. I can only say we all miss him, and I miss him tremendously.
Thank you for sharing that. It's good to see you again.
Thank you for having me.
All right, Jeannie Filion again, BNP Paribas America CEO. All right, we're ready to answer your questions. We're going to do it next on Johnson & Johnson, Electronic Arts, Cloudera, and more. You can reach us. You still have time. CNBC.com/halftime or tweet us, and we'll come back in 2 minutes.
So, ServiceNow put your workflows in the cloud, huh?
It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick, and relax with 365 beautiful beaches.
So yes, sir, what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want horrors, no problem. It's not real, it's not real, it's not real. Documentaries, I got ones about space, sharks, or superstars. Or how about comedy? Coming up, way better than the dad jokes in this house. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto renew, terms apply.
NFL fans, the action continues this weekend on TuneIn Premium.
10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern. And closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Far wing, elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now. Hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA today to start listening.
All right, let's answer some of your questions now. First up, we got Jim for you from Max in New York. Electronic Arts, is it a buy heading into the holiday season?
Yes, I think it is. I'd like to look. It's taken the whole year to basically form a base here. 2018 was very rough on it, but I think it's formed the base and it goes higher on here as long as the consumer holds in, which the consumer should.
Okay, Steve Weiss, Sammy in California, are you still in Cloudera? Okay, and do you like it as a long-term hold if you are?
It's more of a speculative hold, and yes, I still am in it. I had sold about half the position when it got around the $9 level and bought it all back, so I still have the same position. Look, this is an icon play, make no doubt about it. It's got the perfect characteristics for him to push the company into the sale. Even if it doesn't get sold, the business is still a good business, not a great business, so it was just so beaten up. I think that it's fine here. There's a little risk if Carl ever sells, but I don't think he will.
Okay. Jenny, for you, from Dan Rich 88, ready to pull the trigger on J&J, but need you guys to advise. All right, falls on you.
All right, I'm not advising you to pull the trigger on J&J. We don't own it. I would rather. To me, there's too much litigation risk from the asbestos. They just settled that opioid lawsuit. It's trading at 15 times with a 3% yield. Personally, I'd rather own AbbVie that trades at 9 times with a 5.25% yield.
Okay, Rob Sechin, to you. Lastly, from Brad in Illinois, your thoughts on energy?
We're underweight. We're going to stay underweight for the foreseeable future, not directly exposed to trade, exposed to the second-order effects of a slowing economy, and the supply-demand characteristics are just not favorable.
Okay, thank you. Options Bulls making bets in energy. Pete Najarian joins us with that trade next. First, though, Kelly Evans is here now with what's coming up on the exchange in less than 10 minutes. Kel?
Hi, Scott. Here's what we're all going to talk about. Does today's jobs report and a bright spot in the manufacturing data give investors hope that we're safe from a recession? We will take a closer look at all that. Plus, the race for 5G heating up with China's next-generation networks launching ahead of schedule today. Can the U.S. keep up? We'll ask. And speaking of China, the U.S. government has reportedly launched a national security review of the Chinese-owned social media app TikTok. We will have the TikTok on that for you and more ahead on the exchange. I'll see you then. The halftime report is back after this.
Why is Old Dominion number one?
It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes auto-renews unless cancelled. Terms apply.
NFL fans, the action continues this weekend on TuneIn Premium.
10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern. Then closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
When Eleanor Longden got to college, she started to hear voices.
And they don't sound like me, so some of them are male, some of them sound quite young, some of them have different accents.
And they would drive her crazy until she started talking back to them.
The voices have ultimately become partners in that healing process.
I'm Guy Raz. Stories of Overcoming, that's next time on the TED Radio Hour.
from NPR. You can subscribe to the TED Radio Hour on TuneIn.
All right, welcome back to Halftime. Let's get to Alex Sherman. Has a news alert for us, Alex.
Yeah, for those who have been overloaded with news of streaming services and their costs, this may come as somewhat of a sigh of relief. NBC, our parent company, is leaning toward making their streaming service Peacock free for everyone. This is a change in the previous strategy that NBC had been contemplating, where only pay TV subscribers and Comcast broadband subscribers would get Peacock for free. Now NBC, I am told by sources, considering making the service free for everyone, whether you're a cable subscriber or not. This would be an ad-supported product, so the revenue would come from advertising for people that are signing up and actually watching the service. There will be an ad-free version, but that would come with a fee, I'm told. All of this still in the consideration phase, but this is the new strategy that NBC is leaning toward, I'm told.
Okay, Alex, we appreciate that reporting. Thank you. That's Alex Sherman. All right, rising oil prices causing some unusual activity in an energy name today. Pete Najarian joining us remotely today from Minneapolis, I presume. What do you got for us, Pete?
Yep. Hey, great to see you, Scott. Yesterday we talked about Marathon Petroleum. That stock today is up 3%. And today I'm going to give you Petrobras. Now, over the last month or so, this has had a nice run to the upside. As a matter of fact, a couple of months ago, trading around $13.60, and today it's trading in the mid-16s. What are they doing? They're buying next week's 17.5 calls, a couple thousand of those. I like to see this, and this is also a name that's hit 5 or 6 times just in the last month or so. So very aggressive buying in here, and you can see by the chart that this stock has been on a steady little bit of a move to the upside, and maybe this continues. I'm going to be in these calls for a very short period of time. I got a quick update for you as well. We talked about the financials and some of the movement we've had lately. How about Fidelity? Just a little over a week ago Wednesday, we had buying there of the 125 strike calls. Stock was trading at 126. Today, stock's trading 133. Those calls have gone from $4.80 to a little over $9 each. So nice, big, explosive move. You got to be disciplined. You got to take your profits when you can. I think this is the time to say, hey, discipline dictates action. This is the time to do that. And you've got to keep an eye on these things. But what a great fast move we saw out of this one. Unexpectedly. Also trimmed a little bit of E-Trade today as well, which we had unusual a while back. But a lot of busy stuff going on today on this Friday, Scott.
All right, good stuff, Pete. Enjoy the rest of this day and the weekend. We'll see you back next week.
Thank you.
You
too, buddy.
Yeah, you as well. We do have a big show coming up, by the way. On Monday, billionaire investor Lee Cooperman will join us exclusively to talk about his open letter to Senator Elizabeth Warren. He's accusing her of warping the facts, quote, on the wealthy. The war of words between those two heating up certainly in the last couple of days after a tweet by Elizabeth Warren that an open letter in response from Lee Cooperman. Senator Warren has since responded to that. We'll get into everything, and we'll do it on Monday. Do not miss it, noon Eastern, right here on CNBC. All right, let's get a few other stock movers today. First up, AbbVie is higher after an earnings beat, increasing its dividend, raising its full-year guidance. You want to tackle this one for us?
Sure. When I bought AbbVie earlier this year, the entire thesis was based on the fact that it was wildly undervalued and that there was a significant lack of appreciation for the consistency of the earnings and the earnings growth and the dividend growth. And so also, to me, at that point, all everyone could focus on was the deterioration of Humira. Meanwhile, that's not happening. Earnings are growing, cash flow is growing. It's a great investment.
All right, Weiss, you just bought more BABA?
I did. Look, I bought it for a few reasons. One was the China deal. I expect there to be a deal. The stock has not reacted like the others. The earnings were frankly a surprise. I'm surprised the stock is flat. 40% growth in EBITDA and revenue is phenomenal. But also the listing that's going to happen in Hong Kong. Now they're talking about putting back on in November. That's going to drive this stock much higher. So at this point, I think 180 is about where it is, slightly under. That's probably your support level. Once it breaches that, and it will, onto the upside. And then I think 200 is the easy pathway.
Okay. Let's do some final trades on this Friday with the time we have left, about 45 seconds. What do you have, Jenny?
Well, Western Digital. Yesterday they reported people had a temper tantrum over gross margins. It was down 16%. It's up 3% today. Super cheap, $2 dividend, well covered. I think it's a great time to get in.
Okay, Steve.
Bob, it was my final, so let me give you Adobe. The stock's been acting great. I still think there's huge upside into it, particularly with the street taking down their view of the stock.
Rob Sechin.
XLY, consumer discretionary ETFs, lagged by about 60 basis points going into the session today. A lot of consumer news next week. I think it'll do well.
Yeah, big news at that. We'll be looking forward to it. It's good to see you again as well. Farmer Jim, what do you have for us?
We don't talk about it too much. Caterpillar's performing really well. Going back to the beginning of the show, I do think you'll find a rational outcome in China-U.S. trade talks, and CAT's going to benefit.
Great. Good stuff. Thanks, everybody. The exchange begins now.
Thank you, Scott. Hi, everyone, and here's what we've got. A better-than-feared jobs report, manufacturing data that had some promising signs, and a market at all-time highs. Is the recession off the table, and how much longer can this expansion keep going? We'll ask. Plus, all eyes are now on the housing market. Will higher interest rates undercut one of the stronger parts of the economy in recent months? And TikTok is getting caught up in the U.S.-China spat. Pinterest sinks, Berkshire struggles, and Apple TV hits the small screen. That's all ahead in Rapid Fire today. But we begin with breaking news from the Fed, and Steve Leisman has that for us. Steve?
Thanks very much, Kelly. Fed Vice Chair Richard Clarida speaking in New York City saying the current stance of monetary policy is likely to, quote, remain appropriate. If that sounds familiar, because it's exactly what Fed Chair Jay Powell said on Wednesday. So he's now out, along with Vice Chair for Bank Supervision Randy Quarles, really saying the same thing, saying the Fed will respond to material change in the outlook, and the Fed rate cut was insurance against ongoing risks. Now, why did the Fed stop? Well, because they provided what he calls meaningful support to the economy, and the rate cuts in train will continue to provide support for the economy. It says the U.S. economy is in a good place, growing at a moderate pace, and no sign of cost pressures. But there are risks, and he lists them. They include the weak global growth, Brexit, and trade. Disinflationary forces remain, he says, and negative yields abroad could reduce U.S. yield. So we'll leave it there, Kelly. Basically, the blackout is over for the Fed to start talking, and now top deputies of the Fed chairman are out there explaining the policy.
Steve, this is interesting because Clarida, who is seen as probably the most authoritative voice on the Fed other than the chairman himself, is coming out after the jobs report this morning and able to respond to that for the first time, kind of speaking on behalf of the Fed now. So what do you think his message here is? Is it, we're done, it's going to take a big increase in inflation for us to do anything now?
I think that's right. And I've known Richard for a very long time when he was a professor at Columbia, one of the world's leading monetary policy experts. I don't think there's any reason not to take him at his word, Kelly. When he says, and when Powell says that it take a lot to bring the Fed back in, I think that's right. And I think today's jobs report they feel pretty good about, Kelly, in that it was stronger than expected. You want to maybe think about adding back in those GM workers, adding back in the census workers who left. And, we may be at a 150 to 175 run rate, and that is just fine. It suggests that the weakness we've seen in the economy, and it has slowed down, has not really slowed the job market very much.
Right. All right, Steve, appreciate it very much,
Pleasure.
sir. Thank you, Steve Leisman, and welcome to the exchange, everyone. I'm Kelly Evans, and markets are certainly in rally mode today. Dow's up 239. Bob Bassani has the action for us at the New York Stock Exchange. Bob?
And Kelly, we have gone from fears of a recession in 2020 to a belief that the global economy would just be slower in 2020. But today's data is starting to take the edge off of even that slowdown narrative that we've come to expect. So look at the October jobs, better than expected. ISM, weak but better than feared, and that new orders number did not slip. China manufacturing also was better than expected. As a result, we are seeing some breakouts, not just in the S&P 500, but even overseas. We've seen Europe at a new high. That's the EFA, Europe, Africa, Far East. Japan also at new highs. Here in the U.S., new highs in the NASDAQ, new highs in the semiconductor ETF, the healthcare ETF, and communication services as well. So what's missing from the picture? What would make the markets move up, say, another 10% in the next few months? Three issues. First, higher bond yields would move money out of bonds and into stocks. Next, trade. We need to take the December 15th tariffs off of the table. And finally, there's earnings. That's the biggest potential mover. The slow growth narrative posits 2020 earnings growth that's flat to up the mid-single digits. But if we get better economic data, Kelly, across the board, it will force traders to reevaluate low earnings growth for 2020. And that's when you'll really see the market move. Kelly?
All right, Bob, appreciate it. Thank you, Bob Pisani. And we're going to talk more about this rally right now. We had a much better than expected jobs report, that bright spot within the manufacturing data, also giving investors some hope we may be all clear on the recession front. For more, I'm joined by Craig Callahan. He's president of Icon Advisors. John Spallanzani is portfolio manager at Miller Value Partners. And Joe Lavorgna is chief economist Americas at Natixis and a CNBC contributor. Welcome, guys. Joe, how much of a game changer is this?
It's not a game changer, Kelly. It's more of what I've been thinking, which is you've had really weak manufacturing. I mean, these numbers are the softest since the recession, yet the broader economy's held up. So it tells you the U.S. is pretty resilient. We're seeing that in the data. My fear, though, all along is that the Fed now, with some of this better data, might make another communication snafu. And in my opinion, they made a mistake this week by not being even more dovish, because I need to see that Treasury yield curve be steeper. It's not steeper enough.
Let me wrap my head around this. So you're saying everything's looking better in terms of the outlook, but the Fed should have been more dovish?
Correct, absolutely. Should have been more dovish. Yes, we still have a high dollar, we have low commodity prices, and we still have pockets of the yield curve that are inverted. So we're moving in the right direction. The equity market senses that. I'm certainly not in the recession camp. The surprise next year is much stronger growth, but we still need some more help from the Fed.
Mr. Spallanzani, and I should say Bill has been having a great year.
Yes.
I mean, this I don't know if you chalk it up to stock picking, to the value rotation we've seen in the last couple months, to just kind of looking at leaning against consensus. I mean, let's remember, we've had newspaper headlines talking about a U.S. recession since last December. Okay, it's now November of 2019, and it's still not here, and it doesn't look like it's around the corner.
Well, don't forget, we have 70% of the people think we're going to enter a civil war. We have 25%. A Warren presidency has a 25% chance of, a stock market decline of 25%. So you have a lot of negative headlines. And again, you have a historic pivot by the Fed since last October to this October, where they said they weren't close to being at neutral, and now we had 3 eases, possibly 4 by the end of the year.
That's true, and that's
so I think that's a huge thing that, if you look at who's the speakers, I watch, obviously, Clarida, Bullard, Neil Kashkari, right? And I think those guys are really the guys to concentrate on going forward.
So what you're saying, and this kind of what Joe hinted at as well, is that we have had a big change since last December, and it's that instead of the Fed continuing to hike interest rates, they've now cut them 3 times, and there's nothing else on the horizon. So has that been enough to support the economy from here? And what kinds of stocks do you maintain exposure to now?
Well, value is at a 20-year, historic low to growth and momentum trading. So we're still, our portfolio trades at 10 times earnings. The S&P trades at 17 times earnings, even though our portfolio holds Amazon, Restoration Hardware, some really, obviously higher multiple names. But as we go forward, that we saw a pivot in late August, early September from growth and momentum to value, and we were up 13% almost in the last month.
And you think that momentum or that rotation continues?
Well, the rotation has to continue, because what you're seeing now is a lot of the quants that got blown out last December in that 20% correction, which nobody seems to want to acknowledge, but we did have one, have actually shut down, right? So now we're seeing more research that's leaning towards this pivot from value to value from growth. And what you see then is that you start seeing portfolio managers starting to look at value stocks more and more. Okay. And you might even you're starting to see inklings of certain ETFs that are pivoting towards, increasing their value type exposure and actually coming out.
And Craig, I know you've been looking at some of the unloved parts of the market, like industrials, for example, and saying that, financials, and saying that's a place that investors can be. But you had some concerns about monetary policy, and are those concerns alleviated now? I mean, tell us how you would characterize the stock market here.
We're value investors, and we measure stock prices on average right now to be about 17% below our estimate of fair value. So all year we've been bullish. We haven't tried any short-term market timing. We've minimized cash, and value is pulling us toward technology, industrials, financials, and consumer discretionary. Actually, the same leadership of the last 10 years.
I'm surprised that MasterCard's on your list and Adobe, because those have been some of the best performing stocks of the past decade.
Well, we still see MasterCard is about 25% below our estimate of fair value. We have a 16% long-term earning growth, and over the next couple of years, they can post 17 to 18% year-over-year growth in earnings. So it's a very impressive company.
All right, Joe, we'll just circle back to you and give you the final word here then. What do we need to watch for to make sure the Fed, in your words, doesn't screw things up? Is the market pushing them towards your view that they need to be more dovish, more accommodative, or not here? Because it seems
not
like
yet. No,
the
I
other
mean, Powell
shops
did
aren't
a
so
reasonably okay
worried.
job. I mean, he didn't make a mistake, which is now good. But we've had a lot of communication snafus over recent history. To me, again, the market's up on the good employment numbers, the lack of positioning on the equity side. Investors are underweight. I'm going to be watching data, and my guess is manufacturing's bottoming here, and you're going to see corporate sentiment improve. Obviously, China discussions are of some interest.
How much longer can the cycle keep going then? We're 10 years in.
I mean, Australia's going since June of '91. I mean, there aren't a lot of imbalances because the economy hasn't ripped the last 10 years. It's gotten better, and my guess is it could continue to get better. But again, I always worry about the Fed because the Fed has the ability to slow this economy if it so desires.
All right, gentlemen, thank you all. Appreciate it today. Craig Callahan, Joe Lavorgna, and John Spatlanzani.
Thank you.
One of the strongest parts of the labor market is anything that's cybersecurity related these days. Kate Rogers is in Washington with a look at who's hiring there and what exactly they're hiring for. Kate?
Hey, Kelly, that's right. Some 2.8 million people work in cybersecurity roles around the globe, but there's a shortage of about 4 million workers needed to properly defend organizations against threats. Now, that 4 million number includes about 500,000 workers needed in cybersecurity roles right here in the United States. Firms like TDI, where we're live today, are looking for both developers to create security programs as well as analysts. The company has competitive pay and benefits, but unfortunately, not all applicants have the right credentials.
We have a position posted and there are specific qualifications. Someone might be presented to us or come to us with, fewer, maybe half the years of experience that we're looking for, or a fraction of the total qualifications.
Another unique issue that's cropped up in this tight labor market, CEO Paul Anella tells us sometimes people actually ghost the organization. They'll say they're coming in for an interview, not actually show up, and then sometimes people have even ghosted them after being hired. Can you imagine getting a job, saying you're going to take it, and then not actually showing up for work? That's a unique phenomenon that's happening right now, Kelly. Back over to you.
Yep, there especially, and I can't imagine it, but I'm glad I'm glad in a way that things are so strong that's happening. Kate, appreciate it. Kate Rogers for us. And now Reuters reporting that the U.S. government has launched a national security review of social media app TikTok. For the very latest, I'm joined by Julia Borston. Julia, TikTok owned by China's ByteDance.
That's right. Chinese tech giant ByteDance's $1 billion acquisition of Musical.ly 2 years ago, which it then turned into TikTok, is reportedly under review by the Treasury's Committee on Foreign Investment in the U.S. Now, just last week, Senators Chuck Schumer and Tom Cotton called for a national security probe of the company on concerns about its collection of user data and the possibility for Chinese-directed censorship of content on the platform. It's worth noting the TikTok app is one of the fastest growing social media platforms. It's been downloaded over 110 million times in the U.S. alone since relaunching last August. TikTok telling us, quote, while we cannot comment on ongoing regulatory processes, TikTok has made clear that we have no higher priority than earning the trust of users and regulators in the U.S. Part of that effort includes working with Congress, and we are committed to doing so. A Treasury spokesperson tells us that it does not comment on information regarding specific CFIUS cases, but it's certainly going to be a hot topic as TikTok faces all this regulatory scrutiny. Kelly?
Any chance it will get shut down for U.S. users, Julia?
Well, TikTok has been very adamant. We've talked to them about this in the past. It's been very adamant that it operates separately here in the U.S. It's gotten so popular so quickly, though, that I think especially with all the scrutiny of Facebook and Twitter and all the different issues, whether it's around speech or privacy, it's not surprising that it's drawing this kind of scrutiny, especially considering the trade war with China. So I think that what's going to happen right now is TikTok is really going to try to show that it's operating separately than ByteDance.
Yeah, we'll see. Again, Julia, thanks very much. Julia Borston with that news for us. We'll see you again in a few minutes' time. Here's what else is ahead on the exchange.
Coming up, Leon Cooperman goes after Elizabeth Warren over her attack on billionaires and says she's warping facts and misguiding. But is his anger playing into her hands? Plus, Apple's streaming service officially launches today. We'll talk about the one luxury Apple has that could spell trouble for Netflix. And Berkshire Hathaway is underperforming big time this year. and some big bets aren't paying off. This is The Exchange on CNBC.
It's another Friday afternoon, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raj, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Welcome back. The war of words heating up between billionaire Leon Cooperman and Democratic presidential candidate Elizabeth Warren. Cooperman got in the first shot a few weeks ago on Squawk Box, warning her presidency would sink the stock market. Then Warren hit back on Twitter. Now Cooperman has written an open letter slamming Warren for her class warfare, saying, quote, however much it resonates with your base, your vilification of the rich is misguided, ignoring, among other things, the sources of their wealth and the substantial contributions to society which they already, unprompted by you, make. Joining me now is former New Hampshire Senator Judd Gregg and CNBC.com's political finance reporter Brian Schwartz, and it's great to have you both here. Brian, first, has Elizabeth Warren responded to this letter yet?
Yeah, she did last night on Twitter. She went back to her favorite go-to to have statements against billionaires, and basically she went back to the same old statement she's been saying to Mr. Cooperman, which is to pitch in more. And now you could argue the next response came just the next day, which is this Medicare for All payment plan.
That's right, this morning.
Right,
yeah.
Where she's now calling for the wealth, millionaire tax. She says she's going to double that in order to pay for this Medicare for All plan that she says that she argues will not raise taxes in the middle class. So it's kind of like a dual response in a way for Senator Elizabeth Warren in this battle with Leon Cooperman.
And to show here's what my tax plan would do for everybody else. Senator Gregg, I'm curious who you think has the tone and the atmosphere of the country right here. I mean, is it Elizabeth Warren who, people who don't, who would agree, I'm trying to say with Leon Cooperman would warn him and say, you're playing right into her hands. Now she can wave this letter around and say, look, another billionaire upset with my policies, because they know people probably won't take the time to read the whole thing.
Well, I don't think either of them have the tone of the nation, to be very honest with you. I mean, Elizabeth Warren's running as a socialist, and this Medicare for All plan, she estimates at $20 trillion. The actual estimate, the honest estimate, is about $30 to $35 trillion. And there's no way you could pay for that with taxes on everyone at a very high level. And in fact, if you look at how much tax, it's interesting. If you look at all the taxes raised in the United States since we started collecting taxes in 1789, it's about 40 trillion. So she's basically suggesting a program which is going to exceed half of what we've raised in taxes over 230 years or 250 years.
And yet, Senator,
it's incredible.
She's arguably the front runner right now. That doesn't happen for nothing, right? I mean, is it just the nature of this stage of the campaign, or is she going to be like Trump was in 2016, where people said, well, there's no way this is going to be the candidate, and not only was he won?
I think the issue is that she's the front runner because she has caught the populist wave, which has great antagonism and anger, as Trump did on our side of the aisle. But I don't think that, and she may get the nomination, but I don't think America's a socialist nation yet. I don't think it's even a center-left nation. I think it's still a pretty centered nation, and I think she'd have a hard time winning the election.
Brian, the one thing people keep watching for is if she does become the front runner, if she becomes the candidate, how will she soften her positions? You're right that today is a really interesting case where when placed under scrutiny and under a direct broadside from the other side of the aisle, so to speak, she doubles down on her Medicare for All plan, which is one of the most controversial parts of her policy.
Well, that's right. I mean, it doesn't look like she's softening her positions anytime soon. I mean, that's just based on all the things that she's been doing in recent weeks, including today's Medicare for All plan. But let's just be clear about a few things. I mean, Wall Street and big businesses were afraid of another candidate back in the day, and that was Donald Trump. They thought when he was going to come into office that he was going to shake things up and it would hurt their businesses, including on election night when the market tanked for a bit and then came back. In the letter with Leon Cooperman sent to Elizabeth Warren, he mentioned another billionaire he said came from the ground up, and that was Carl Icahn. And he on election night actually bought shares and made a lot of money. So I mean, there's been with different candidates, it seems like there's always this reaction from Wall Street, more of the establishment class.
Right.
And Elizabeth Warren is basically shrugging this off and saying, oh, well, we're going to keep pulling ahead here. And the question from donors and investors who keep an eye on these things is she ever going to kind of turn to the middle a little bit if she gets the nomination?
Exactly.
And it just doesn't seem like that she wants to go there. And I don't see it changing anytime soon.
All right, Senator, we got to go. But who do you think, if neither one of these people in your mind does capture the mood of the country, who does right now? Anybody?
Well, I think you've got some thoughtful people running the Democratic primary. I'm not a Democrat, so I'm not supporting them, but people like Amy Klobuchar, Mike Bennett, even the vice president, these folks aren't way out there. They aren't suggesting that we basically abandon our market approach to the way we do our economics in this country. They're not giving up on America's prosperity or America being a land of opportunity. Obviously, they have very liberal views, but they're rational liberal views. And so I think any one of those candidates is a much more viable candidate than Elizabeth Warren is. Yeah. Elizabeth Warren may be one of the few people that Donald Trump could beat.
Well, we'll see. Certainly the other candidates are not leading the polls right now, but there's still a lot of time. Senator Gregg, thank you. Brian Schwartz, thank you as well.
Thank you.
Leon Cooperman's full open letter to Senator Warren is on CNBC.com, also with Brian's write-up. And you don't want to miss Lee Cooperman on the Halftime Report with Scott Wapner on Monday at noon Eastern Time. We've got some new China trade headlines. Let's get straight to Kayla Tausche. Kayla?
Well, Kelly, there was a principals call that was held earlier today, and a statement from China's Ministry of Commerce said that the two sides reached consensus on principles. It said the two sides discussed the next consultation arrangements. From China's side, the call was notably conducted by hardliners from the Ministry of Commerce, the central bank, as well as from the Reform Commission. We're also getting a statement from the U.S. side, from the Office of the U.S. Trade Representative, who simply said that the call made progress in a variety of areas and that the two sides are in the process of resolving outstanding issues. So a little bit of a difference in language here. The USTR statement says that discussions will continue at the deputy level and calls today's call constructive. Kelly, the news that we still don't have is where exactly that meeting between President Trump and President Xi will be held, whereas recently as yesterday, President Trump said they are on track to sign this phase one deal.
And markets hanging on to near session highs here. Kayla, thanks very much. Kayla Tausche, Dow's up 254 points. Coming up, the race for 5G heating up with China. Major U.S. problem. That's all ahead. We're back in 2.
It was Sophie's big day.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
This autumn, as the nights draw in, beat the cold with Now TV. Curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus month passes auto-renews unless cancelled. Terms apply.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Welcome back to The Exchange. Let's get to Sue Herrera for our CNBC News update. Hi, Sue.
Hello, Kelly. Hello, everyone. Here's what's happening at this hour. Capital One experiencing technical troubles today. In a tweet this morning, the bank said some customers were experiencing an online outage, preventing them from accessing their accounts and impacting direct deposits. Capital One says it was actively working to resolve the issue and apologized for any inconvenience. Heavy rain and strong winds in Buffalo have caused widespread damage and forced evacuations. Some people had to be rescued from a flooded viaduct, and firefighters pulled a woman and a man from atop a pickup truck that was nearly submerged in floodwater. Democratic presidential candidate Julian Castro says he has reached his $800,000 fundraising goal. 12 days ago, he warned that he needed the money by the end of October or his presidential bid could be finished. The campaign raised more than $1 million from 50,000 donors. And the Washington Nationals are headed to the White House. They returned from Texas last night to appreciative fans after beating the Houston Astros in 7 games to win the World Series. President Trump will host the team on Monday. You're up to date, Kelly. That's the news update this hour. Back to you guys.
All right, Sue, thank you very much. And here's what's straight ahead on The Exchange.
Coming up, investors are fleeing Pinterest today. Berkshire's underperformance begins to draw investor attention. Starbucks launches a tiny store. And did the U.S. just fall way behind China in 5G? That's all ahead on The Exchange.
This is Apple Card. It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want reality TV, I can fill that island-shaped hole. Dramas, OMG, I've got Chernobyl. Or how about horrors? No problem. It's not real, it's not real, it's not real. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today. NFL fans, the action continues this weekend on TuneIn Premium.
10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern, and closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line, with both teams ranked in the top 10. Will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out this Saturday, with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Welcome back. Let's catch you up on a few stories that should be on your radar today. It is time for Rapid Fire. And here to break down the headlines are Rahel Solomon, Robert Frank, and Meg Terrell. And first up, some Pinterest. The shares are plummeting today on a revenue miss and weak full-year guidance. The image-sharing company on pace for its worst day ever since going public earlier this year at $19 a share. And that's roughly where it's round trip to now. Yeah, there it is, just under $21 today. Interesting thing was the results. They still beat estimates for global users. Ad sales grew nearly 50%, but the U.S. user count is what has everybody a little concerned.
Yeah. So I actually covered the earnings last night, and one analyst at Wedbush Securities told me that essentially investors were looking for a bigger top-line beat. So even despite all of those things that you said, apparently now investors are, a lot more concerned about earnings and not just how much revenue you're making.
They want profits? What is wrong with these people?
They do feel less forgiving of the IPOs now, don't they? I mean, after everything that's happened the last few months?
Absolutely. I think there's been a huge sea change. I mean, this was what 37 or 47% growth in sales in the quarter. They've got this terrific plan to monetize, to do shopping, to get small businesses, which I think works so well for Pinterest if they can get that going.
Totally. In fact, as a user, I've been wanting to
I want to buy something, and there's nothing to buy.
Yes.
So I think everything else is great, and then you look at the plan for a loss this year, and investors want to see earnings.
Still not profitable.
Yeah, I looked at the numbers because I thought, wow, the shares are down so much, it must have been terrible. Right. And it's like, well, wait a minute. Okay, their adjusted EPS was a beat. The revenue missed by $1 million. The full year outlook was basically in line, and the average revenue per user was 90 cents versus 91. So yes, I understand it's the U.S. users in particular that dropped 8%, Meg, that everyone's worried about. But this was hardly the disaster of a quarter on the surface, at least, that we've seen from other companies.
I had the exact same reaction to the numbers. I was like, this doesn't look this bad. But as Rahel was saying, I mean, when you have a whisper number like that out there and you don't meet it, coupled with the fact that there is an impatience for companies that aren't making money right now across the board, the company's in a bad spot today. Yeah, obviously.
They want to see more, especially on the U.S. side. Well, it's up to them. Roll out that shopping more quickly. Me and Robert are ready.
We're ready to pin and shop.
We're ready. Next, U.S. pharma giant Amgen announcing a big deal today to expand its pipeline in the world's second largest pharma market. Drum roll, please. It's China. Meg, you've been following the story, and everything U.S.-China related these days to me bears close watching.
It's really fascinating. Actually, I spoke with both of the companies yesterday about the deal news, and the reaction from the biotech industry has nothing to do with U.S.-China relations or anything like that. They are just focusing on the fact that China is a huge market for drugs, and it's growing, and every company wants to have a bigger presence there. And there's a couple of reasons why China is becoming more appealing. It's not just because there are so many people there, but they are changing the way that they do clinical trials. They are trying to get more internationally plugged in so that you can use data that you generate in China potentially overseas to file for approval for drugs. Plus, they are starting to update the way they reimburse for novel medicines, new medicines, not just generic drugs, every year. So they're adding more and more drugs to the national reimbursement list. And that is extending the reach of these novel medicines to more and more people in China and not just the 1%.
So why is it, if you're Amgen, what are they looking to do here by this 20% stake? Is it to directly kind of get its drugs into the hands of the Chinese market? Is it just to kind of have a seat at the table for some of the investments that you described?
All of the above.
Yeah.
BeiGene is an established company in China. They already sell some drugs there. They have a partnership with Celgene to sell cancer drugs, and they're entirely cancer drug focused. So this deal has a couple parts. They're going to be selling 3 of Amgen's medicines in China, and then they're going to work together to co-develop medicines so that they can run clinical trials in China and potentially use that data to file elsewhere. And that could potentially, Amgen tells me, speed things up around the world.
There was a kind of creepy side to this that I wondered, is it easier to do mass clinical trials in China because they don't care as much about the impact on people as it is in the U.S.? And therefore, is that data, that ability to do human trials faster on a larger scale, is that attractive to companies?
That's a good question, and I think joining these sort of international consortiums would aim to alleviate concerns that there would be lower rigors.
But in the past, has it been easier for drug companies to do trials in China?
China isn't one that I've heard about, talked about like that. It's some Eastern European countries sometimes people raise questions about. I haven't heard that so much in China, but you also don't hear about using data generated in China as much.
For other countries.
Yeah, and now that could potentially be changing.
Yeah, I don't know. And for them to be going this route at a time when there's big questions about we talk about U.S.-China decoupling, and yet here's a deal that tells you these companies, Amgen's clearly not worried about decoupling. They're coupling. They're consciously coupling.
At that point, they've said that they've been following the trade talks very closely, but this is not about that. They don't expect any political pushback. This is purely about solving cancer.
Interesting. All right. Then Warren Buffett's Berkshire Hathaway is on pace for its worst year since 2009. It's vastly underperforming. It's up about 5% compared with the S&P's 22% gain. In fact, a former Berkshire investor recently said he grew tired of Buffett sitting on his massive cash hoard. Are people questioning the Oracle of Omaha, or does this raise existential questions about Berkshire because the Oracle is in his advanced age, Robert, and now a lot of these choices, right, are probably reflected by the next generation of leaders.
I think it goes back to the old Warren Buffett saying, which is when others are greedy, be fearful. When others are fearful, be greedy. And look, we've had 11 years, 12 years, whatever it is, of people being greedy, making money, markets going higher, valuations going way beyond the comfort level of any value investor. And so he's sitting back saying there's nothing worth buying. Plus, he's been bitten by the Kraft Heinz deal, which once he is admitted overpaying for that, it's really tough to work up the courage to then do something as big and move the needle on all that cash.
And the rail stuff, I mean, the rail's been the weakest part of the economy.
Rails, insurance is tough.
Yeah.
The investments have been tough. There's not a lot of the sides of his business that are doing well right now to offset this cash that's just sitting there that investors want him to either buy back shares or buy something big. And, to his credit, we may look back 2 or 3 years from now saying, that's why he's Warren Buffett, because he didn't go out and buy something overpriced right now.
Yeah, it's not like he's ignoring the strongest part. This is not quite like the late 90s. I mean, remember, he was under massive fire then when he said, basically, I'm out. I'm not participating in this .com mania. It took him years to be proven right on that. But in this case, he owns Apple, Rahel.
Right.
He's talked about how he kind of wishes he had owned Amazon from the start, but now, that ship has kind of sailed.
Yeah, I think one other thing that's also really interesting, right, is in the insurance space, seeing that it's become a little bit more of a litigious environment, that they're starting to see some pushback with claims.
Social inflation, they call it.
Yeah, which I think is really interesting. Now, knock on wood, I haven't been in an accident in a long time. I also don't own a car. So there's that. But, just interesting that that people are getting a little bit more litigious.
Yeah. No, and that's popping up in a lot of the major companies are mentioning it too. So you're right. He's dealing blows on a number of fronts, but all right, we won't call it existential just yet. Finally, Starbucks' newest store apparently leaves very little room for disappointment, or much of anything else, actually. The company announcing its first ever Starbucks pickup store opening in New York City on Tuesday. Here's a look. There's no menu board, no pastry case. It's only 300 square feet of space for customers. Now, it actually is kind of similar to its rival Luckin Coffee's blueprint in China. This store, which we're going to see more of across the country, is just meant for customers to come pick up their online orders and head right back out. And Starbucks does say it plans to open similar spots in Boston, Chicago, LA. And then
I love it. I love it. I want my coffee as soon as possible. I do not want to hang around. I want nobody in my way. Give me the caffeine.
But here's where they copped out. We all talked about this a while ago when it was first introduced. This is so exciting. You don't have to stand in line with a person in front of you who says, well, do I want a macchiato cream latte? And they just order it. But they are allowing walk-ups to this. They copped out.
You can't not. You got to go all the way.
Go all digital.
There's Starbucks around the corner that'll take you at the counter.
No, it's totally like the hair salon, right? You have to have an appointment, but you can't completely turn away walk-ins. I mean, that's turning away free money.
But at least a hair salon, at some point, they can say we're full. You have to wait a while.
Right.
I mean, Starbucks never turns anyone away. Could they just, I think it's interesting to say, well, what if these were just complementary locations? Almost like if you have a grocery store and the wine store next door or whatever. I mean, could you pair them so that, you're right, like if you want to go walk up, you can walk up. They could double their store count just by opening these in and out spots.
Well, they already have so many Starbucks locations. I kind of feel like they are well served to anybody who wants to walk up to the counter and think about it. But I was talking with Kate Rogers, our restaurants and food reporter, who was saying this is part of Starbucks' overall strategy to bring people exactly what they want. They're pursuing delivery, she said, of coffee, which I'm like, how do they keep the coffee hot in order to do that? But drive-through locations, and as a suburban person who bought my first car last year, I freaking love Starbucks drive-through.
And they're trying to it causes traffic jams in our town, by the way. No left turn signs, cones up everywhere.
They're trying to shrink the store size and shrink the staff. So you do that with small stores that are just digital on the phone, and that's why they're trying to get rid of the whole physical store presence at its size. And I just think the only way to do that is to just say, look, for this store in particular, there's another one 3 blocks away that will take walk-ins, but this one is just your phone.
Yeah, that would cause pandemonium. That would cause so much chaos.
Rahel is not on board. Okay, the first time you have to wait behind someone ordering a venti, whatever, frappuccino for your pickup order, we're going to see if you change your mind.
Fair enough. Fair enough.
Thank you, guys. Rahel Solomon, Robert Frank, and Meg Terrell. Apple TV Plus goes live today with offerings from the likes of Reese Witherspoon, Jennifer Aniston, and Jason Momoa. Will their premium content be enough to take on Netflix's sheer volume of offerings? That's next. Take a look at oil right now, which is hitting session highs on news that the U.S. and China have reached consensus on principles after trade talks. Dow's hanging on to a 260-point gain right now. We're back in 2.
If you're turning 65, you're probably learning about Medicare.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
It's hard to enjoy your daily yoga routine when your mind is on your next VAT return and how to avoid the usual mistakes. But with QuickBooks, the new VAT Smart Scan technology does the work for you. As the deadline approaches, it checks for duplicates, looks for anomalies, and reviews VAT codes. So your biggest struggle is touching your forehead with your ankle.
Search for QuickBooks, perfect for making tax digital. QuickBooks, backing you.
Hello? This is Dustin. I found something. Is anybody there?
We hear you, Dustin. With Sky Q, you can easily catch up on epic Netflix shows like Stranger Things and then watch award-winning Sky originals like Chernobyl. Get Sky and Netflix all in one place on Sky Q for one surprisingly low price. Just £25 a month. Visit sky.com and join today. Offer ends November 14th. 18-month minimum terms. Prices may change during contract. Requires Sky Q box connected to broadband. Set up from £20. Further terms apply.
Welcome back. Once again, broken record. Apple shares are hitting a new all-time high today. They're now up 78% since cutting their first quarter revenue guidance way back on January 3rd. And with Apple launching its new streaming service today, it could end up having a pretty good head start in the streaming wars. Loop Ventures' Gene Munster says Apple could sell 285 million products next year. Remember, any new product will come with a free year of Apple TV. Meanwhile, our own Alex Sherman is reporting that NBC is now leaning toward making an ad-supported version of its Peacock streaming service that would now be free to everyone. For more, I'm joined by Trip Mickle, a reporter at the Wall Street Journal who covers Apple, along with our own Julia Borston. Trip, I thought it was interesting, given that massive device count, a few customers that they would have getting Apple TV for free. You think they're starting as the underdog here? Why?
They're not quite the underdog, but they are behaving differently than Apple has historically, right? They're coming to the streaming wars with fewer shows and a lower price. I mean, when have you ever seen Apple be the low price provider in any kind of competition? And so it just reshapes the way we have to think about Apple and what it's offering. And what it's offering is 900 million iPhones and getting this service in front of as many people as possible.
And Julia, it's interesting to tally up now. I need a flow chart here and a spreadsheet to follow which services I get for free with what. So Amazon Prime Video, okay, I get that with my Prime subscription. Apple TV Plus, okay, I get that free if I buy some hardware. Disney Plus, I get that free if I'm a Verizon customer. Peacock, I guess I'll get that free next year, but it comes with ads. HBO Max, do I get that for free anywhere?
Well, it depends if you're already subscribing for HBO and are already an AT&T subscriber. So there's a lot to sort out here, but I think it's worth noting that Apple is taking unique strategies. So many of these players, Netflix, HBO, they're focused on the library of content, having a real depth of volume of content. Apple's going in a very different direction. They're launching with only 9 titles, but the intention is for all of those 9 titles to be super premium, high-end with big Hollywood names. And at the same time, they will continue to add more content over the course of time. But I just want to mention what you said, Kelly, about Peacock now considering being free for everyone with ads. This is such a crowded space, as you just mentioned, in terms for streaming video on demand. To add ads to the equation offered for free would show NBC Universal, CNBC's parent company, deciding to go in a different direction, noting that this space for paid subscriptions is so crowded.
Full. Yeah.
Why not offer it for free and zig where others are zagging?
Trip, how much does this matter financially to Apple? In other words, let's assume most people next year are basically not paying for this. They must be operating at some kind of loss. How deep are their pockets? How much are they willing to lose to build this business?
Apple has the deepest pockets in tech. I mean, they have $100 billion in cash on hand. So there's no shortage of cash to help offset some of this. There is going to be increasing scrutiny on costs for them. We've seen profits go down all 4 of the most recent quarters, and that's going to catch some investor interest at some point, presumably. The one thing I did want to mention about this, though, is that the more contenders, the better in some ways for Apple, because they're not only looking to offer their own shows, they want to siphon 15% off of what people pay for HBO, for some of the other offerings out there. And so their shows kind of serve as a magnet to get people to come into Apple TV, the app, and then subscribe to others as well.
Sure. And Julia, we know that even Netflix, which is, if you were to say, okay, well, is there a pure play that doesn't have deep pockets to lose money here? It is Netflix. And even Reed Hastings has said he thinks the competition is good because it just means that consumers en masse are moving away from old TV onto these new platforms. But he better be right about that. I mean, they have a very high debt load. And you've got Needham out there saying they're going to lose 10 million subscribers next month. Netflix is, if they don't offer a video on demand choice, it's in the $4 to $7 range.
Yes, Needham has said that they believe that Netflix does need to dramatically lower its prices, consider adding advertising, which is something that Reed Hastings says they don't want to do. He says they don't want to do sports and they don't want to do advertising. But I think what you're raising here is this idea that Netflix may have been first to market, but now it is an incredibly crowded market. What Hastings is really hoping on is that all of these new entrants accelerate this push to direct-to-consumer options. Maybe that means more cord cutting, but the question is if people are going to be creating their own bundles, and piecing together their own packages, whether it's Netflix plus a couple other things, or maybe it's Disney plus Hulu plus ESPN plus. How many will people really want to subscribe to?
Yeah.
And at some point, they're not going to be able to subscribe to everything. And the question is whether Netflix is the thing that goes or one of these other ones.
Well, I guess people could be watching these new shows right now. That For All Mankind got much better ratings than the morning show. Anyway, we'll see how it goes. Thank you both. Appreciate it today. Trip Mickle and Julia Borston. Mortgage rates, meantime, hitting a 3-month high, and they could be heading higher after today's data. Whether the fear of higher rates will drive people to buy or not buy. We'll dig into that next.
I recently spoke to a group of students.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Reach the top of Mount Teede or relax on a sandy beach. Fly from London Gatwick to Tenerife with British Airways, with flights and 7 nights hotel from just £349 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Start hearing more of what you want.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations,
Live commercial-free news,
and every live NFL, MLB, NBA, and NHL game.
Visit TuneIn.com/premium to upgrade.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line, with both teams ranked in the top 10. Will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
When Eleanor Longden got to college, she started to hear voices.
And they don't sound like me, so some of them are male, some of them sound quite young, some of them have different accents.
And they would drive her crazy until she started talking back to them.
The voices have ultimately become partners in that healing process.
I'm Guy Raz. Stories of Overcoming, that's next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Welcome back. Take a look at markets, which are at fresh session highs today. The Dow up 272 right now. That's a 1% gain. And we're seeing similar increases across all the major averages. Some positive China trade headlines saying the talks between the U.S. and China went well, certainly driving a little bit of those extra gains we've seen in just the last hour or so. And the better data, I should say, as well, which is not only helping the stock markets rally today, it's also pushing mortgage rates higher. And rates already are hitting a 3-month high, touching 3.86% this week. They're still a bargain, but could they be headed even higher on the back of today's better data and the jobs report? Will that jolt people into the housing market or drive them away? With me now are Daryl Fairweather, the chief economist at Redfin, and CNBC's own Diana Olick. Diana, I'll just start with you. How much higher are rates now? Because this was one of the strongest parts of the economy the last 3 months, but we've made a big comeback since August.
Well, make no mistake, Kelly, that they're still pretty low as we look at them historically. But we did see a big jump up in just the last couple of weeks and now at the highest level in 3 months. Now, they are still lower than a year ago, but every time we see rates pop up, even just a little bit, that drops several million people out of the refinance population. And that's because so many people already have low interest rate loans. But when you talk about people who want to save money in getting a better loan, this is knocking people out, even these small moves higher.
Daryl, how sensitive do you think buyers will be to a slight increase in the mortgage rate? Very sensitive or not very sensitive at all?
Home buyers have a lot to consider when it comes to buying a home. It's not just the mortgage rate, it's also what they think about their personal incomes, their employment situation, and how likely they are to find the home that really is right for them. So while mortgage rates impact a little bit, I think what's more important is the fact that the economy seems to is doing better than people expected, and that matters more for people.
Dana, you agree with that? Because, again, the trends overall speaking are positive, and we know there's been a shortage of housing and kind of some pent-up factors. Can that keep the good vibes going?
Well, I think another problem that you have to consider is that the low mortgage rates that we've had over the past year have really juiced home prices. So now when you have mortgage rates going even higher and you have home prices heating up again, remember, for the first time last month, we actually saw the increases in home prices gain rather than shrink. So we're seeing that acceleration in home prices. So now if we start seeing that mortgage rates are moving even higher, that will knock a couple of people out or make people have to look at lower priced homes or perhaps say to some, I better get in now before rates go even higher. But the affordability issue is still a really big one in the housing market today. We have so few affordable homes for sale right now, and builders are not in that market, that when you do see that rates go up, you're really going to knock people out.
Daryl, is it helpful in the longer run? Because higher rates might take some wind out of the sails right now, but that's the only way people can continue to afford housing.
Well, when people think that rates are going to go up, that might give them the push to lock in that home now before they go up even higher. So it can actually be good in the short term. And when it comes to prices, I agree. Most of the demand is for homes that are affordable. That's where the most competition is. And as that competition heats up, that pushes prices even higher.
Right. I guess I'm just saying, maybe it'd be good to take a little bit of that wind out of the sails, right? If you want people to be able to afford them in the long run. Anyway, I know there's a lot bit more factors that go into it, but we'll see how these higher rates do play out. Housing has been one of the better parts of the economy the last couple months. Thank you both, Daryl Fairweather and our Diana Olick, talking about the state of housing for us. China's 3 major wireless carriers now offer 5G services, and they're now poised to sprint ahead of U.S. companies, according to some analysts. What it means if China wins the 5G race is next.
It's another Friday afternoon, yet another windy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane of the rim, going down. Right corner three, another
TuneIn Premium brings you every minute of the NBA season, so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content, learn about hot new podcasts, and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
China's big three wireless carriers have made 5G services available to customers and could soon be pulling ahead of the U.S. in terms of 5G offerings. Josh Lipton joins me now with this story and the implications. Josh?
So, Kelly, China has hit that 5G switch. It's three big state-owned wireless carriers, China Mobile, China Telecom, and China Unicom, now making 5G mobile phone services available to their customers. So that means if early adopters there in China have 5G-enabled handsets, they should be able to use the service, and that should mean faster access to everything from videos to games to VR applications. Investors clearly focused on 5G too. RBC's Mitch Steves says names that capitalize on that trend would include Qualcomm, Xilinx, Marvell. Steve says analog devices would be his top pick. This week, I asked Apple CEO Tim Cook whether he had seen any evidence that the availability of 5G phones in China impacted demand for his phones. Cook telling me he has not, calling the 5G market, in his words, nascent, but it might not be for long. Analysts at Bernstein Research estimate that there's going to be 120 million 5G subscribers in China by the end of 2020. Kelly, back to you.
Got to give Huawei a big competitive advantage, right, Josh?
So Huawei's interesting. You would think it could certainly benefit some of these big tech powerhouses like Huawei, which has already launched its own 5G handset. But one question is, are they going to be able to secure the products they need to meet demand now that, Kelly, they're on that American blacklist?
Yeah. All right, sir. Thank you. Josh Lipton on that big day in China for us. And that does it for the exchange today. And I'm going to have a baby, so I'll see you guys in March. But first, I'll see you on Power Lunch, which starts right now.
I was going to say, you got an hour still, Callie. We will see you in just a moment over here. I'm Melissa Lee. Here's what's new at 2 on Power Lunch. Stocks are off to the races. The Dow at the session highs after a strong jobs report wiping out all of yesterday's losses and then some. Will it be a November to remember? Plus, American Airlines flight attendants are fighting back, saying they will not fly on Boeing 737 MAX, even if it is approved for takeoff. We'll tell you why Boeing could be stuck in the eye of the storm for quite some time. And China short seller Carson Block of Muddy Waters slamming the NBA and LeBron James for not standing up to China. He'll be here to explain why. He is calling for them and all U.S. businesses to take a knee for Hong Kong. Power Lunch starts right now.
Welcome to Power Lunch, everybody. Kelly, come on over and deliver the news. Power Lunch, that is. Welcome, everybody. I'm Tyler Matheson. Check out the rally, folks. It's a big one today. The Dow and the other markets pretty much kind of taking a pass yesterday on Halloween, but not today. Up about a percentage point there. The Dow Industrials more than 200 points higher. S&P back in record territory. The NASDAQ notching a record high as well. It's first since July. Take a look at Apple, which we were just talking about with Josh. The stock hitting a fresh all-time high today as it launches its streaming service today. The shares are up a whopping 60%. 60%, I guess, so far this year. Kelly.
All right, Tyler, thanks very much. Now, a strong jobs report and some encouraging manufacturing data pushing stocks back to record territory today. Let's get to Bob Bassani. He's following all the action of the New York Stock Exchange. Bob?
Hello, Kelly. You know, we have gone from fears of a recession in 2020 to a belief that the global economy would just be a little bit slower in 2020. But today's data, well, it's taken the edge off of that slow down narrative that we've been talking about. The October jobs numbers, better than expected. ISM was weak, but it was better than feared. And the new orders didn't slip. China manufacturing was also better than expected. Even Eurozone GDP was better. As a result, we're seeing breakouts, not just in the S&P, but even overseas. Europe's at a new high. Wow, that's a surprise. Japan also 52-week high. Here in the U.S., new highs in the NASDAQ, semiconductor ETF, healthcare ETF, communication services breaking out. What's missing? Everyone wants to know what would move the markets up significantly, like 10% maybe? 3 issues. First, higher bond yields would move money out of bonds and into stocks. Then trade. We need to get the December 15th tariffs off the table. And finally, earnings. And this is the potential big one. The slow growth narrative positions 2020 earnings flat to up mid-single digits. But if we get better global data, it would force traders to reevaluate low earnings growth for 2020. And Tyler, though Eurozone GDP better means potentially we could argue for a higher multiple for the S&P, and that would help the markets as well. Tyler?
All right, Bob, thank you very much. Bob Pisani. Well, the jobs number sent stocks higher and has put investors' minds at ease for today, at least. So with the market at record highs, the S&P and NASDAQ, are recession fears off the table? To discuss, let's bring in Mark Morial, former mayor of New Orleans, president and CEO of the National Urban League, and Ron Insana, CNBC contributor and senior advisor with Schroders North America. LSU is doing well. The Saints are doing well. They might be number one right now. And the jobs market is doing pretty well, Mayor.
Hey, I'm glad to be with you all today. And, you know, there's a lot of reports on the job numbers being good, but I wanted to outline a few areas of concern that I think are relevant. Right now, the trade issue, if you look at the farm economy, 40% of the farm economy is being supported by these subsidies that were put into place to counter the effect of the trade, if you will, the trade barriers that were placed up. Number one. Number two, there's a report from the National League of Cities where 2/3, this is stunning, 2/3 of the chief financial officers of American cities with more than 10,000 people, so that includes small towns, predict a slowdown or a recession in 2020. And I think thirdly, while the jobs numbers are good, Ty, we see a little bit of a lessening of the pace that we've had for the better part of the last decade. So those are areas of concern. And I think what's smart is we need to be thinking about the future and thinking about whether these are signs of at least a slowing economy, continued growth is down, and whether, I think, the impact of trade, the impact of the trade tax, trade barriers has not yet been fully felt.
Let's go to Ron. The Buffalo Bills are doing well, too.
That's they are 5-2, and they're playing Washington this weekend.
They're playing my team, the Redskins, this week, and we're hoping for the Redskins, or at least I am. I know you're not. Talk to what Mayor Morial just described here, because I think it does reflect a bit of a consensus, growing but slowing in the economy, certainly slowing in the manufacturing sector, probably largely trade-related, but also part of a global slowdown. Yeah. What is the potential deleterious impact on the stock market?
Well, I think, if it were not for the trade war, the tariffs, import taxes, whatever you want to call them, this economy would be firing on all cylinders. I think I'm upgrading my outlook a bit for next year from growth recession to soft landing. I mean, the Fed's done what it's needed to do. Labor market's holding in reasonably well. If they
revised upward
on a lot of the numbers, yeah. I mean, not the way the president described it this morning, but you have to say that if there is some resolution of the trade war and that pressure begins to lift, then maybe the growth recession below 1.5% is off the table, and maybe you're 1.5 to 2. It doesn't mean that it's all roses. You can't get to 3% from here. Very difficult to do that, but it's maybe a little better. And the bond markets around the world are telling us that as well. Maybe it's a little better than we thought.
Slow growth, I mean, I feel like there could be a case to be made that this is sort of a Goldilocks environment for stocks, because we're seeing some growth, albeit slow. The Fed has made clear it's going to take a lot for them to raise rates. So if rates remain low for this long and we have slowing growth, and then we have the potential upside of any sort of trade breakthrough, I mean, that's not bad.
Right. And I think, it doesn't really, from my perspective, it doesn't change much with respect to an investment outlook. You're still buying quality. You're still buying those names that will do well in any environment, and they will continue to do well. When you talk about Apple, Disney, McDonald's, Starbucks, whatever, group of companies you want to discuss, they're all doing fine. They're all, in many cases, hitting new highs. And a little increase off the bottom in growth would be a net benefit. And if the dollar should weaken a little bit, if we see some trade-related movement there, that could be a large plus for multinational companies.
And I think you could get maybe small trade movement, but I think a large breakthrough won't happen until after the election. I think the Chinese are going to keep their powder dry, and they're going to make a determination based on the long term. My major concern is whether the Chinese, seeing this environment, are going to develop other long-term sources, other long-term places where they can buy agricultural products. Those agricultural products, which are critical to the trade relationship between the United States and China, drive our transportation and logistics sector, our ports, our agricultural sector. So there are a lot of things to be, I think, concerned about in the face of where we are now. And I think we need to be thinking about that.
But the one thing you really, I don't think you can say that the job market is not in a good place.
The job market has been consistently good for better than a decade. The growth has been tremendous. And as we've talked about before, the challenges I see with in the communities that we work in have more to do with stagnant wages, the depressed housing market, the increase in rents and mortgages, underlying economic structural issues that have to be addressed. But the jobs market has been consistently good for
We've got about a minute left, and you and I were talking before, and yesterday, I guess it was, Elizabeth Warren came out with her plan to pay for what she calls Medicare for all. It would be a, my word, not hers, radical change in the way Americans are insured and pay for their insurance. What do you think? $20 trillion over a decade. $20 trillion, I think, is the size of the annual GDP in this country.
Responded to her critics who said, put not only your plan on the table, but how you're going to pay for it. Here's my concern. The needs of the country are in healthcare, but they're in education, they're in infrastructure, they're in housing. So if we're going to do any sort of revenue enhancement, the debate is where and how should the money be allocated? I see a need.
And this would allocate almost all of it.
And the question is, and the debate is, can you improve the system without such a radical change?
So let me turn to you. You know what Lee Cooperman has said about Elizabeth Warren.
Yeah.
That if she becomes president, the market goes down 25%.
Right. So most long-term investors, including Lee, have always suggested if the market goes down 25%, you find more opportunity to buy good stocks that you like. So if he was going to say down 50, 70, 80%, I think it would be a more consistent argument about the threat to a market-based economy. Having said that, I mean, it does seem that if a progressive became president and they ran the table in Congress, raised taxes by $20 trillion over a period of time, I didn't see anything in Senator Warren's proposal that would deal with the million-plus people who would be unemployed if you shut down the private insurance industry. That's something that would have to be rectified as well. So, anything that's that earth-shaking as far as the composition of the economy is concerned is going to be problematic. If somebody's going to tell me that the market's going to go down 25% and rebound, do I really care? When we're trained to say that a 25% pullback is relatively normal in the overall scheme of things, and it just represents a buying opportunity. If you're talking about a secular bear market and some sort of real disruption in the economy, that's a different conversation to be had. And you could make that argument, but just looking at it in stock market terms doesn't make a lot of sense.
We have to leave it there, gentlemen. Last, thank you very much.
Thanks for having us.
And LSU over Alabama, I assume.
Bet your house.
Really?
The Saints deserve a break. I got to say, you guys deserve a break.
Drew Brees is a good name. But don't forget, Buffalo lost.
The date is February 5th.
We deserve a break, too.
Miami. Buy your tickets now.
Gentlemen, thank you very much.
Coming up, shares of Tiffany continuing to rise after receiving a takeover offer from LVMH. Ahead, we'll take a look at the stock move before the offer was made public. Plus, a rough week for Boeing, and now it's just not just passengers worried about flying on the 737 MAX when it finally gets back in the air. Power Lunch. Be right back.
This CNBC program.
It's hard to enjoy your daily yoga routine when your mind is on your next VAT return and how to avoid the usual mistakes. But with QuickBooks, the new VAT Smart Scan technology does the work for you. As the deadline approaches, it checks for duplicates, looks for anomalies, and reviews VAT codes. So your biggest struggle is touching your forehead with your ankle.
Search for QuickBooks, perfect for making tax digital. QuickBooks, backing you.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today. NFL fans, the action continues this weekend on TuneIn Premium.
10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern. Then closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Ah, finally another commercial, said no one ever. Visit TuneIn.com/premium to upgrade now and get over 45 commercial-free music stations.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboards, but he stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out this Saturday with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Welcome back to Power Lunch. Shares of Boeing are slightly higher today, but new issues are cropping up related to the 737 and efforts to get the plane back in the air. Phil LeBeau has those details for us. Phil?
Kelly, this is all about whether or not crews will want to be on the plane when it is once again certified, which everybody expects to happen either in the fourth quarter or early next year. In this case, it's the American Airlines flight attendants, the union that represents them. They're saying, you know what, we're not entirely sure the flight attendants will be comfortable getting on this plane. In fact, they sent a letter to Dennis Muhlenberg saying the 28,000 flight attendants working for American Airlines refuse to walk onto a plane that may not be safe. Now, they don't have to make that decision here for a little bit in terms of, hey, we're absolutely not going to be on this plane. American, for its part, has pulled it from the schedule until January 16th. If it starts to fly then and the flight attendants still won't get on the plane, then you've got a completely different story, a much larger story. If you take a look at shares of Boeing, keep in mind that they have set aside about $5.6 billion for compensation to airlines, flight attendant unions, pilot unions. That all needs to be worked out once they finally get this plane back into service. And one other note about Boeing. The issues not only extend to the MAX, which we've reported on extensively, but the 737NG, that's the previous version of the 737. There are a number of these planes that are now grounded due to cracks deep within the wings, where the wings attach to the fuselage. That includes Qantas now saying that it will ground 3 of its 737NG models because they have discovered cracks. Those planes will now have to be fixed, as will the other NG models that have been grounded.
Interestingly, Phil, this letter sent by the flight attendants was sent to the CEO of Boeing as opposed to the CEO of American Airlines. This really calls into question their faith in the FAA.
Sure. Yeah, and they're not alone. You hear this from pilot unions. You hear this from pilots when you talk to them. They're like, why were all of these issues just now coming up? Shouldn't they have been covered during the certification process? Oh, there are a lot of people who are not happy with the FAA. There's no doubt about that.
All right. Phil, thank you. Phil LeBeau in Chicago. With the flight attendants still skeptical about safety on the 737 MAX, how soon could this plane really get back in the air? Let's bring in former chair of the National Transportation Safety Board, Jim Hall. Jim, great to have you with us.
Thank you.
The FAA seems to have a credibility problem, Jim. What should it do?
Well, it has a great credibility problem, not in our country, but not only in our country, but worldwide. By Congress and the FAA moving toward self-certification, which has resulted in decisions being made internally in Boeing that were not answered in the congressional hearings this week. In fact, I think those hearings have only added to the concern among the members of Congress, as well as the flight unions and the pilots, the ones who fly the aircraft.
Are you saying then that Boeing had too much control over the process of certifying the 737 MAX and was able basically to make decisions that to present information or not present information that might have changed the way the process went? Is that what you're saying?
Well, I'm saying that in 2013, I wrote an editorial in the New York Times expressing my concerns about the changes in the DER system that moved to what I felt was self-certification.
DER is what? Just for people who don't understand, what is DER system?
Designated engineering representatives.
Okay.
Who had formerly reported to the FAA, reported to Boeing. And that process, as something that Boeing, its very large lobbying arm, had worked for years. And now we see the fruits of that. First, the 787 was grounded, if you remember, after its introduction. Now the problems with the 737 MAX and the problems with other aircraft. And at the same time all this has happened, we see that again, a Boeing lobbyist is trying to have an influence over the questions asked at these recent hearings.
You know,
it's time for a change.
Jim, Dennis Muhlenberg really took it from Congress this past week in terms of how much blame he was personally accused or was hoisted upon him by people in Congress. And I'm wondering if from your standpoint, if the government should share an equal amount of blame.
I believe they should. I mean, we need to have accountability introduced back in our system. And in the aviation system, unfortunately, a lot of that is being delegated, as in other parts of government, to the manufacturer. And without the oversight, what are the American people paying for? The American people pay the flight for their flights over $3 billion a year that goes into providing safe airports and an aviation system so that Boeing and others can utilize it. So it's the system is broken.
And Jim, the Wall Street Journal highlighted that this week. I mean, they talked about the missteps taken at the FAA, how they had some concerns about these systems. They could have warned the world about it. They chose not to. They just instead reminded the pilots about how to deal with some of the problems that might crop up. So what are you suggesting would be a better way to structure either the FAA entirely or this relationship between them and Boeing from now on?
Well, I have a concern for the individuals, that work for Boeing. There are a lot of fine individuals I met at my time at the NTSB, but leadership and safety starts at the top. And I am sure Mr. Muhlenberg's a nice man, but the man who created the culture that caused these problems is not the individual that is going to solve it. We have heard from Boeing ever since, for almost a year, that they own this problem, that they were working on a fix on this problem. But today, a year later, there's still no fix. And certainly there's not going to be a fix to this aircraft until there is one presented. It is working its way through FAA and worldwide regulators.
Some very strong opinions, well-informed, Mr. Hall. Thank you. But I want to follow with one question about the wing cracks that have been discovered on some of the other versions of the 737. And I think maybe the public's view is, golly, maybe this whole fleet of 737s of whatever series are dangerous aircraft. How common are wing cracks of the sorts that have been described here? Presumably they come from metal fatigue and repeated takeoffs and landings. I don't know. But put that into a context for us.
Well, obviously, they are of concern and they are being addressed. But that requires, of course, on close inspections and transparency from the manufacturer so that if there are problems, one of the biggest problems with this was there was no transparency in terms of the MCAS. No information provided to the pilots or to others who were going to fly this aircraft. And essentially, the sensors were for sale. So, that type of culture is of concern when there is, again, problems with this aircraft.
Right.
But the Boeing, I remind you, sir, was first certified in the 1960s. There were problems, if you remember the Hawaiian accident, if you remember the 737 accidents in Colorado Springs and Pittsburgh, those have been addressed.
Right.
But I think it was a different FAA dealing with those problems at that time.
Yeah, as you say, this aircraft goes back to the 1960s, as do several others. Mr. Hall, thank you very much.
Thank you.
Well, infamous China short seller Carson Block says LeBron James and the NBA need to stand up for Hong Kong by taking a knee, and other American businesses should do the same. He'll join us coming up. With all this controversy swirling around China, not to mention the on-again, off-again trade talks, should you stay away from Chinese stocks, or is now the right time to buy? Our traders will answer that question next as we look at some Chinese stocks, all higher today.
Each day, our planet awakens.
It's another Friday evening. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
We've been together 3 years. We both love travel, and luckily we've got the same taste in music. Next year, we're planning a big road trip, and my wife's coming too. It'll be nice. The three of us don't do enough together. We know how much your Mini means to you. That's why Mini Service offers an array of convenient options and allows you to book online anytime at mini.co.uk. Because we love your Mini almost as much as you do. Search Mini Service. Who's in? T's and C's apply, subject to availability, participating retailers only.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
NFL fans, the action continues this weekend on TuneIn Premium.
10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern. Then closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to Power Lunch. Chinese stocks are on the rise today after Alibaba topped earnings estimates. The e-commerce retailer's fellow bats stocks, so to speak, Baidu, Tencent, and Sina, also moving higher. Is it safe to get back into this group? Let's bring in your Trading Nation team today. JC O'Hara of MKM Partners and John Petrides of Tocqueville Asset Management. JC, what do the charts tell you?
Well, the charts have definitely seen some notable recent strength, but I don't know if they're just out of the woods yet, right? So let's take a look at Alibaba. You know, if you go back over the last, 12 to 18 months, you do see a series of higher lows in place, and that's definitely positive, but there's still a series of lower highs, right? So until that breaks, until we see Alibaba break above 185, that will, in essence, create a new high. I'm a little cautious here, but we get positive above that 185 level, because above 185, we think there's a clear shot to the 2018 highs at 210. So that's why I turn incrementally more positive.
All right, so first got to watch 185, and then we'll see where we go from there. John, from your point of view, what do the fundamentals argue for?
Yeah, we think this large cap tech social media giants in China are quite attractive, particularly over the long term. They generate a ton of cash flow. The demographics are in their favor, and we think that obviously, in September the risk was that the U.S. may delist Chinese securities. That does seem to be behind us, which I think provides a valuation opportunity to these stocks over the long term. So we think we're quite positive on the group when you look out over the long term, although be it, you have to understand the risk of getting into a Chinese company being political, and macro is going to dominate, and obviously FX with the strong U.S. dollar could pressure the group. But by and large, long term, we think the group is attractive.
All right. Gentlemen, thanks, JC and John. And for more Trading Nation, head to the website or follow along on Twitter @Trading Nation. And ahead on Power Lunch, searching for that premium bling, LVMH looking to buy Tiffany & Co. But how much is the company actually worth? We'll ask a top analyst. Plus, a China short seller slamming the NBA. Carson Block says the league should take a knee for Hong Kong. He'll join us next. And the high cost of higher education, student debt reaching record levels. Now politicians want to wipe it all out. Would that really solve the problem? All this when Power Lunch returns.
And now, the latest from tradingnation.cnbc.com and a word from our sponsor.
A common mistake that some investors make is searching for stocks with the highest dividend yield. But this can be a dangerous strategy because a high dividend yield could mean that the stock price has come down sharply or that the dividend itself is at risk of being cut. So before you reach for yield, be sure that the stock is also fundamentally sound. I'm Joanna Payne, and Schwab is the better place for traders.
So Schwab, tell me about
NFL fans, the action continues this weekend on TuneIn Premium.
10-5, touchdown!
This Sunday, TuneIn has every NFL football game starting with the Houston Texans and the Jacksonville Jaguars at Wembley Stadium in London. Kickoff at 9:30 a.m. Eastern. And closing Sunday night out with the Patriots at the Ravens at 8:20 p.m. Eastern. At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow @TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
You're listening to TuneIn, where you can hear all the audio you love in one place. Live NFL games, the hottest music, breaking news, and podcasts. Push play and go about your day, only on TuneIn.
MSNBC is on TuneIn. Get up-to-the-minute coverage on news and events from around the world with MSNBC's live 24/7 station on TuneIn. At home or on the go, stay up to date on the latest news and political trends with MSNBC's full lineup of shows, including Hardball with Chris Matthews.
Hi, I'm Chris Matthews. Thanks for listening to MSNBC on TuneIn.
And The Rachel Maddow Show. Plus, when news breaks, MSNBC has you covered with live updates, expert analysis, and more. Search MSNBC on TuneIn today.
Welcome back, everyone. I'm Sue Herrera. Here's your CNBC News update at this hour. Tens of thousands of Iraqis massed in Baghdad in the biggest demonstrations since anti-government protests erupted a month ago. They defied security forces that have killed scores of people, and they harshly criticized Iran's involvement in the country's affairs. Somalian officials said today the flooding across that country has displaced more than 180,000 people Aid workers fear the floods could lead to an outbreak of cholera and malaria. The rains are expected to continue for another 4 to 6 weeks. Back here at home, more adults are being diagnosed with ADHD. Researchers from Kaiser Permanente studied data involving 5 million people, and they found the rate more than doubled between the year 2007 and 2016. And some of the most popular Happy Meal toys are set to return. The McDonald's Happy Meal debuted 40 years ago, and to mark the anniversary, 15 toys will be available. The Cowboy McNugget from 1988, the Hamburglar from 1995, and the Space Jam Bugs Bunny from 1996 are among the toys returning. They're available from November 7th to the 11th. That is the news update this hour, guys. I'll send it back to you. Melissa?
Sounds like it's time to go to McDonald's.
It does.
Sue, thank you. Sue Herrera. Let's take a check in the markets right now because we have yet another record-setting day, at least for the S&P 500. 3065 was the highest set intraday. 3063 is where we're at right now. The Dow is up by almost a full percentage point. Take a look at the Russells. The Russell up 1.6%. That, along with a lot of the cyclical sectors, are making some pretty nice moves today. Energy, industrials, materials, as well as financials.
Time now for today's Power Movers. Shares of Fitbit are up 15% after Google confirmed it's buying the stock for $2.1 billion, or $7.35 a share. We're 20 cents below that level. Remember, the stock's all-time high is above $50. That was back in 2015. Next up, Pinterest down nearly 20% to send the stock back near its IPO price of $19. It's sitting at 21. The company's revenue number disappointed the street, and higher expenses led it to post that net loss. And finally, U.S. Steel is higher as it loses less money than expected and beats on revenue. Analysts are also cheering the company's plan to spend less on investments in existing mills. But even with today's gain, the stock is still down 50% in the past year.
All right, the oil market is closing for the day, and let's go to Eric Chemi at the CNBC Commodity Desk. Hi, Eric.
Hey, that's right, Talis. You see all this green here on this top line behind me. We heard the news in the last hour that China reached a consensus in principle on the first phase of a potential trade deal with the U.S. No surprise, that's pushing oil prices higher. Both crude and Brent headed for their best days in 7 weeks. Despite today's gains, though, both Brent and WTI will end lower for the week, hurt by a surprise buildup in U.S. crude inventories and ongoing fears over a slowing economy. Just today, we got slightly weaker than expected manufacturing data here in the States, while factory activity in Japan hit a 3-year low in October. Back to you, Kelly.
All right, Eric, thank you very much. It's been a month since Houston Rockets GM Daryl Morey's pro-Hong Kong tweet put the NBA in the middle of a major controversy over how U.S. corporations should be doing business with China. Infamous China short seller Carson Block out with a fiery op-ed in the Financial Times saying that business leaders and entertainers should, quote, locate their spines quickly and put freedom of expression above their corporate greed. He goes on to say that China should be reminded that it can't rise without the help of others. Joining us now is Mr. Block. He is founder and CIO of Muddy Waters Research. Carson, it's great to have you. And we've asked a lot of U.S. companies lately, from Starbucks to Disney, to justify doing business in China. And the answer is everything from needing to be culturally correct to, in Starbucks' case today, trying to help the local communities that it's involved in. What do you think is the right posture for corporations here?
All right, so first of all, playing the Chinese government's game is conflating the Chinese Communist Party or the government with the Chinese people. Okay, so First thing we should do is we should separate these two concepts here because they're very different. So I'm not arguing that American companies should not do business in China, but what I'm arguing for is that they should avoid getting them being so dependent on China so that that China has this leverage to create this ridiculous situation where the Chinese government's attempting to censor a U.S. citizen in America. That is unacceptable if you let yourself become so leveraged to the China market that you would play along with that.
In other words,
so that is my exhortation.
Right. So to separate out what, the NBA issue and some of the others from the whole idea of doing business in China, what you're saying is companies should not let China censor their speech. And you're saying the NBA should not allow that, and they didn't. Daryl Morey's tweet went out. Adam Silver said he supported free speech and so forth. They've just been noticeably quiet ever since. But in the case of other companies who have changed their drop-down menus or T-shirts printed with the wrong imagery under pressure from China, you're saying that's where corporate America should stand up, that they shouldn't allow China to change what they're speaking or showing or asserting to be true about the country?
So, so that is one point on which you absolutely nailed it in terms of what my feeling is. We need to stop letting the Chinese government push our companies and our people around. But also, then you get to this Hong Kong issue. And so the other part of my op-ed is really focusing on Hong Kong being an important issue, because not just because Hong Kong in isolation is a really bad situation where, I don't know that the Chinese government ever had the intention of honoring this one country, two systems concept, but it's basically destroying that and has been for some time. Hong Kong is important because it is basically that bulwark, I think, between the Chinese government and how it does business, very corrupt, very corrosive, and the rest of the world. And for America and Americans who want to do business overseas, if Hong Kong is allowed to become what the CCP really wants it to become, which is basically one country, one system, we're going to find it harder to do business overseas, not just in Hong Kong, with people who share our values and believe in these values. The world will be remade more in the image of that the Chinese government wants it to be made in. And that's a problem for us if we want to engage with the rest of the world, which we need to, and we do.
Carson, what got me was your argument that U.S. companies shouldn't allow China to have so much leverage in terms of the impact on their businesses. But as a percent of revenues for a lot of U.S. companies, China is actually not that large, but it is one of the fastest growing areas. Apple, for instance, 20% of its revenues are from China. You would argue that theoretically, according to those numbers, in the U.S. is about 40%. According to those numbers, it's not dependent on China. But if we took away those sales, investors would sell that stock off. I mean, it's not just the companies saying we're not going to allow our business to be to be dependent on China, but investors are depending on the growth that is coming out of China.
Well, this really brings up an interesting point here because, I think that a lot of Americans, we talk about our politicians lacking principle, but I think a lot of Americans, we've also lost our sense of principle as well. I mean, investors, and I've been arguing for over a year, probably a year and a half, that Chinese stocks should be valued and considered to be sin stocks, basically, because there are a lot of strategic issues involved with these companies, and because they basically, many of them roll up to the Chinese government. Plus, you have that whole issue of you don't have any accountability for wrongdoing on the part of Chinese management. But getting to Apple, we do need to be more principled as investors here.
And on that note, and only because we're running out of time, and I'm curious how far you would take this as somebody who believes quite passionately about it. Would you stop using Apple products? Or other? Would you not buy something in Walmart that was made in China? I'm asking quite seriously here. If you think that the impetus should be that if you believe that China, as you say, is kind of a sin country, and I know you're referring to leadership, not the people, but how far are you willing to take that?
Well, so again, I am not arguing that companies should not do business in China or with China, but companies that make trade-offs, I mean, I definitely get grossed out when I think about these airlines who refuse to call it Taiwan anymore because China told them to. And if I have a choice not to fly that airline, that does pop into my head, and I will not fly that airline. I mean, if it's not about not buying things made in China in general, because this is not a problem with the Chinese people. This is a problem with the government and our companies
every single company
giving
that
it too much
does
slack.
Any business in China is making some sacrifice on principle. Would you agree with that? I mean, in order to get through the door in China, they're making some compromise. They have to.
But the compromises that they must not make are the compromises that extend beyond the territorial borders of the PRC. So when we start censoring Americans, and a great example is China's investment in Hollywood. I mean, now, China was the government's been super smart about this because Hollywood used to produce these films that were very pro-Dalai Lama, anti-Chinese government. And now, so many people in Hollywood are afraid to say boo about China and do anything other than portray it in the most positive light possible. I mean, to me, that's a real problem. So when we're getting extraterritorial application of Chinese censorship, that is where companies must draw the line. And if that means you don't take the investment in your film production company from China, then don't take that investment. That's principled.
All right. And that is a bold stance. Carson, thanks very much.
Thank you.
Carson Block.
Coming up, the latest on the bidding war for Tiffany and a look at what led to the run-up in the stock before the offer was made public. We'll tell you that story when we return.
It's another Friday evening, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
It's hard to enjoy your daily yoga routine when your mind is on your next VAT return and how to avoid the usual mistakes. But with QuickBooks, the new VAT Smart Scan technology does the work for you. As the deadline approaches, it checks for duplicates, looks for anomalies, and reviews VAT codes. So your biggest struggle is touching your forehead
If you're planning on driving this weekend, expect delays on the A406 North Circular Road. There'll be road closures between Tottenham and Edmonton from 10 p.m. on Friday the 1st of November to 5 a.m. on Monday the 4th of November, while we carry out essential maintenance and repairs. All roads in the surrounding area will be extremely busy, so please allow more time for your journey and expect delays in the area. Plan ahead and check alternative routes at tfl.gov.uk. To the Mayor of London and TfL, every journey matters.
without having to feed them.
Do we need better optics? Do we need some substance? Do CEOs care about ESG?
We have seen quite a lot of stimulus pumped into the system already.
It's the biggest warning yet about the financial risks of climate change.
Now, there are more ways to hear us. Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and at BloombergRadio.com. Bloomberg, the world is listening.
Open calendar. What's my schedule looking like?
Next Thursday, you will be caught in an emergency flash flood between Park and First Street.
What? No, that doesn't work. I'm busy then. Decline. Decline.
Floods don't exactly work around your schedule. Disasters don't plan ahead. But you can. It starts with talking to your loved ones about making an emergency plan. So don't wait. Communicate. Get started today at ready.gov/plan. Brought to you by FEMA and the Ad Council.
It's another Friday evening. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to see spectacular coral reefs and white sand beaches. Fly from London Gatwick to Mauritius with British Airways, with flights and 7 nights hotel from just £949 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Did you get the milk?
I bought brie, fish fingers, and washing up liquid.
You went out for milk.
I won't be long.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount to the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
Hey NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today. TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books. The celebration is on. The Washington Nationals are the world champions.
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Upgrade to TuneIn Premium and get over 45 commercial-free music stations. You'll also get live commercial-free news, plus live play-by-play games from NFL, MLB, NBA, and NHL. Visit TuneIn.com/premium to upgrade.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen. In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
With about 43 minutes to go in today's session, we have a lot of positivity in equity prices. Clearly a risk-on day. Equities pushing to record highs and long-term interest rates backing up just a bit. Let's get you to the Bloomberg Macro Squawk Desk to check in with Bill Maloney. Hey, Bill.
And good afternoon, Doug. U.S. stocks climbing from the start today after that better-than-expected jobs data. Dow's currently up 264 points. S&P's gained 26, while NASDAQ climbs by 77. Small caps rise by 13 points, and the U.S. 10-year yield back to 1.72%. 9 of the main 11 S&P sectors are also trading higher, led by gains in the industrials and energy. Only real estate and utilities fell. Nasdaq Biotech's jumped 2.3%. Transports rise 200 points. Semis climb 2%, and the VIX is down by 6%. Leaders to the upside in the Dow: Walgreens, Dow Inc., and Caterpillar, while Merck, Cisco, and McDonald's led to the downside. After earnings, Arista Networks plunged 24%. Colgate fell 3%, and Corvo surged 19%. In deal news, Google is buying Fitbit for $2.1 billion. And wrapping things up, the USTR said that the U.S. and China trade talks were constructive today. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thank you. We've got a weaker dollar right now with the Bloomberg Dollar Spot Index down 0.1% and a stronger offshore Chinese yuan at 7.0416 against the dollar. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly right here on Bloomberg Radio.
So around this time every week, we like to take you inside the world of venture capital and VC-backed companies. And for this week's edition, we turn to Chris Lynch, CEO of AtScale, based out in San Mateo, California. He joins us on the phone. Chris, great to have you with Carol and myself.
Well, it's great to be here, Jason. Thank you. And nice to meet you as well, Carol.
Thank you.
All right. So give us a sense, first of all, of what AtScale does, because you're sitting right in the midst of, it feels like, some pretty big mega trends where it is, whether that's distributed data, big data. We talk so much about that. Also security. So help us understand what you're up to.
Sure. AtScale is a virtual data warehouse. And what we do is we create one logical representation of all of an enterprise's data. So we would argue that while companies, Enterprise 2000 companies, have lots of data, they're in disparate data stores, and we give them big data, one virtual view of all that data to create better and more actionable insights.
And tell us about some of the companies that you work with and what they do with it ultimately. What's the payoff for them?
Sure. We're focused on Enterprise 2000 companies, banking, finance, insurance, healthcare, life science, retail are all very strong verticals for us. And we do a couple things. One, we create that virtual view of all their data that allows them, without moving the data, without having to disrupt any of their operations, use and harness the power of all that data to make better decisions. The other thing that we do is when we create our virtualization layer between the business intelligence user and their data, we are able to re-platform these companies to the cloud non-disruptively. Without us, they would have to rewrite their applications and move the data in a very disruptive way to get to the cloud and get all the benefits of agility and security and performance that the cloud offers.
And so, Chris, one of the interesting things about your work is you've really, with this company, kind of split the headquarters between Boston and Silicon Valley. There's this constant push and pull. Silicon Valley seems to be having a moment, sort of in a good way, sort of in a bad way, depending on your perspective. It feels like, with Mark Zuckerberg on Capitol Hill, et cetera, but also an increasing, certainly continued power across the broader economy. But it comes down to a lot of things: cost of living, labor shortages, availability of capital. You give a bit of an edge, or you're a little more bullish, I believe, on the East Coast. Why?
I am. So I think fundamentally, building a business in the East Coast makes a lot of sense, particularly an enterprise software business like ours. One, because, for instance, in Boston, we have tremendous access to talent, I would argue, unlike any place in the world. 30 top universities in 10 square miles. That kind of density doesn't exist anywhere else in the world. Secondly, we're an hour flight from New York, the capital of business, and access to the largest companies that utilize IT for their business advantage. And beyond that, I think that the quality of life and cost of living in Boston versus California is substantial. It's expensive in Boston, but nowhere near the expense of California, which is getting more and more unaffordable for most young people that are in our business.
All right, we're going to leave it there. Chris Lynch, CEO of AtScale, based out in San Mateo, California. Dual headquartered AtScale is between Silicon Valley and Boston.
Yeah, absolutely. So you know what? That Baby Shark story is still among our most read on the past 8 hours.
I love the video that's embedded in it, too, because it has all the Nationals fans doing the Baby Shark. I mean, what a boon, you know. And it was, do you know the backstory here that basically one of the players, you know, was trying to get his young daughter interested. And so it was sort of an homage, a little honor to her to have that as his walk-up song, I believe. And so it just caught on. I mean, this is part of the reason why people just fell in love with the Washington Nationals over the course of the World Series. Right? It's very cute. And Washington, I mean, just baseball crazy.
I used to do it with my nieces all the time. Baby Shark, 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 Shark.
Well, you really put a hex on Dave Wilson, you know, talking about that, because now he's thinking of some wide receiver for the Jacksonville Jaguars. I think he's going to come in with his for his chart and stock of the day. He's going to be raging. All because of your
Dave
Baby
Wilson,
Sharkness.
you're welcome.
I know.
Dave Wilson, you're welcome.
Everybody out there is now Baby Shark.
A different world. The most read in the past 60 minutes. Ken Fisher striking back with ads featuring female employees.
Yeah, that's a different sort of story for sure. And meanwhile, you know, we're looking at a market that is very enthusiastic as we wrap up the week, buoyed by that jobs report, maybe some positive trade news as well. So as we get toward the close of trading in just about 36 minutes?
Yeah, there you
just
go.
Doing a little math.
Assist there for you.
Yeah.
We're up 3 weeks in a row on the S&P 500, up another 1.3% as we head into the final 35 minutes of trading.
Good Lord.
Is there algebra? Do we have a slide tool that can help us with this?
You are really something today.
I know. I got some sleep, too.
Yeah, but you came in early. That's never good. No. This is Bloomberg.
This is a Bloomberg Market Minute. American and Chinese trade negotiators have talked by telephone, and the two sides have signaled progress in the first phase of a possible trade deal. A stronger-than-expected jobs report is giving stocks a Friday boost. The Dow Jones Industrials are up 250 points, 0.9%, to 27,296. The Nasdaq is up 75 points, also 0.9%. The S&P 500 is up 25 points, or 0.8%. The Labor Department reported 128,000 workers were added to payrolls in October. Economists thought the strike at General Motors would result in a weaker number. Factory activity continued to contract in October. A slight improvement in the Supply Managers Manufacturing Index suggested the rate of contraction was slower than in September. Starbucks has a new store concept. The chain opened a micro cafe in New York City. It is designed primarily as a place for customers to pick up orders placed in advance. Jeff Bellinger, Bloomberg Radio.
You know your body, and you know when something's off, when something doesn't feel quite right. Don't ignore symptoms like fatigue, joint pain, rashes, and fever. They could be signs of lupus. Listen to your body. Take care of yourself. We're here to help you take control of your health. Learn how at BeFierceTakeControl.org. Brought to you by the Lupus Foundation of America and the Centers for Disease Control and Prevention.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
It's another Friday evening. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and relax with 365 beautiful beaches.
So yes, sir, what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
No! The next bus is 18 minutes away. Look, there's a cab. We really shouldn't. Taxi! I mean, we ate out last night. Just get in. We're getting soaked. You're such a bad influence.
You can't always control what you spend, but you can save as you spend with Save the Change. When you use your Lloyds Bank debit card, we'll round up the amount the next pound and transfer the difference to your nominated Lloyds Bank savings account. Feel in control every day with our mobile banking app. Lloyds Bank, by your side. T's and C's apply.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today. Hey, NFL fans, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you have unlimited access to every team and every game in the league. Listen live as it happens or on demand. Anytime, anywhere. All season long. Search NFL today.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raj, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane of the rim, throwing right corner three, another one.
TuneIn Premium brings you every minute of the NBA season so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
In the stock market and in life, everything can change from 1 minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
Live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. It is Friday, Jobs Friday. Carol Massar along with Jason Kelly in our Bloomberg Interactive Brokers Studio. Coming up, we're going to hear a little bit more from David Weston's conversation with U.S. House Speaker Nancy Pelosi. And then we're going to take you down to the closing bell because, man, we've got a rally underway and you've got stocks, hitting records again.
Well, and a lot of it is because maybe the politics for the moment taking a backseat to a pretty good economy. We're going to hear about that and much more. But first, let's get an update on that trade from Doug Christner. Hey, Doug.
Hey, we talked first about the employment report that we had for the month of October. That's where the day began, much stronger than forecast. One of the things I think that was very surprising is that the numbers from GM ISM, given the strike that had occurred last month, were expected to take this number way down. But at the end, we found the American economy added 128,000 non-farm jobs last month. So we have fresh records for both the S&P and the NASDAQ. S&P 500 right now at 3,063, NASDAQ comp at 8,370. Both indices are up about 0.9%. And then when you look at the Dow, we are ahead by just about 1%. We did have kind of a disappointing number when it came to the ISM's manufacturing index. We are now in contraction for a third straight month. Bloomberg Intelligence was saying earlier, recessionary conditions in manufacturing are unlikely to abate in the fourth quarter. But if there's a breakthrough in U.S.-China trade, where do we go from here? Both sides today signaling some progress in phase one of a potential deal. An earlier call today took place, and then they both released statements describing the call as constructive. We've got a U.S. 10-year Treasury right now yielding 1.71%, so we're only up about 2 basis points in yield today. And then in M&A news, the big deal is Fitbit. It's been approached by Alphabet's Google, a cash deal worth $2.1 billion, although I think it's fair to say there may be a little bit of regulatory scrutiny applied to this one, don't you think? Back to you guys.
Doug, thanks so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
It connects to your chart of the day, but is it a little present?
This is the second Queen song.
I know, that's what I'm saying. It's not a gift, is it, Dave?
It just is.
Mr. Fahrenheit.
It just is.
All right, what do you got?
You can take it as a gift if you want. How's that?
All right, so how does this connect to your chart of the day?
Don't stop me now. That's, the stock market talking. You look at this year, right? S&P 500 up 21% in the first 10 months, and you think, wait a minute, is that all there is? Mm-hmm. And Tony Dwyer, I guess, had that thought. He's the chief market strategist over at Canaccord Genuity. And, he went and ran the numbers back to 1950, looking at, periods when the S&P 500 rose 20% or more in the first 10 months. Well, how did it do the rest of the year? Well, it turns out there were 7 times when that happened. The most recent one in 2013. And every time you had gains over the final 2 months of the year as well, an average increase of about 6%. And since he pulled his numbers off the Bloomberg terminal, I went back through them as well and actually found some periods when you had gains that were close to 20%. There were a half dozen of those, and guess what? In the last 2 months of the year, the index also rose every time, and gain that was comparable to 6% on average for that group. So, I guess it's the body in motion remaining in motion, really. I mean, that's what today would suggest, at least. I mean, given the gains that we're seeing in stocks and the S&P 500 at a record. So what it comes down to is history showing that perhaps, what we're seeing today may just be the start of what we see through the end of the year. Now, Tony Dwyer's looking at 3350 for the S&P 500 next year. That was up 10% from where it closed on Thursday. And, of course, that percentage has gotten a little smaller thanks to today's gains. Nonetheless, there's reason for optimism through the end of the year. If you want to know more, send me an email. I'll get you the chart, the explanation goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Dave Wilson, thank you so much. Apologies again for the baby shark thing, and thank you for the Queen. A little bit of Queen coming in.
Twice in 1 week.
Speaking of the Queen,
Nancy Pelosi.
Queen of the House.
Yeah, House Speaker Nancy Pelosi.
See what I did there? You didn't see that coming, and then I did it, and then you're like, all right.
Anyway, we did see a headline crossing earlier about China saying it looks like we're getting some progress, and it was positively read by the markets. Well, speaking of trade, David Weston, host of Balance of Power on Bloomberg Radio and Television, caught up with House Speaker Nancy Pelosi, the Queen, as Jason just said. Talk trade, specifically another agreement that has yet to be signed off on. We're talking about the new NAFTA.
We are working now on a Mexico, U.S., Canada trade agreement, and I'm optimistic that we can be successful with that.
What's keeping us from getting that done?
Well, we don't have the assurances that we need on enforcement. I myself voted for NAFTA. I had some disappointments, but one of the big disappointments is if you don't have enforcement, you are just having a conversation. Nice things that are listed, but you don't have enforcement. And I think that we can come to a place on this that not only is a good trade agreement of itself, but it will be a template for good trade agreements as we go forward. So it's not just NAFTA, old NAFTA with sugar on top to say, oh, it's better. No, it has to be really better for America's workers. Again, I don't like trickle-down economics, and I don't like trickle-down trade. It's got to start with the workers.
If you got to that point, would you be willing to go forward with USMCA with a minority of your caucus, a majority of the House?
I won't have that. We are.
You have to have a majority of the caucus.
No, it's not about that. It's about having agreement on the trade agreement. It all springs from what is in the trade agreement. I have gone in the past to the floor with a minority of my members, but that's not what this is. This is about a policy that we are establishing that isn't, again, let's just to pass it, we'll pass something less than has true enforcement in it, because if you don't have enforcement, like I had the Chinese leadership in my office, and I complained to them about their dumping of rubber into our, and they said, well, when we joined the WTO, they told us we didn't have to obey those regulations. So if you don't have enforcement, real enforcement, and a commitment to honoring the agreement, we're just, again, doing a bad deal for America's workers. And by the way, workers in Mexico and Canada as well.
And that is House Speaker Nancy Pelosi catching up earlier with our own David Weston. She was here for an editorial roundtable as well. I have to say, the Speaker of the House making a lot of headlines today, talking there about USMCA, USMCA, as you like to call it. And, you know, it's funny, I was talking with David Weston before the interview, and we were talking about, that's really one of the things we wanted to hear from her was where this fits in, because there's so much talk of impeachment, there's so much talk about all the things that she has to handle politically. Right. But that's some really important legislation when it comes to American workers and when it comes to some very significant trading partners.
And she says, easiest trade deal, sees the vote when ready. So, you know, it's just a case of, right, voting and signing off on it.
Yeah, get it done.
We're almost there.
Yeah.
All right. We'll have, certainly, if you want more from Pelosi, check it out at Bloomberg.com or on the Bloomberg. This is Bloomberg Radio.
And let's get to Bob Moon for some world and national headlines now. Hey, Bob.
Jason, most Americans surveyed say House members are motivated mainly by politics rather than duty in pursuing impeachment. So finds a new poll from the Associated Press and NORC Center for Public Affairs Research. At the same time, it shows more Americans approve of the impeachment investigation than disapprove of it. In an exclusive Bloomberg interview today, House Speaker Nancy Pelosi contended she's been left with no choice but to act.
For a long time, I've resisted the weighing the equities of whether this was divisive for the country, but what the president did vis-a-vis the president of Ukraine just removed all doubt that we had to act upon that.
Pelosi said she expects public impeachment hearings to start this month. Democratic presidential hopeful and Senator Elizabeth Warren says she has a plan, a medical plan, to abolish copays, make it possible to see the doctors you want, and cover pre-existing conditions. Today, Warren unveiled the funding part of that plan as she campaigned in Iowa. She says it covers about $11 trillion that working families now pay out of pocket for medical expenses every year.
That puts $11 trillion back in the hands of people all across this country. That will be the biggest wealth boost for middle-class America in decades and decades and decades.
Joe Biden's campaign is dismissing Warren's plan to pay for her health care plan, calling it mathematical gymnastics. Dry and windy weather that fanned big wildfires in California has eased significantly. Utilities say most power has been restored. Global News 24 hours a day, on air and at TikTok, on Twitter. I'm Bob Moon.
Why has J.D. Power ranked Commonwealth Financial Network #1 in independent advisor satisfaction among financial investment firms for the 6th straight time? We think it comes down to one thing: you. Because it's your input and feedback that keeps us focused on what's most important to you and your clients and continually pushes us to be the best we can be. Maybe that's why we receive top marks in every category of the J.D. Power 2019 Advisor Satisfaction Survey. They named us number 1 in client support, number 1 in firm leadership, number 1 in operational support, number 1 in compensation, number 1 in professional development support, and number 1 in technology support. Ready to partner with the best? Call Commonwealth at 866-462-3638 or visit commonwealth.com and feel the power. Member FINRA SIPC, a registered investment advisor. For 2019 J.D. Power award information, visit jdpower.com/awards.
Startups and research universities like New Jersey Institute of Technology are fueling the innovation economy. And few people are better positioned to see what's on the horizon in New Jersey than physicist and state representative Andrew Zwicker.
How technology is transforming our financial sector is revolutionary, and so much of that is in New Jersey. We are innovators when it comes to agriculture, and there is opportunity now for great transformation in how are we going to grow food in an ever-growing population, and how do we turn urban centers into agricultural centers. Autonomous vehicles is another one where we have some of the world's leading experts, and how this will transform how those who are either elderly or are visually impaired or mobilely impaired can start to use autonomous vehicles to transform their lives and have access to transportation they could have never had before.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu/research.
Are you interested?
It's another Friday evening. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick, and relax with 365 beautiful beaches.
So yes, sir, what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
It's hard to enjoy your daily yoga routine when your mind is on your next VAT return and how to avoid the usual mistakes. But with QuickBooks, the new VAT Smart Scan technology does the work for you. As the deadline approaches, it checks for duplicates, looks for anomalies, and reviews VAT codes. So your biggest struggle is touching your forehead with your ankle.
Search for QuickBooks. Perfect for making tax digital. QuickBooks, backing you.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books. The celebration is on. The Washington Nationals are the world champions.
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Adam Grant, and this is Work Life, my podcast with Ted. I study how to make work not suck.
And it's defined like this.
Blackout is a suspense-filled thriller from Endeavor Audio and Q-Code.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn. Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today. Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. But he stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
13 minutes away from the closing bell, and we have the equity market right now trading at fresh records, especially for the S&P and the NASDAQ composite. Apple also at an all-time high. The day began with a very strong employment report for the month of October, unexpectedly so, particularly in light of the GM strike. The American economy added 128,000 non-farm jobs last month. If there's a little bit of cold water to be thrown on the notion that the American economy is kind of hanging in there, a separate report from the ISM showed manufacturing kind of contracted for a third straight month. Bloomberg Intelligence was saying earlier in the day, recessionary conditions in the manufacturing arena are unlikely to abate in the fourth quarter. Now, some of that weakness has been tied to the U.S.-China trade war. Are we at a breakthrough on that front? Well, after a call today, both the U.S. and China released statements describing it as constructive. Now, this would be in relation to phase one of a potential trade deal. Dow Industrial Average right now better by 1%. We've got the S&P 500 higher by 0.8%. The NASDAQ comp better by 0.9%. Looks like Alphabet's Google unit has agreed to buy the smartwatch maker Fitbit. The offer is for $2.1 billion in cash. There's likely to be a little bit of regulatory scrutiny here, but Fitbit shares right now better by more than 15%. I'm Doug Krisner. That's your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
I'm afraid I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the Drive to the Close, wrapping up this trading week packed full of news. And we did see the equity markets rally on that jobs report today. Let's get into this with Melda Mergen. She is Deputy Global Head of Equities over at Columbia Threadneedle Investments. She joins us on the phone from Boston. The enthusiasm, Melda, that we're seeing in the equity markets today, does it make sense to you?
Yes, because we know that the U.S. economy is pretty much driven by consumer, and if the consumer balance sheet is healthy, it is good for the economy. We know that we had the challenges in the manufacturing part of the economy, but even that is coming to a trough, in our opinion, which gives another leg for the market to be excited.
And so when you look at a day like today, Melda, how much of it do you feel like is driven by jobs and the jobs report, and how much of it is driven by the enthusiasm maybe that the trade, all the sort of trade drama may be at least coming to something resembling a conclusion?
I think both of them are the factors today, again, for different reasons. The job report is the confirmation as the U.S. economy is staying strong in that part of the GDP. Yeah. And then the trade is important from here, of course, to get the manufacturing sectors and the global growth accelerating. So, and it looks like both sides are trying to make this work and showing the willingness to be at the table and make the first phase one deal.
Hey, Melda, I want to ask you, we caught up, Jason and myself caught up with the CEO of Visa, and we asked him, they've got a great vantage point in terms of what's going on with the consumer. They're seeing transactions, where people are spending money, whether trends are growing. He doesn't see any signs of a recession. And what's interesting, a loyal viewer of Bloomberg Radio, reached out, messaged me and said, if the consumer is so strong, why do we see folks, so many like retirees in minimum wage jobs trying to pay their bills? We're talking about, homeless in cities trying to give people, some support and assistance. I mean, it doesn't feel like everyone is doing so well. And increasingly automation and AI, are really kind of upending the workforce. And maybe we haven't, filled or educated the public in the jobs that really are in demand. So how do you reconcile it? How do you see it?
Definitely not everybody's doing great, and there's a lot of concentration, I would say, where the problems are in big cities with the homeless and other problems that you mentioned. The economy itself and where the investment is being made and how the economy is growing from here is different, again, in the sense of manufacturing still an important part of it, but not the primary driver of the economy. And within that group, there is definitely, I agree with you, there is a gap in education, the skill set, what today's manufacturing environment required versus what we have with some of the workforce. So that gap, as long as it's not filled, is going to be a problem, and that part of the population will definitely feel more pressure from here. But on the other hand, we have the technology sector, we have service sector, healthcare. All those areas are really growing and growing in a pace that helps the other part of the population really earning more wages and spending more.
And so talk to us about the U.S. versus the rest of the world, Melda, because it feels like we continue to try and figure out whether this is a global situation. The rest of the world doesn't feel maybe as good as the U.S. does at this point. And so how does that inform your choices as an investor?
If you take the developed markets and look at ex-U.S., specifically Europe and Japan, there's definitely more dependence on the manufacturing factor and the health of the global economy. And we know that it slowed significantly in 2019, and those parts of the developed market struggled. And then the emerging market, of course, the global liquidity is a big factor for that part of the market, which is also improving with what Fed is doing and our other central banks' stimulus to the liquidity in the global markets. So for us, going into 2020, those inflection points is going to help overall the global market. But we definitely experienced a lot of pain in 2019 in the rest of the world, ex-US.
So what's your advice to investors at this point then?
Again, for us, everything starts and ends with the companies and the environment they are really operating in. Given that we see a better environment going into 2020, we want our clients to be invested in equities. It would be really, in our opinion, depend on the company selection, stock selection, but generally we really don't want them to shy away from equities at this point.
All right, we're going to leave it there. Great to have you with us, Melda Mergen, Deputy Global Head of Equities at Columbia Threadneedle Investments, joining us on the phone from Boston. And certainly, Carol, a fair amount of optimism out there, especially as we wrap up this week firmly in the green. The NASDAQ and the Dow now eclipsing 1%.
Yeah, and pretty much at our highs of the session, And I'm just taking a look at some of the weekly numbers. Of course, got a few minutes left in today's trading session, but you're looking at about a 1.4% gain in the S&P 500. If I pull up the NASDAQ, the weekly numbers right now, 1.6%. And
pretty healthy week.
How did you do that so fast?
I'm looking at WEI. 5-day percentage.
Oh, okay. I was curious.
It's a nice function here on the Bloomberg Professional Service that I am fortunate enough to have right here in front of me in our Bloomberg Interactive Broker Studio.
But were you looking at weeklies? Is that what you did?
Well, no, I just did. I pulled up WEI, and if you look across percentage 5 down.
How many years have I been here?
I don't know.
I was doing it differently.
Oh, that's right. We just celebrated your 20th anniversary here at Bloomberg.
This is what I love
as
about...
memorialized on Bloomberg Television's Bloomberg Business Week weekend show.
Very thoughtful. I'm proud of my 20-year statue. And, this is what I love about this company. I learn something every day. I was doing it manually.
Well,
going back to the slide rule.
Always happy to help you learn a little bit more about the Bloomberg terminal. You're with us here, closing in on the close for an up week all across the board. This is Bloomberg Business Week.
It's another Friday evening. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
It's hard to enjoy your daily yoga routine when your mind is on your next VAT return and how to avoid the usual mistakes. But with QuickBooks, the new VAT Smart Scan technology does the work for you. As the deadline approaches, it checks for duplicates, looks for anomalies, and reviews VAT codes. So your biggest struggle is touching your forehead with your ankle.
Search for QuickBooks, perfect for making tax digital. QuickBooks, backing you.
Fall in love with the brand new iPhone 11 at Tesco Mobile. Take amazing photos with Apple's best ever ultra-wide lens camera. You can get the iPhone 11 for just $37.75 a month with no additional upfront costs. What's not to love? Search Tesco Mobile or visit us in store. Tesco Mobile. Every little helps.
36-month credit agreement, rolling monthly usage contract. Subject to status, phase policy applies. See tescomobile.com/terms.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at TikTok on Twitter. This is Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters in New York, I'm Doug Krisner. There you have it. Sound of the closing bell for this Friday, November 1st, with records for both the S&P 500 and the NASDAQ comp. Well, that occurred after an unexpectedly strong employment report. Some market players were calling it a blowout relative to expectations. The American economy added 128,000 non-farm jobs last month. Meantime, the U.S. and China have signaled progress in the first phase of a potential trade deal after a call earlier today. Both sides released statements describing the call as constructive. We spoke earlier in the session with Larry Kudlow, the director of the White House National Economic Council.
The chapter on agriculture is virtually completed. That's not only the $40 to $50 billion increase in agriculture purchases, but also market openings, lower non-tariff barriers. Very, very important. The financial services chapter is virtually completed. That'll provide 100% ownership for American banks, security firms, insurance firms operating in China.
Now, if there was a sign of caution today, it came by way of the ISM's manufacturing index, which was in contraction for a third straight month. Bloomberg Intelligence saying recessionary conditions in manufacturing are unlikely to abate in the fourth quarter. Dow Industrial Average higher by 1.1% on the day. The S&P at a record 3,066, picking up 1%. NASDAQ Composite, meantime, better by more than 1.1% to an all-time high 83.86. We had shares in Fitbit jumping 16%. The company has been approached by Alphabet's Google to takeover offer worth $2.1 billion in cash. The deal has the potential to boost Google's hardware business, but it's sure to attract regulatory scrutiny. U.S. 10-year Treasury last quoted in New York at a yield of 1.71%. That's the Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shake it, oh, come on, shake him, not stir.
Just move on toward your destination.
I can make things move without touching them.
Shake it all over.
Bloomberg Business Week, Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
It is time to take a look at some of the movers and shakers for the Friday trade. Carol Masser along with Jason Kelly right here in our Bloomberg Interactive Brokers studio here in New York. S&P 500, definitely a bullish tone today, no doubt about it, really from the get-go. At the opening bell at 9:30 this morning, 371 names in the S&P 500 higher today, 132 lower, 2 unchanged. And thanks to Jason, I've changed my settings on my WI function, and 1.4% higher on the S&P. 1.5% higher on the S&P 500, 1.4% higher on the Dow, and we're looking at about a 1.7% gain on the NASDAQ.
I'm going to take your appreciation as genuine and not in the manner that I originally interpreted it, which was surprised that I knew something that you didn't about the Bloomberg terminal, because I haven't been here for 20 years, but I've been here for 17.
Okay.
Anyway, that's a shout out to our friend Herbie Calvez. His favorite number is 17. Okay. Anyway, I want to talk a little bit more, if we can, and I know we're going to talk about it in a bit with Taylor Riggs, but about Fitbit.
Let's do it.
Only because it's a name that we've talked about a lot. I've got one on my wrist, and we visited a lot with James Park over the years. And this is a company that, let's be honest, it has struggled for the past few years. You look at a chart on the Bloomberg terminal, and it was up in the mid-40s as a stock.
You were so funny. Actually, you brought it up before. You're like, check out this chart. Can you believe that? I forgot that how high it was.
It was a $47 and change stock, and now it's getting taken out for a little bit more than $7. A good deal, to be sure. A good deal for James Park. One of the founders. He's been in it to win it for a long time, so hopefully a nice payday for him. I believe he does have quite a number of shares. It's interesting, though, to look even beyond the response from investors, which was obviously enthusiastic. The stock trading up Fitbit 15% there, as you heard Doug say. But I just saw a tweet from Shira Ovide, who was on the show with us yesterday. Apparently, the House Antitrust Subcommittee Chair David Cicilline from Rhode Island releasing the following statement this afternoon after Google announced its acquisition of Fitbit. Quote, Google's dominance is currently under investigation by Congress, the Justice Department, and 50 U.S. states and territories. By attempting this deal at this moment, Google is signaling that it will continue to flex and expand its power in spite of this immense scrutiny. So lawmakers paying a little bit more attention, and I go back to this idea of the techlash, man. Even on this,
it's going to be one of the big themes next year.
It is going to be a huge, huge theme. So there you go.
All right. And Twitter certainly kind of improved their spot by doing what they did in terms of, I think, banning political ads this week. Hey, what?
Well, I was just going to say the number one gainer is Corvo, which we heard. Is that what you're going to talk about?
Yes. Okay. So you're done. You're done.
Wow.
I believe the time now goes over to speaker number 3.
Speaker number 3, the esteemed lady from New Jersey.
So Corvo, Dave Wilson talked about number one gainer in the S&P 500, up 20%, jumping on a strong forecast. Also a new buyback. They announced a new $1 billion share repurchase program. Fiscal third quarter forecast topping the highest analyst estimates. So a lot going on. And so Corvo just taken off like a rocket today, up 20%. Stock is now up 60% in 2019. Estimated forward-looking PE, not even 18.
Yeah.
Just saying.
Oh, can I speak now?
Yeah, it's your turn.
I can. I got nothing. Actually, it is interesting just on that front.
You have nothing. There's more than 500 names in the S&P 500
That's the first time
alone.
I've ever said that in the history of this show. No, I do think it's interesting to look at the reaction across the tech world, Google and Fitbit notwithstanding. Apple up 2.8% today. I mean, there's obviously some enthusiasm, I think, on trade.
You're reaching. Okay, so I'm going to look at the IMAP function on the Bloomberg. I know. Okay. So the two groups that did not gain in today's session, utilities down about 0.2%, real estate down about 0.3%. Your best performer, that included energy up 2.5% as a whole, industrials up 2.2%, materials up 1.5%. Would you like to do the VIX?
I don't even know what to say to you right now. I would love to do the VIX. Volatility, it was down. It is down a 12 handle. It's amazing. Down 7%, closing at 12.29. This is Bloomberg.
All right, Dave, you're up. Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door. It's Dave. Who? Dave.
Dave Wilson, save us. Save us from each other. What do you have for your stock of the day?
Ruth's Hospitality Group, Jason.
Oh, nice one.
Is this Ruth's Chris?
Absolutely.
Love it.
Ruth's Chris
Butter on that
Steakhouse chain. More than 150 restaurants, including some outside the U.S. Company shares have been publicly traded since 2005. And the ticker, as you might expect, is...
Ruth.
There you go.
There you go.
Nailed it.
I know.
Ruth's went public at $18 a share. Then came a recession and a bear market. And by March 2009... Ruth's was a penny stock.
I remember when it was getting beaten up big time. So it's interesting to see this bounce back that it's seen.
Oh, and not just any kind of bounce back. This stock has been up every year since 2009. And last year it broke a record that had stood since 2006. Now, Ruth's streak of annual gains looked like it might end this year back in August, after the company reported disappointing second quarter results. Now it's back on track thanks to third quarter figures that came out today. Earnings beat analysts' average estimate in the Bloomberg survey by the most in 6 years, and sales exceeded projections as well. And Ruth's results came out ahead, even though the cost of beef, big deal for a steakhouse chain, climbed 19% from a year ago. And the company's shares almost matched the increase in the price of beef in today's trading. Stock was up 18%, and that was the biggest gain since April 2009.
From the end of 2008 to the end of 2018, so the end of last year, that stock was up over 1,600%.
Yeah, and now it's up for this year as well. It's got a gain of about 7%.
Maybe all those people hating on Peter Luger are just going to head over to Ruth's Chris. You don't know.
Well, I wonder if a name like that, you do think about all of the private equity guys, right, who are buying a lot into, I feel like, the hospitality names. You do wonder if that's on their radar.
Could be.
I'm just speculating. I have nothing to go on here.
Dave Wilson,
Not like
thank you
Dave.
so much. We'll see you next week. All right, let's head over to Bob Moon. He's got your world and national headlines. Hey, Bob.
Jason, it can't be done is the wrong approach to health care. So says Senator Elizabeth Warren, who set out on the presidential campaign trail in Iowa today to explain how she'd pay for her Medicare for All proposal. Warren insisted it can be done, all $20 trillion paid for, without raising middle-class taxes by even 1 penny.
People have been so long talking about just what isn't possible. They talk about dreaming small. No, we need to be an America that dreams big, that gets out there and aims high, and then fights for it. Fights for the things that most American people want to see.
The way to pay for it, she says, is having big corporations and the top 1% of income earners, as she puts it, pay a fair share. She's also figuring in more immigrants on the tax rolls, cracking down on tax evasion, and cutting defense spending. It's a sound that's making fire crews weary after more than a week on the battle lines. California is finally getting some relief today. Calmer weather is helping crews get an upper hand on wildfires, with winds subsided in virtually all parts of the Golden State. The weather was wicked on Halloween and into early today from the deep south to the northeast, causing flooding and toppling trees that left at least 2 dead in Tennessee and upstate New York. In the New York City suburb of New Rochelle, a 9-year-old girl was hurt by a falling tree while she was trick-or-treating. Word from the Golden State Warriors today that Stephon Curry has had surgery on his broken left hand and will miss at least 3 months. Doctors in Los Angeles expect him to make a full recovery. Global news 24 hours a day, on air, and at TikTok, on Twitter. I'm Bob Moon.
In the real world, there are no rabbits in hats, crystal balls, or cards that turn into money. Instead, you get business information from top-tier analysts and experts.
What should expectations be for this latest round of negotiations?
That's actually better, isn't it?
They're both trying to say they have the upper hand.
Bloomberg Markets with Paul Sweeney and Lisa Abramowitz. Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Okay, kids, Dad's gonna teach you how to dance. First, spread your feet apart. Then, pump your knee, nod your head, shake your hips, and bite your lip ever so slightly. Now, with one hand in the air, point at people with the other hand. I call that the rock star.
Dance like a dad. It's a great way to make a moment with your kids.
Now, make a face like it just smells something bad.
Visit fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Join us in New York City on November 21st as Bloomberg Pursuits convenes the second annual The Year Ahead Luxury. Speakers include Jennifer Hyman, CEO Rent the Runway, Alessandro Bogliolo, CEO Tiffany & Company, Robert A.M. Stern, renowned architect. Supporting sponsor, Diamond Producers Association. Participating sponsor, St. Regis Hotels and Resorts. For more information, go to BloombergLive.com/TYA Luxury. Invitation code RADIO.
The average time a resume spends on an HR manager's desk is 7 seconds, and most of them are tossed aside. Now imagine if one of those resumes belonged to Yasmin, who was
living in a shelter, juggling 3 jobs. I had to be resilient. That's something that you can't teach.
We rely so much on a resume, yet it could never tell the full story of someone who
had to be independent and take initiative, and that's how I handle every project I get.
Discover new ways to develop great talent at gradsoflife.org. Brought to you by Grads of Life and the
It's another Friday evening, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to enjoy a warm Bayesian welcome.
How are you doing? Enjoying the sunshine?
Fly from London Gatwick to Barbados with British Airways, with flights and 7 nights hotel from just £699 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Hey, you. We didn't make Nature Valley Crunchy bars so you could just sit and scoff them in front of the TV. Not when you could be enjoying them outdoors. Up here! Race it to the top! With 100% whole grain oats and delicious honey. Nature Valley Crunchy. Get out more.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today. Hey, NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand, anytime, anywhere, all season long.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
In the dictionary, a podcast is this: a digital audio file made available on the internet, typically as a series, of which new installments can be received by subscribers automatically. But on TuneIn, a podcast is this.
I'm Rachel Martin with David Green, and this is Up First from NPR News.
And it's defined like this.
Ladies and gentlemen, welcome to the show.
From news, sports, to pop culture, comedy, and beyond. Define your own podcast possibilities on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade. Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
17 past the hour. Let's get you caught up on what was a record-setting session for the U.S. equity market, with the S&P 500 and the NASDAQ comp each at all-time highs. The catalyst, it was a much stronger than forecast employment report for the month of October. It indicated the American economy added 128,000 non-farm jobs last month. Some were calling it a blowout relative to expectations, especially since there was the perception that these numbers would be distorted by the GM auto workers strike last month. Dow Industrial Average gains 1.1% on the day, although we were shy of a record on that front. S&P 500 better by 1% to an all-time high, 3,066. NASDAQ comp finishes at 83.86 with a gain of more than 1.1% on the day. We had a rally in shares of Fitbit up 16%. Alphabet's Google has agreed to buy the smartwatch maker. $2.1 billion in cash. U.S. 10-year Treasury last quoted in New York at a yield of 1.71%. I'm Doug Prisner. That is your Bloomberg Business Flash.
Doug, thanks so much. You're listening to Bloomberg Business Week. Jason Kelly and Carol Masser here on Bloomberg Radio.
Child, things are gonna get easy. This week's issue of Bloomberg Business Week magazine looked into the drivers and disruptors impacting companies, countries, and the global economy. One of the factors, making babies. We're talking about global fertility, more specifically, the global fertility crash. Let's get into this because this is a big issue around the world. Andre Tartar is a data journalist and editor at Bloomberg News. He is in our Bloomberg Interactive Brokers studio in New York. Fertility crash, man, that headline certainly catches your attention. It's all about birth rates falling in countries, and that has big implications in terms of economic growth for those countries.
Absolutely. It's one of those kind of key building blocks of growth. It's consumers, it's our workers, it's our entrepreneurs. And so having a growing population is a very important, ingredient for sure.
And so you went through some specific case studies. How did you choose them?
So we actually looked at data for about 200 countries, and we're trying to find interesting outliers on not just fertility, but also related, issues around the gender gap and so on. We ended up really with a couple really interesting cases. China was almost like a must-do, given that it's at this inflection point, moving from the one-child policy to a two-child policy, actually has one of the lowest fertility rates in the world, coming from a huge high.
And I have to
big
say,
crash.
I remember when that headline crossed, because that has been such a big policy for the country for such a long time. And I just remember when the headline crossed, we were like, oh my God, this is a significant change. But we look at a country like Japan, and we talk about the aging of that country, of that economy, and it taps into another story in the magazine about immigration, right, and allowing immigrants. And I mean, it's all connected, but it's important. What else did you guys
do? And so actually, that's a great point. So actually, many of the countries with the lowest fertility are, in fact, the wealthier nations, which some of them are able to lean on immigration to make up that difference, some more than others, of course. But so a case like that was France, was actually one of our other countries, wealthy country, but actually has maintained a relatively high fertility rate, almost at the replacement rate.
Right.
And that's in part because of their very generous benefits for mothers, for working families.
Kind of parity in income between men and women, right?
Absolutely. And actually, it's one of the countries that actually has a much more balanced model, it feels like, that it's really relying on population growth, also employment rate, and productivity. We also looked at Nigeria. This is one of the countries that's going to have a huge population boom, kind of really, the opposite story. Most of the population growth in the next decades is all going to come from sub-Saharan Africa. So their challenge is kind of the opposite. How do you actually feed, employ this huge population, which is still relatively undereducated and has a relatively low employment rate for women and a huge pay gap. And finally, we looked at Saudi Arabia. This is a country finally beginning to see some liberalization for women, the right to drive, to travel without a male guardian, and work more freely, but really starting at such a low level. So there is potential there. If they can tap basically half of their population, as an economic driver, what could that do for them?
Well, and Saudi Arabia, I mean, is such a fascinating case study in so many ways, politically, economically, socially, culturally. I think here in the West, we have such a hard time sort of getting our arms around all these different elements because it's such an important economy, and we're sort of fascinated, I think, rightly by, I'm going to say it, sort of its backward treatment of women and their real implications that you're looking at here.
Absolutely. And so as also part of this, we actually interviewed a different working woman in each of these four countries, able to tap into our global network of bureaus out there. And we actually interviewed a fascinating media professional, a kind of TV host there, who does speak about the trade-offs she has to make, kind of the cultural pushback of her trying to really be kind of an independent member of the workforce. So it's a clash of so many different forces happening there.
Yeah, exactly, right. And you do wonder where it will ultimately go. Having another conversation with the head of a global company, just talking about this idea that when you don't always necessarily agree with policies in a country, but his take was, you got to be there because that's how you help facilitate change. And the more that they see other societies and cultures coming in and doing it differently, that can help bring about change.
Well, and as you say, Carol, I mean, this comes down to the very basic elements of our daily lives. And you said it well at the beginning. Making babies. So there you go. Andre Tartar, it's a really terrific part of the new economy issue. He's a data journalist and editor for Bloomberg. His story, Global Fertility Crisis, has governments scrambling for an answer. A really good read in this week's issue.
And let's, a little bit of a shameless tease, but let's do it because this weekend we do have, it's all about the new economy issue.
Don't be ashamed of teasing our show.
But it's a really great issue, and I really do feel like we dig into, I know there's the drivers and disruptors index, but I think these are all interesting factors that are out there that are either helping and pushing economies to be leaders going forward or holding them back.
Right.
And there's a great ranking of, list of the countries, and you might be surprised by some of those that are up at the top.
Well, and
or maybe not.
And it's important to think about all these elements that maybe we don't think about as much. And this story about fertility is a really important element of that.
Making babies.
Making babies. All right, coming up, we're going to get into the business of exercise.
Yes.
from there. You're listening to Bloomberg Business Week.
This is a Bloomberg Market Minute. A stronger-than-expected employment report from Washington fired up a Friday rally on Wall Street that lifted the key indexes by 1%. The Dow Jones Industrial surged 301 points. The Nasdaq closed 94 points higher. The S&P 500 gained 29. The Nasdaq and S&P settled at record highs. Job growth outpaced expectations in October. The Labor Department reports 128,000 workers were added to payrolls, and that was despite the strike that idled more than 40,000 General Motors employees. The nation's jobless rate ticked up 0.1 of a percentage point to 3.6%. Apple is appealing to the White House for exclusions to tariffs on Chinese-made components for the iPhone, Apple Watch, and iMac. And Google is making an acquisition. The internet search leader is buying Fitbit for $2.1 billion to give its hardware business a boost. Jeff Bellinger, Bloomberg Radio.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. Ah, that's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
It's another Friday evening. Yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books! The celebration is on! The Washington Nationals are the world champions!
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
When Eleanor Longden got to college, she started to hear voices.
And they don't sound like me, so some of them are male, some of them sound quite young, some of them have different accents.
And they would drive her crazy until she started talking back to them.
The voices have ultimately become partners in that healing process.
I'm Guy Raz. Stories of Overcoming, that's next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the Van Fleet for 3.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the right.
Search NBA Today to start listening.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I can't get enough of this Fitbit story, as I think you could probably tell because I bring it up about once an hour.
Yeah, but I'm not keeping that close track of it. No, anyway, we're going to talk about this. Google's Fitbit acquisition. No, I totally listened to you. Anyway, we're going to talk about Google's Fitbit acquisition. We're going to talk with someone that, one of our favorites, Taylor Riggs.
Totally one of our favorites. We miss her. She's on the West Coast.
I know, and she's been all over this story, so we'll get to that in just a moment. In the meantime, back to your top business stories. A look at some of the news after the closing bell. Here is Doug Grisner.
Don't you think that there's going to be a little bit of regulatory scrutiny here? Questions about what Google intends to do with the data, right?
Yeah,
well, and we've already heard from Capitol Hill on that.
There you go. The timing, very curious, right? You're in the middle of an antitrust investigation and you decide to do a deal like this. Bit of a head scratcher. Nonetheless, Fitbit shares were up 16% today. Overall, a lot of positivity in markets. We had that employment report for the month of October. Some in the market were calling it a blowout relative to expectations. We knew there was going to be the negative impact of the GM workers' strike. Nonetheless, last month, the American economy added 128,000 non-farm jobs. If I can, for a moment, pour a little bit of cold water on that, you look at the ISM Manufacturing Index. It is now in contraction for a third straight month. Bloomberg Intelligence was saying earlier in the day, recessionary conditions in manufacturing are unlikely to abate in the fourth quarter. 10-year Treasury today only picked up 2 basis points in yield. We moved up to 171. Given the move in equities to record levels for the S&P and the NASDAQ, you would have thought that the bond market would have sold off a bit more and that we would have seen much higher yields on the 10-year. Not the case today. Dow Industrial Average picks up 1.1%. We were shy of a record there. S&P at a record 3,066 with a gain of 1%. NASDAQ comp, meantime, better by more than 1.1% to an all-time high 83.86. I'm Doug Krisner. That's the Bloomberg Business Flash.
Yes, indeed. Doug, thank you so much. You're listening to Bloomberg Business Week. Carol Massler, Jason Kelly, right here on Bloomberg Radio.
All right, so we've really got the perfect person to talk to us about the Fitbit story, which I have been admittedly a little bit obsessed with. Marathoner, tech personality of late. We had her on the East Coast. Now she's on the West Coast, at least for a bit. Taylor Riggs, anchor of Bloomberg Technology. She's in our 960 studio in San Francisco. Hey, Tay.
You guys have so many nice things to say about me.
I know. Well, they're all true.
I hope.
How are you doing?
You know, things are good. It's so interesting when we're talking about this deal, though. I had asked the CFO of Alphabet, Ruth Porat, on Monday, and she said that she, quote, would not speculate on any rumors. So this is a rumor no more, and Google's making it official.
Right. And so talk to us about how this is being received out in Silicon Valley, because, Alphabet has been acquisitive over the years, but this is a different sort of purchase, to be sure. What are they looking to get with Fitbit?
That's a very good question, because this is a very competitive environment. We know that Apple and Samsung are really big leaders in wearables. And when we hear from Apple on their earnings call, they talk about the future growth for the company, and every analyst on the street agrees. The watch and incorporating healthcare data into your global smartwatch is really the future growth for all of these companies. Google is not a player in this market. As you know, 84% of their revenue is dominated by advertising. They have their Pixel phones, but besides that, their hardware had been lacking a little bit. And so this is a way to really start to incorporate their hardware. And then, as you know, with big tech, it's incorporating their hardware, their software, the data, all together to get you more tied into the ecosystem.
Apple, though, they are the dominant player, right? And we know the watch market, the smartwatch market is growing. But, you know, I think they did 5.7 million in the second quarter of 2019, up 50% year over year. So you do wonder if Google can kind of carve out a spot. You know, Taylor, Jason and I were talking to that, like, what do they do to the device? What do they change? They obviously are a data-centric company, but you do wonder, what do they do to compete and kind of take a bigger share?
Well, and Shira Ovide put out a column this morning. She's from Bloomberg Opinion, and she said this deal actually highlights how much on the defensive Google is by the fact that they think that Fitbit knows more about technology than Google does. Like, they had to go externally to acquire this watch. We also know that they've bought the IP of Fossil, which is another watchmaker. So they really are having to make acquisitions. And when you take a look at Fitbit in general, I think there's a lot of confusion. Fitbit's sales have been declining for 3 straight years. They only have about 12% of the market. Half of their sales are still based on trackers. And as you know, trackers don't cut it anymore. We need more. We need to incorporate the healthcare data. You can't just have a GPS with steps on it anymore on your watch. And so I think there was some confusion of, how are you going to defend this by buying a company for $2.1 billion or $7.35 a share? Shares right now are trading below that. And their market share and their sales have been declining. I guess Google thinks this is the way that they're going to get in. Really hard to know how they would compete with a company like Apple and the Apple Watch.
But think about it. Can I just say $2 billion, right, for Google? What are they? They're like, you were talking about maybe, what, $132 billion in revenues?
Yeah.
You know, so it's not, right?
It's an easy bet.
It's an easy bet. And they get a market. They get the third player, right? It's Apple, Samsung, and then Fitbit.
Maybe a little less easy. And another place they're going to have to defend, Taylor, is on Capitol Hill. We've already had a lawmaker come out and say, are you kidding me? You're under antitrust investigation already, and you're expanding into yet another area. How much of that generally is a worry, this sort of increased scrutiny of tech? We've seen Mark Zuckerberg up on Capitol Hill. How much is that on the minds of folks out where you are?
You know, it was really funny. My colleague over here, Mark Gurman, who had been talking with Google, tweeted out this morning, "Good morning to everyone except for Google executives who told me they would not be making an acquisition in this environment." And so this really does go against, you know, sort of everything that we hear. But I have to be honest, tech company here, it's business as usual.
Yeah.
Facebook keeps launching new products. Google keeps making acquisitions. Apple is unfazed. We hear about big tech in New York and D.C. Frankly, here, it's business as usual. And I am more surprised, I think, than anyone that they are just plugging ahead. It is full steam ahead. Of course, they will say they're constantly working with regulators. But no, they're going to go ahead. It's business as usual.
Yeah, they're probably spending more money in Washington and hiring up there. But as you say, it doesn't seem like it's slowing them down. Taylor Riggs, anchor of Bloomberg Tech. Catch that show coming up at 5 p.m. Wall Street time. I'm sure she's going to have more on Google deal making and all the rest of what is most important in the world of technology.
I do wonder what Google's going to do with this and how successful they'll be. But I mean, you think about it, it's a growing revenue stream, certainly for Apple. And, you know, we're now talking about a few $1 billion. So
and as you
that's
say,
when you start to notice.
Kind of an easy pickup, you know? If it doesn't work, a couple $1 billion. And you got some good intellectual property to play with, so eager to see what happens there. All right, let's get to Bob Mood now. He's got some world national headlines. Hey, Bob.
Jason, not one penny in higher middle-class taxes will be needed, says Senator Elizabeth Warren, answering critics who've attacked her Medicare for All plan as being far too costly and sure to raise taxes on the middle class.
I have a plan that shows how we can have Medicare for all without raising taxes 1 cent on middle-class families.
She'd pay for the $20 trillion plan, she says, by having big corporations and the top 1% of income earners, as she puts it, pay a fair share. She also figures in putting newly legalized immigrants on the tax rolls and reducing defense spending. In an exclusive Bloomberg interview today, House Speaker Nancy Pelosi suggested she prefers building on so-called Obamacare.
I'm not a big fan of Medicare for all. I mean, I welcome the debate. I think that we should have health care for all. I think that the Affordable Care Benefit is better than the Medicare benefit.
Joe Biden's campaign labels Warren's funding explanation mathematical gymnastics. Job creation, 128,000 reported by the Labor Department, was resilient in October and prior months better than thought. Bloomberg's Irv Chapman reports.
The report was welcomed at the White House by economic advisor Larry Kudlow.
325,000 increase in the labor force. You got a lot of people coming out of the woodwork, probably attracted by good wages. Virtually a blowout number, I think, quite unexpected.
The slowdown in manufacturing, Kudlow said in a Bloomberg interview, can be attributed to the recession in Europe that dented U.S. exports. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Bob Moon.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
It's another Friday evening, yet another cloudy day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
TuneIn would like to congratulate the 2019 World Series champion Washington Nationals.
Swing and a miss! And a World Series Game 7 winning Curly W is in the books. The celebration is on. The Washington Nationals are the world champions.
Before the game, I said, hey, I want you guys to just treat this as just another game. One more 1-0, and they did that tonight.
To catch all the exciting sports that TuneIn has, make sure to search sports today.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit TuneIn.com/premium to upgrade.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Get social with TuneIn. Follow us on Facebook, Twitter, and Instagram for the latest and greatest audio on the app. Explore exclusive content. Learn about hot new podcasts and get alerted when the big game, well, it's about to begin. Add TuneIn to your feed and be in the know when it matters most.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard. Somebody stays on his feet.
It is the annual Florida-Georgia College Football Showdown. This year, there are more than just bragging rights on the line. With both teams ranked in the top 10, will it be the Gators or Bulldogs leaving Jacksonville on top of the SEC East and in the driver's seat for the conference championship? Find out today with kickoff starting at 3:30 p.m. Eastern. Search college football to listen.
Hey, can't watch the big NBA game because your life's just too busy? I've got some news for you. TuneIn Premium is the answer to all your problems. Hear every home and away game live or on demand everywhere you go. Just search NBA to listen.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
We had a record-setting session for the U.S. equity market today after a much stronger than forecast employment report. Last month, the American economy added 128,000 non-farm jobs. Some in the market were calling it a blowout relative to expectations, particularly when you consider the likely drag of the GM strike last month. At the end of the day, the S&P was up about 1% to an all-time high, 3,066. NASDAQ comp climbed 1.1% to a record 83.86. The Dow, although it was up 1.1%, was shy of a record. We also had positive signs when it came to U.S.-China trade, both sides on a call today and describing that conversation as constructive. China said it achieved consensus in principle, and from the U.S. side, the notion that discussions will continue at the deputy level. The original intent, at least before the APEC summit was canceled in Chile, the original intent was that Presidents Trump and Xi would sign an agreement, phase one agreement, at the end of this month. We had a much stronger than expected employment report, yes, but on the negative side, the report on manufacturing, this is the sentiment survey from ISM, holding below 50. That's contraction for a third straight month. 10-year Treasury last quoted in New York at a yield of 1.71%. And Fitbit jumped 16% after the company agreed to be acquired by Google for $2.1 billion in cash. I'm Doug Krisner. That is your Bloomberg Business Flash.
Doug, thanks a lot. You're listening to Bloomberg Business Week right here on Bloomberg Radio.
Make 'em laugh, make 'em laugh.
I got to tell you, after a week like this, this is how Jason and I like to wrap up our broadcast. The 16th annual New York